call the roll, please, of the committee members?
Yes, Chair Cates,
Here.
Trustee Riley,
Here.
Trustee Flood,
Here.
Trustee Kane,
Here.
McMahon, Trustee McMahon,
Present.
Trustee Alexander.
Yes.
See if I missed anybody. I believe that's all the trustees.
Okay, I thought I was hearing an echo before. Was anybody hearing that? But
I did.
maybe it's gone now. It seemed to be gone. Good. Okay, well, welcome everybody. Obviously have a busy day here today. I'd like to welcome everybody to this meeting of FFT for budget review. It's an important meeting in the fiduciary role that we play as a board in ensuring the overall financial soundness of the system. I'd like to start by just acknowledging the tremendous amount of work that goes back many, many months, which brings us to this point. It started at each individual campus with the presidents, with their CBOs, and then involving the whole campus in development of their budgets. In what we see here today, Chair Riley and I had the chance to meet with each of the campus teams, along with the chancellor and senior system leadership over a couple of days, 2 weeks back. And the campuses took feedback that they heard at that session and may have made some changes around the edges to what we see today. Mostly, though, and I'd like to thank Ryan Lowe and his team for overseeing and managing this budget process over these many months. I've gotten to see more about how the sausage gets made, and my appreciation for Ryan and his team continues to grow. To say the obvious, we're very lucky to have him. Particularly like to give a shout out for the introductory slides, which really give us in one place a good 10,000-foot view of where we are as a system and the significant challenges we face and the key numbers to keep in mind. So we're going to hear from Ryan in just a minute, but I'd like to turn to Chancellor Malloy to open up the meeting. If you would, Chancellor. Good morning, sir.
Good morning, Chair. It's great to be with you, and good morning to the committee. I appreciate the full day that you've committed to this endeavor, and I want to take just a few minutes to frame what you're about to see before I turn it over to Vice Chancellor Lowe, who has done with all of the folks that he works with such an outstanding job. This is an initial review of the 2027 proposed operating budget, but what I hope the committee will take away from this session is that we are managing through a genuinely complex operating environment, and we are doing it with discipline, transparency, and a commitment to the long-term health of this system. The pressures are real. Compensation costs are rising. The traditional student pipeline in Maine continues to tighten, and federal uncertainty adds a layer of risk we can't fully control. But the response from our institutions has been equally real. Every campus has submitted a balanced budget. The diversification strategies we've been pushing, online, your pace, graduate programs, early college, is producing results, and the continued investment from the legislature and the governor gives us a foundation to build on. I also want to acknowledge that the work you'll see today reflects something important about how our system operates. These budgets were not built in Orono, except Orono's budget, I should say that. And these are built by the universities themselves, and much work goes into these efforts. We are particularly happy that all of the budgets that we will be seeing today are in fact balanced. And with that, I'd like to turn it over to Ryan, who will take us through the day.
Excellent. Thank you, Chancellor. Thank you.
Chair, could I just jump in real quick with one thing before Ryan starts?
Sure.
Sorry.
Yes, sir. Go ahead.
I just wanted to note that it is Trish Riley's birthday today before we start.
Oh.
And so we should just take a minute before we all dive in to appreciate that we are honoring her birthday by talking about the University of Maine system budgets. And I know that there's no place she would rather be than right here with all of us and all of you. So just apologies for the interruption, Ryan. I love your presentations, but I knew you'd want to know that too.
Well, no greater gift than this full day of
No greater gift than the whole day.
Absolutely.
Right.
Thank
Well,
you.
You're not
that's
singing,
great.
Emily? You're not singing happy birthday?
I
What's more
can,
that?
I
Yeah.
can. I feel like that might be a little much before we kick off the budget,
Right.
but I'm happy to call Trish later and serenade her. Yes.
Well, Trish, happy birthday. 50 is a big event, so congratulations.
Yes, yes, it certainly is.
Yeah, great. Happy birthday.
Thank you.
Okay. Emily, thanks for the interruption.
Okay,
Brian.
so thank you. Again, I'll echo the chancellor's comments about thanking you all for committing to a full day. I joked yesterday with the presidents, but I think I really meant it. You know, this is my favorite day of the year when you're in budget land, is the time when when you've done all of this work and you drop it in front of folks and you get reactions and then you start a kind of a process of improvement through these hearings and through the conversations as we roll forward. So I want to thank you for that. I'm going to start today by briefly presenting a lot of the system's kind of rolled up numbers, a collection of the individual campuses plus the system office. I'm not going to go into a ton of detail on every one of those items because a lot of them you're going to hear from the campuses throughout the day. At your budget work session that you have on April 15th, I'll be doing a much deeper dive into the system office budget, into the changes that we're making around shared services, and some of these kind of cross-campus topics that you're going to see today and you're going to want to explore a little further. The best example I can give, because we talked about it a lot last year, is around energy costs. So just given the mix of fuels and locations of our campuses, it's not unusual. In fact, you're going to see examples of it today where we'll have campuses that have declining costs. We'll have campuses that are budget neutral, and we'll have others that are potentially looking at double-digit increases. And so at your April work session, we'll present that system-wide view. We'll talk about the reasons why the rates are different and why they may fluctuate between campuses. And then we'll open it up for questions and several more topics like that. So as you identify some of those today where you want to know a little bit more, let me know, let the chair know. We'll add them to our April work session agenda.
Brian, can I interrupt you just one second? I'm sorry. Two other quick things. One, I forgot to say hello to Clyde Mitchell, who's with us, who's our faculty rep for on our committee. Clyde, it's great to see you. And secondly, I think that Ryan would agree and the presidents would agree. This is a discussion, not solely a presentation. So at any point along the way, when trustees have questions as we go through any of this, just raise your hand and I'll recognize you. And I don't think anybody's going to get offended if they get interrupted as we go through these presentations. So feel free to jump in. Thanks, Ryan.
Excellent. And to your point, this is your opportunity to kind of see that full picture, to ask any questions and kind of begin your deliberations. What happens after today is we'll have a budget work session on April 15th. So this is the committee and the chair has allowed other members that opportunity as well to come to that meeting and do a deep dive in any topics that you want. We'll have a handful based on conversations we've already had and how today goes about topics that we want to deep dive. But again, let us know. The committee vote will come up a couple of weeks after that, so we'll gather again on the 29th. So again, thank you for 3 meetings in just slightly over a month. And then ideally the board approval would come at your May 17 and 18 meeting. Highlights of what you're going to see today, as Chancellor noted again, each of the campuses has submitted a balanced budget. Doesn't mean that we don't have challenges in there, but that's certainly a good first step. I'll say overall enrollment has certainly stabilized. You've heard me joke in the past about some of these enrollment slides, previously looking like ski slopes. They're much better looking now, certainly trending in a much better direction. And we're also seeing progress on structural reforms, more closely aligning our revenues and expenses. That's been a significant issue at several of our campuses, and we're starting to see that gap close. So I'm gonna start going into the system slides, but again, I'm gonna do the system slides. We're gonna start with Fort Kent. We're gonna work our way through a full day, ending with Presque Isle. Generally, for those campuses that are out there listening and queuing up, I just ask most of them to wait on YouTube until just before it's time to join, or we're gonna end up with 1,000 people in here and all kinds of distractions and stuff. So with that, I'm excited to jump into our presentation.
One more thing, Ryan, I'm
Yeah.
sorry. Off my screen was William Otto, our other faculty rep. It's nice to see you as well. Sorry I didn't see you. Thank you.
Okay. So again, I want to thank the chair. I want to thank the committee members. Before we get into the numbers, I do want to just echo the chair's comment and really just acknowledge the extraordinary work that went into getting us to this point here. We talk about this being the initial review, but that's a big undersell. We know the budget you're seeing today has been a product of about at least 6 months worth of work on all of our campuses. So I want to thank each of the presidents that we have here for leading their process on their campuses with real engagement, real transparency. I want to certainly thank the chief business officers who built a lot of these budgets line by line. And then want to thank the broader campus teams, the budget committees, the provosts, the deans, the department chairs, the faculty, staff, students who participated in the budget forums. Again, I'm a strong believer that, we start off with a document and we go through this process, both the campus process and the trustee process, and almost always consistently end with a better product at the end of the day. So countless hours, countless conversations, lots of budget forums, open meetings, difficult trade-offs, and just want to acknowledge the great work that the campuses did. So this shows the system's budget timeline. I've talked about it before. It's really a full planning cycle, almost a full year from end to end. We start planning for the next fiscal year almost immediately after our current one ends. We spend the fall working with each of the chief business officers across our campuses on those shared assumptions that are going to flow through every budget in the system. And then you see the campus budget development window there, where the campuses spend 4 months or more in that campus budget development phase, building their budgets literally from the ground up with their teams, their budget committees, and campus communities. The budgets are due into the system office in late February this year. And then, as the chair suggested, we begin the process of working with the trustees early in March. First, that initial meeting with the chair and the FFT chair to get some feedback. This committee meeting today, a couple of committee meetings in April, and then the board vote in May. So the FY27 budget environment certainly was challenging, certainly had its cost pressures. What you're going to see throughout the budget is personnel and benefit costs are rising in the budget. And in general, across our organization, expenses are continuing to outstrip revenue growth, although we're starting to close that gap. That does, however, mean that most of our campuses start each budget cycle in a reduction mode, which is no fun. And when you start thinking about investments that you need to make, then it just drives that gap just a little bit bigger. That's really the reality when you have just a couple of revenue sources. State appropriation and tuition largely are funding all of our operations, or certainly the overwhelming majority of our operations on the E&G side. The enrollment mix across our campuses is shifting. We're going to talk about that certainly in more detail in a few slides, and then much more detail in April as well. We continue to experience auxiliary challenges, especially on our smaller campuses. We've got the federal uncertainty that this committee has talked about at all of our meetings. And then, wanted to note that two sides of the coin here. Campus reserves overall are declining. That's certainly not a positive trend. But I will say for those campuses where reserves are small, or even in a couple of cases where our reserves are negative, the campuses have aggressive plans to build those back. We talked as part of the MYFA about some of those strategies. When we talk about the core financial ratios, we talked about some of those kind of strategies as well to eventually build back reserves. On the strength side, certainly we've talked about it a lot. You're going to see it dominated in a lot of the slides today. But certainly your pace is dominating a lot of that credit hour growth across the system. As I noted, we have several campuses that are starting to close some of those historical structural gaps. Maybe not all the way there yet, but what we really want to see is we want to see a plan. Whether that plan is 1 year or 3 years, it's more important that you have a plan than you make it up as you go along. And I think we're starting to see a lot of progress there. And then really some individual success at Maine Law. And we'll also talk about, and you're going to hear several references to it today as the campuses go through their individual budget lines. But we've made some reforms, some changes to how we budget for shared services. And so that is one of our topics for a super deep dive at your April budget session. So I want to talk a little bit about some of the budget assumptions.
I had a question about
Yeah,
the prior slide.
Yeah, please.
Could you go back?
Yep.
On your pace, where are the revenues from the growth in those programs allocated?
You'll see today they're part of the individual campus budget lines, and so when Ray and his team present their budget, you're going to see the credit hour pieces in there. You'll also see them in other budget proposals at Farmington and Fort Kent as well.
Okay.
So again, I want to briefly talk about the budget assumptions. Here is where we're kind of, I'll start on the left side of this. These are the system-wide assumptions that we use across all of our campuses, so where we're looking for consistency. I'll start at in-state tuition. Again, generally a coordinated approach to how we approach in-state. That has been our policy for the last 10 years or so. And what we've recommended, as you've seen if you've looked ahead in the materials, is a 4% increase in in-state tuition, plus or minus a point or two. Out-of-state tuition is something that we've talked about over the years, and just given the vastly different missions of our campuses and how we handle out-of-state students, that has been one where we've consistently allowed the campuses to make a recommendation for out-of-state tuition increases based on their individual circumstances. Though I think you're going to find in most cases it's generally still in that 4% range. Compensation and benefits are, as you would imagine, are consistent across all of the campuses. They assume either a 4% increase in compensation, or they assume the bargaining agreement that is in place and covers, this course of the fiscal year. So if we've got something in place, then they've obviously built that out. If we don't, they've generally built in 4% assumptions. Now, again, we give those top line assumptions to the campuses. They'll go in and make those individual changes based on the circumstances that are going on their campuses. State appropriation, we're incredibly grateful for the increase in state appropriation. We're going to show a chart in just a little bit that reflects some of that increase, especially over the last 6-7 years, where the increase has ramped up. quite a bit. So what you're going to see in the budgets today is a couple of things that impact appropriation. Certainly the biggest one is going to be the governor's biennial budget, which includes a 4% increase in there, about $9.7 million to the base. That is distributed to the campuses as a percentage of their overall appropriation. So we are having conversations with the chief business officers about a potential model, a change to the model going forward. But what this budget reflects is I'm not going to say the status quo because it's moving away from where we were a couple of years ago when we had the peer allocation formula. But for at least this year and this FY27 budget, we're proposing, where the appropriation would be equivalent to their share of the whole. The other piece that's in the state appropriation line, and again, we're going to deep dive this at your April meeting, is there's some money that flows around because of the way that we changed shared services and the way we budget for shared services. And so we have typically budgeted a lot of those at the system. So a campus finance position might be budgeted at the system, and then we used appropriation off the top to cover those or chargebacks. We're pushing those positions, those campus shared services positions back to the campuses, but we're moving the appropriation with it. And so there's a couple of ways that appropriation is making its way back to the campuses, and I'll go through that in detail as we roll forward. We were fortunate to, thanks to the great work of Miriam and her team and our benefits team and the folks in HR, we are able to hold our benefit rate flat for this budget at 48.6%. That is going to require a lot of management on our part. This is something that if you'll go back to our MYFA conversations, this is something that we know we need to get our arms around. In the short term, we can keep it flat, but we know as we get out into 28, 29, and 30, this rate pops back up and starts trending closer to 54, 55%. And so this is something that we're going to need to tackle as we roll forward. CPI and capital expenditures, again, we just give general guidance to the campuses on those. For capital expenditures, what we like to see is, what did you budget last year? And we'd like to see you budget 5% more. That has been our strategy for the last 6 or 7 years as a way of getting campuses to invest more, but not giving them targets that were so unrealistic that they just couldn't ever get there. That's really where we went in the early 2010, 11, 12 range. We set these really high targets for the campuses to achieve as far as the percentage of their budgets that was funded depreciation and so on. And the targets were just so far away that we just didn't make any progress. And so we had a conversation in around 2015 or so where we said, let's tackle this incrementally, see if we can build up progress more realistic. And that's what this piece reflects. I'm going to flip over to the campus specific pieces. As you know, we do allow the individual campuses to set enrollment, but we have tweaked that over the years. It used to just be the campuses could just individually select their own enrollment plans, and what that led to was a pretty consistent year after year overestimation of enrollment. You're at a campus, you're investing in enrollment management. Who wants to come in and say, here's my plan for a 2% decline? And so we consistently built up budgets that had increases like this, despite history telling us that it should be the other way. And so now we do, want to thank the CIO and former Vice Chancellor Placido, who helped us in budget land kind of build those enrollment tools, and now Jeff and the great team he leads at IR do those projections for us. Then we give those to the campuses, and we allow the campuses to make adjustments based on individual circumstances. So maybe there's a new graduate program coming online that IR didn't have information about when it made its projections, and so we're going to bake that in there, or some other degree program. But we allow them autonomy with those enrollment assumptions within that framework that IR provides us, and it's produced a much better projection process as we roll forward. I mentioned out of state financial aid. Again, we largely allow the campuses to determine how they manage that. Different students, different profiles across the system. We do produce a discount report that Jeff Schott produced, I think back in November. And then the expense assumptions around auxiliary also tend to be determined on a campus by campus, case by case basis. For budget overview and kind of oh yeah, Barbara.
Could you go back to the other slide there?
Yes.
This is very helpful, and I very much appreciate the identification of what I would categorize as risk analysis with regard to these budgets. I join in congratulating the quality of the presentations that we're looking at here or that are to come. But from the fiduciary board point of view, what I would hope to hear from the campuses, from the universities, is an acknowledgement of the risks of being wrong about these assumptions, both system-wide and campus-wide. We're in an era of great uncertainty with regard to our economy, certain international events that impact some of the expenses, our enrollment, our ability to attract international students, and how the campuses have acknowledged those risks and what kinds, not specifically, but having the public understand, having our stakeholders understand that some of this is going to be pretty dicey, and that there might be some very tough decisions that need to be made with respect to programs and maintenance and innovation as a result of some of these assumptions bearing these risks of not being as positive or as least conservative as you've identified. So that's the kind of discussion I'm looking forward to with the individual presentations. And thank you for this list, because I agree with the risk analysis in effect that you've laid out for us. Thank you.
Yeah. Yeah, so a great question, great observation, completely agree. I think you will hear some of that today, but certainly happy to put a pin in that conversation as well to dig deeper when we get into April. One of the things I'm really kind of proud of the work that we've done is around that way that we project those credit hours, because that helped about 80% of what you're talking about. We used to constantly live in that state where here's the budget, but don't get too comfortable with it because we're going to change it again pretty soon because they're not realistic assumptions. And we've shifted over to this process that we have. One of the other things that we've done, and we did this with I think Chair Riley when she was FFT chair, is we built in a process where we could essentially a supplemental budget process in September and October, so that when we got census, we were able to immediately go in and pivot if we needed to make a budget change, and we weren't chasing incorrect numbers for 15 or 16 months. We're fortunate that for 2 consecutive years, we've done a good enough job at projecting those credit hours that we haven't had to make mid-year projections. But we do have that built into the process if we get to that point and if we have to do that. But again, really great question. Budget overview, again, just going to talk about a couple of the things that are impacting the budget. Again, enrollment, as I've talked about a couple of times now, I think we feel like is really based on some realistic trends. You'll see FY27 budgeted credit hours are down about 1.5% compared to FY26 actuals. But the big giant disclaimer is that does not include YourPace subscriptions, which would obviously change that number substantially. Again, I've already covered the credit hour picture along with the 4% tuition increase. again, take every chance I get to thank the governor and the legislature for the kind of the bipartisan support that we've had over the last several years in increasing that our base budget. That's not an automatic thing that happens. I talked to a lot of colleagues in higher ed who are going the other way, and so while we always want more, we're certainly grateful for the resources that they've provided us. And then again, as we've noted a couple of times, the campuses overall are balanced. We are using reserves at the University of Maine as part of a strategic initiative to get back to balance, and the president and Jenny and others will talk about that later. So you'll recognize this slide. This is kind of the way that I present both the budget forecast and the individual budgets. It really tells you what's going on across the funds. I'm just going to quickly go through this again because you're going to see a lot of these details all day, just to show you really how to read it. You can see at the University of Maine, they're budgeting about a $5.5 million hole in E&G, budgeting a slight surplus on the auxiliary side. That would get you to about a $4 million shortfall, which is then closed with a one-time transfer from reserves to get you into this modest surplus situation. So again, I won't roll through all these. You're going to hear about them today. But what you see on here is balanced budgets across the rest of these, across all of these campuses. You'll see some instances where either E&G or auxiliary is out of balance, and then it's balanced by a surplus in the other fund. We go both ways here. You can see UMFK budgeting E&G with a gap on auxiliary. USM does exactly the opposite. And then I'll note down here, University Services is also budgeting what looks like a deficit. It's because we're carrying over reserves from a previous year around things like early college and things like that. And so we are adult degree completion. And so we budget a deficit, and then we'll use specific reserves to close those out. Attrition is a big piece of this budget. You're going to hear it pop up in several places, so we thought it made sense to pause and basically just spend a little bit of time talking about this. So attrition is really just the natural turnover that's going to occur in any large organization. Several of you will recall we had this in state government as well. This is retirements, resignations, employees who leave for other opportunities, the lag time between when someone leaves and when someone is hired. So again, it's not layoffs, it's not position eliminations. It's just recognizing the dollar savings that occur in between when we fill positions. Historically, those are dollars that would just roll to their bottom line, and then we'd have a conversation at the end of the year about what to do with them, or they would spend those during the year on different initiatives. What attrition does is it allows us to go in, it allows us to look historically, how much are we typically lapsing, and then essentially capture those savings on the front end to mitigate other reductions that would be necessary if you weren't doing this. In this case, you can see there's about 11.3 million in attrition savings across the system. About half of that, which would make sense, is at the University of Maine. And then it rolls down institutions after that. You can see USM at about 3 million, UMA at 2, and then GUS is our shared services piece. And so we obviously build in some attrition for ourselves. And then Farmington and Fort Kent, we are not budgeting for attrition at Presque Isle or at Maine Law.
Which is the largest country? Which is the largest country in the world by area?
Okay. So let's go to talk a little bit about E&G state appropriation. Again, you can see the numbers here. Really, a couple of thank yous here. Huge thanks to Sam Warren, who is there every day doing great work. Informing legislators about our needs and what we would do with additional resources. And then a big thanks again to to the governor, both the current governor and Governor LePage, who gave us a nice increase on his way out the door, and then the consistent bipartisan support that we have had over the full decade plus that we show here, continuing right up to this session. Sam is getting bipartisan votes on strong votes out of the Education Committee that we're not seeing in other places, and so always grateful for that kind of support. Trustee Alexander.
On this, going back to the graph you just had, while the total dollars have significantly increased for sure, the question is, what do those dollars buy us in some base year kind of calculation? I don't think we're getting a value of 48% increase because the cost to use that money has consistently increased over time as well. Wouldn't you agree with that?
Yeah, you're 100% correct. This is the first year I don't think that we've had the slide that you're talking about, which is we also typically follow this slide with one that has appropriation adjusted for inflation, which then presents the same exact story that you're talking about. So,
Yeah.
So I'll make a mental note to queue that one up for the April budget session, and I'll present that as well, and can show you that exact point.
Ryan, as you're going on, and I maybe you can see Barbara in her hand up, but with the slides up, there are probably people you can't see. So if there are people who have questions, just go ahead and jump in because I'm not going to see them and Ryan won't. Thanks.
Yeah, absolutely. So I got about 10 minutes to keep myself on time, and I'm going, I think, at about just the right pace. I won't need to go over all the last few slides in a ton of detail, but I will spend a little bit of time here because I'm always proud of talking about where we are with the Budget Stabilization Fund. So again, in April, Miriam and I are working on a kind of a full summary of reserves, and we'll show you the different buckets. The Budget Stabilization Fund is just a little bit different. Again, created back in the early 2000s to really allow us to address to these kind of adverse market conditions that pop up either at the campus level or the system level. And so, we've used this when back in the, early 2000s, we were subject to curtailment, and the system needed to respond to that. It helped to have a budget stabilization fund that we could go to. We've had the budget stabilization fund as high as 21 million back in, say, I think it was 2021. It was down to 4.5 million just a couple of years ago. And so we've been fortunate that as part of both the last two kind of fiscal year-end plans, in addition to making some investments across the system, the chancellor has also recommended a couple of big infusions into the Budget Stabilization Fund that gets us back up to that $17 million number. We'll keep our fingers crossed that we could do another infusion at the end of this fiscal year.
Ryan, could you talk about that $17 million number? It has grown. In a perfect world, that would be a bigger number to guard against some significant events.
Yeah, and so we've had lots of conversation. You're probably familiar with the state statute, talks about 18% roughly of revenues. We've got an APL that sets targets for campuses. We've also used that same 18% number. It's a little bit different for the system because, it's 18% of what? 18% of the system office budget, 18% of the whole university budget, which would obviously be 18% of the full system-wide budget. Now you're getting up to, $100 million number. That's probably not a realistic number. So I think, if I think it's somewhere in that probably $50 million number, just because I saw how fast 21 million disappears. You have one bad market year. I think we lost 14 million in the market, and then all of a sudden, most of it was all gone. So it definitely needs to be higher than where we've been. I think that mark is probably 50 plus. But maybe when we get to 50, then we reset the target. Enrollment, again, you're going to hear about enrollment all day today, so I'm not going to spend a lot of time on this. What I will say is that these slides, these charts that I show you right here, they don't really tell the full story of everything that's going on, and you should view them with some caution. And I say that because the mix of credit hours, both in how the students take them and how we record them on our end, is changing so fast that it's impacting like our historical view of everything. And so we can see that in-state credit hours are starting to tighten a little bit, but certainly trending in a positive direction. But like if you look at online is obviously increasing substantially. The chart that's missing from this would be what's going on with on-campus credit hours, which are probably going down by kind of the same equivalent. And so one of the things that we are doing for April that we're working with all the campuses on, almost literally right now, is giving you a better feel for what the face of a credit hour looks like. How much of it is on campus versus how much of it is online, how much is in-state versus out-of-state. Again, what we're finding is that, somebody might have been in the out-of-state bucket 2 years ago, but now we're classifying them in a different one. Maybe now they're over in online or they're showing up in a YourPace subscription. And so it's not only is it changing almost annually, but then when you try to look back, it changes that viewpoint as well. And so we are working with each of the chief business officers right now, kind of reconstructing again that face of a credit hour, and look forward to talking about that a little bit more. Residence hall occupancy, again, I think you see generally a positive but mixed story here. So high occupancy at UMaine, high occupancy at USM, and even at Farmington, as they have made some renovations to their dorms. See a big improvement of occupancy rate at Fort Kent as they've made improvements. And we've started to see some kind of rethinking the way we think about occupancy. And so not just converting doubles to singles, we've been talking about that for a couple of years, but even literally closing residence halls. And so you're going to hear a couple of examples of that today about how we're rethinking and repurposing residence halls. Trustee Johnson.
Then maybe, or are you going to talk about, it looks like capacity is growing in residency halls out in the out years, which feels kind of counter to the trends that we're seeing. Are you going to talk a little bit about that?
Yeah, we'll talk about some of those specific. It's usually driven by something like, I can't tell if it's this exact example, but to give you the type of example, it might be something like a campus has taken a dorm offline. Like Farmington has done that for a couple of years while they renovate it, and then it pops back up and then it drives the occupancy number. But having said that, one of the conversations that we've been having with both the board chair and the committee chair is about having a deeper conversation about our residence halls and the conditions of our residence halls. And so working with Gretchen and Nate Harris, we're putting together a report for you on the state of our residence halls. And so we'll talk a little bit more about the condition, the occupancy, the capacity, and then where do we go from here as we start looking at usage.
Thank you.
Yep, great question. So I just have like 3 or 4 minutes left, but the last several slides I have, 5 or 6 slides, are really just reflecting the rate, a rate being implemented. And also I'll go through these, again, fairly quickly to keep us on time. Tuition hour, credit hour rates are going up at 4%. Again, I've referenced that a couple of times in slide presentations today. You'll see generally our tuition levels are based on tiers. We don't like to say tiers because people assume it implies quality, and that's what we don't want to do. But levels, pick your name. But in general, what you see is is UMaine at 441 as a proposal. You see Farmington and USM also on a level, and then UMaine and UMA, Fort Kent, and Presque Isle also on another level. We did that back in our 2016, 2017 budget, and have generally tried to keep those tuition levels, if you will, generally in line. We did that because what was happening before 2016 is just random chaos. People were making decisions just arbitrary. And so when we stopped and paused and looked at everything, for instance, in 2017, at that time, this was before Machias became a regional campus of the University of Maine. But at that time, it had the second highest out-of-state tuition in the system. Not because there was a strategy, but because it was, X number of years in a row with an automatic increase and no kind of plan. And so we paused, we looked at rates, we reset a couple of them, and then we came up with a plan kind of rolling forward. And that's what you see here. Again, both on the undergrad and grad side, you're seeing that 4% increase. A couple of small examples dealing with law, and you'll hear more about those later in the morning or in the afternoon. Differential tuition. Again, differential tuition is really just reflecting those programs where the base cost of tuition is not able to cover a high cost or a high demand program. So we've always had the ability to do differential tuition. It usually works through a memo through the chancellor. We've had enough interest in it over the last several years that we felt it was important to be a little bit more transparent. And so now we include those in our budget assumptions, and you can see those right here. And then last couple of slides, mandatory fees. You see the increases in the individual mandatory fees here. Generally, they're related to inflationary adjustments. There are a couple of cases where a fee might be a little bigger than that. It might be a new fee. And again, you're going to hear about that in the presentations today. Room and board, again, we give the campuses just a little bit more flexibility, but what you see here is you see the combination of room increases and board increases, generally falling in that 2.5% to 5% rate of increases. The annual comprehensive student charges, so what does it look like when you roll it all up? Again, this was a request of the board chair a few years ago, and so we're really just going back over the last several slides, rolling them all up, showing you what does that total increase look like. And again, generally, it's falling in that 3.5% range for our in-state students. This is the same information on the grad side. I do want to note, I think I had, so again, earlier I referenced some of the changes around Maine law that are a little bit outside these ranges just because of some unique circumstances there. And they'll talk about that a little bit later in their presentation. And then finally, apologize for going just a couple of minutes late, but happy to pause and answer any questions now or at breaks later on, Mr. Chair.
Thanks, Ryan. Quick questions from the committee. And again, yes, Trish, Chair Riley.
Great presentation. Ryan, I wonder if you could just send a second updating everybody. We are looking at a policy around AI, and that would likely bring some costs, but what's the timing for that?
Yeah, so we have an RFP for AI services, if you will, that's out on the street right now. Proposals are due in just a couple of days. You'll recall our original proposal that came from the System AI Task Force was for a student fee that would be layered on top of everything that you're going to see for today. We do. One of the reasons we went out with the RFP is because the AI landscape has changed. It's not quite the 5,000 employees, 20,000 students times $30 a month. They have changed the whole pricing structure in this. And so we want to see what's available. Even if we go with the same exact recommendation we mentioned, we feel like the fee would come way down from what our original projections are. We'll have a better understanding of that in a couple of days. And we think we'll be able to have a good conversation about this at your April work session. But what we're hoping for is to dramatically bring that down. And then once we have more information about the timing and stuff, then we can think about how it impacts this budget cycle in that same timeline.
Thanks.
Trustee Flood. Good morning, Pat.
Thank you. Thank you, Roger, and thank you, Ryan, very much for the morning. I had a question. I know, Ryan, I thought I heard you say that we'll talk in depth about shared services at our next meeting or the meeting after that, which is fine. And I know there have been some changes you've made, but my question is just kind of basic for today, and it can wait till April if you wish. But on the subject of shared services, generally speaking, that's a pretty big number for smaller campuses, you know, on a ratio basis. But I know there's probably been tons of discussions about the allocation process and who's getting hit for what on shared services. Just the general question, and again, it can wait for an answer. Is there amongst our presidents, are we feeling that people are in agreement on the shared services allocations they're receiving, or is there still a whole lot of stuff that has to be resolved on that?
Yeah, I would say so two parts to that, and then again, happy to take a deeper dive. But I think we're getting better on our end, being transparent about our charges and the way shared services work. A decade ago, we used to take the shared service charges off the top of the appropriation, and if there was money left over, then we used it for something else. And so now we have a really transparent kind of chargeback model where, you know, we're going to charge Ray a set fee, but if Ray has vacancies and we don't end up charging him what we thought, we'll give that money back to him. So we try to be really, really transparent about that. Now, in the interest of full disclosure, you know, in my 30 years, I've never met anyone that is happy about a shared service charge. Everyone always wants you to do more and they want you to charge less, which I appreciate. I used to do the same thing when I was on a campus. And so we have really tried hard as part of this budget cycle, and I look forward to talking about it in more detail, to really look for opportunities to kind of keep those costs contained as much as possible, redirecting when we can't contain them fully because we're doing more, looking for funding sources from other places outside of the campuses so that we can mitigate the impact on the campuses as well. So that's just a little bit of a snapshot, but I'm going to deep dive this one big time when we get to the 15th.
Great. Thanks very much.
Thanks. And thank you for, we're looking forward to seeing the further credit hour analysis to get a better handle on that. Boy, that world is just changing rapidly. So if we can get our arms around that as a board, it'll be really helpful.
Absolutely.
Thanks. Any other questions for Ryan before we end this portion? I am not seeing any. So Ryan, I'll just go ahead and introduce the first university.
Yeah. So I think we're all super excited from our the one thing we learned from our 2 days of budget sessions. We learned a lot, but the biggest thing we learned is how excited President Hedin is to present her budget, and so there was universal agreement that we wanted her to kick off the day. So President Hedin.
Well, it was actually a 6-2 vote, but it was a clear majority. Welcome, President.
Thank you, Chair. Good morning. The University of Maine at Fort Kent is pleased to present its FY27 budget today. I am Deb Hedin, UMFK's President and Provost, and also presenting today is Jacob Jandro, UMFK's Chief Business Officer. Slide. How you doing, Jacob?
I'm doing all right. My apologies. I was getting prepared to introduce myself as well, and I kind of panicked in sharing. So let me turn on my screen share.
Yep, let's do it. Let's go.
Okay. Let me first start with this first slide and begin sharing. Can everybody see okay?
It's not in its full PowerPoint yet.
Okay.
Move it to presentation.
Let I apologize for this. I was prepared, but okay, let me begin the share. Okay, now let me go to Zoom. Can everybody see okay? It should be loading now.
No, okay, thank you. Move to the next slide, please.
Yes.
Last year, we ended our presentation with the first slide of our presentation this year. We continue to work on the university's financial health. The following solutions were generated by AI. This year's presentation includes examples of the proposed solutions: enrollment growth initiatives, new program development, increased recruitment efforts, additional revenue streams, tuition fee adjustments. Enhanced fundraising efforts will be highlighted in our FY28 budget presentation. Slide. All 6 focus areas of UMFK's strategic plan are important, and we continue to pay careful attention to focus area 1, enrollment management, and focus area 4, academic programs. Slide. This slide shows the FY24 and FY25 comparative credit hours in academic affairs. The 6 cost centers are on the left: arts and humanities, behavioral studies, forestry, natural sciences, nursing, and professional studies. FY24 shows that three of the cost centers were unable to cover the direct costs of their programs, which led to an overall deficit of $716,400. In FY25, the same 3 cost centers were unable to cover their costs, but made improvements. On the far right side, all numbers are in green because improvements were made in all 6 cost centers by an increased number of generated credit hours, which reduced the deficit by $171,351. We anticipate a continued increase in credit hour generation in FY26. Slide. For the past 2 years, Academic Affairs has strategically reviewed and proposed academic programs that align with workforce needs and faculty talent. FY26 has been a productive and successful year in expanding our program instructional modalities: in person, graduate level, online, 90 credit degree, and partnering with UMPE's Your Pace program. It takes time for a new program to gain traction from prospective students. In October 2024, CAOC approved the name change from behavioral science to psychology. In the past, during our open house sessions for high school students, we would ask students interested in behavioral science to meet with a faculty member. There would typically be 1 to 2 students. During fall semester 2025, when psychology was announced, there were 21 students interested. The name of an academic program does make a difference. Slide. We have made great progress in adding sports: baseball, softball, esports, men's golf, and cross country. We will be Bengal strong in FY27. FY27 will be our exploratory year of transition to NCAA Division III. I'll pass it now to Jacob.
Thank you, President Hedin. My first slide presents our proposed revenue budget. On the left, you'll see the major revenue categories, including tuition and fees, waivers and scholarships, appropriation, and other miscellaneous revenue. To the right of that, you will see our FY26 revenue budgeted, and to the right of that, our FY27 proposed revenue budgeted. I have highlighted the campus's major changes so I can elaborate on them briefly. The first major change is our projected increase in tuition and fee revenue. This is a significant increase for a small campus, and I want to assure you there is an explanation behind it. The proposed increase is $906,000, as you can see, or 12.3% year over year. I will go into more detail on the next slide, but I do want to mention one important point here. UMFK actually reduced the number of credit hours originally projected as part of the enrollment assumptions provided to campuses. Even with that more conservative approach, the growth in programs and athletic teams still supports a substantial increase in tuition and fee revenue. System projections would have resulted in about a $1.4 million boost, but after adjusting estimate growth more conservatively, we arrived at $906,000. Budgeted dining and residence hall revenue are also increasing significantly due to both higher rates and growth in on-campus students. I will expand on those drivers in later slides as well. Altogether, these changes result in an 8.9% increase in total revenues, or about $1.5 million year over year. Here you will see the major drivers for tuition and fee revenue in FY27. On the left side are our tuition and fee rates. A few changes to note. The in-state tuition rate, as Ryan mentioned earlier, a lot of these increases are in correlation with what UMPI and UMF are doing, but we have a 4% increase to our in-state rate, a 4% increase, a 3.7% increase to our out-of-state rate, and a 4.3% increase to our RN to BSN rate. For this year, we decided to keep our graduate rates flat. This $500 rate has been tremendously helpful from a marketing standpoint, but with other tuition groups beginning to close the gap, we anticipate reviewing our Master of Science in Nursing and Doctorate in Nursing practitioner rates in future years. Below, you will see the small increases to our fee rates. On the right side of the slide, you can see the impact on these changes have had broken into two main categories, rates and enrollment. From enrollment growth, we project another $280,000 in additional revenue, driven primarily by increases in our out-of-state and international students, as well as additional students brought in through athletic teams. Again, this growth estimate was reduced from our original projections received so that we could budget more conservatively. Below that, you will see a $575,000 increase associated with the MSN and DNP program. Once again, that growth projection was also reduced to create a safer, more conservative estimate of UMFK's continued growth. Yes, Trustee Alexander.
I'm trying to understand some of what you've just said. You said that you have budgeted increases for in-state /Canadian. Is that what that means?
So our budgeted rate is an increase for the in-state /Canadian rate.
Right.
Yep.
And you've also had an increase for other international students. And I'm wondering if you've evaluated the potential that increases might result in some decreased interest on those students that you recruit. In other words, what kind of assumptions do you make with respect to your ability to continue driving students from Canada and other countries to come to Fort Kent? It seems to me that's a big driver of your assumptions here.
Yes. So all decisions that we do make from the finance office and with the president, we do include admissions and our athletic recruiters, and just to make sure they are aware of the changes that we're considering. By doing so, our hope is to, or our intent is to continue to still increase enrollment while also alleviating the increases in costs that we're seeing. So we have done analysis over the past couple of years with a 4% increase year over year to the tuition rates, and we have seen increases in enrollment even with those increases in rate. Now, it does not mean it's an exact correlate. There's no exact correlation between the increases in rate and enrollment, but with the trends in enrollment we're seeing, the increases in rates aren't deterring that.
Thank you.
Yes.
Ryan, let me jump in, Jake, if I couldn't ask Ryan to address this. I think you said that your projections for increased enrollment were actually lower than those which you received from the system predictions. Ryan, could you just spend a couple minutes talking about how that gets developed at the system level?
How the assumptions get developed?
About enrollment growth, yeah.
Yep. I'm not going to get it exactly perfect. I don't think Robert's on here, but before it's easier to compare it to what it before, prior to that, it was based on historical trends and gut feelings. And we essentially put that aside and then worked with Robert to base it on, all of the things that are going on in the economy. And so we look at what's going on with demographics. We look at the 20-year history of birth rates in Maine. We look at, what the economy is because we know that impacts certain behavior. And so it's a much more analytically driven enrollment forecast. Again, maybe I can tee Robert up on the 15th and we could talk a little bit more
Great.
about how we build that up.
Yeah, great. Thank you. Jacob, go ahead.
So now I'd like to move to our proposed expense budget. Here you will see our proposed expense budget for FY27. Similar to the revenue slide, this provides a comparison between FY26 and FY27. You will notice notes on the right side of the screen. At the top, you'll see a $316,000 increase in salaries and wages. This is entirely made up of contractual increases that Ryan spoke about earlier. With many bargaining units agreeing to 4% increases, this year's change is somewhat higher than what you've seen in prior years. Below that, you'll see related increases with benefits, $154,000 tied to contractual increases. Then you'll also see the $417,000 and $203,000 increases in salaries and wages and benefits. Those are due to the relocation of campus services back to the campus. So it's just a matter of moving from one line to another, which you will see with that $653,000 below in shared services back to the campus. Moving down, I'd like to talk about one additional change. We budgeted a $301,000 increase in dining service costs. Most of this is due to growth on campus. Students are continuing to move on campus for us, and we're also seeing rising costs in raw materials. Another important factor is dining dollars. Previously, students received $150 in Bangle Bucks each semester. In an effort to be more aligned with the other 5 UMS campuses, that amount has been increased to $250. Overall, we have tried to hold operating expenses as flat as possible where we could. Because of some of the changes I outlined, however, we are proposing an increase of approximately $1.275 million in total operating expenses. This is in many ways the most important slide of the FY27 budget presentation. Here you'll see the combined impact of our proposed revenue and expense budgets on our operating change. As some of you may remember, capital expenditures were removed from last year's budget in order to break even. This year we were able to add back in those capital dollars to improve the infrastructure on our campus. You will also notice a drop in our debt service principal line. I'll have more good news to share on that later in this presentation. With all that said, we are proposing a break-even budget for FY27. We are pleased to be able to present a balanced budget and intend to build any additional surplus generated during the year into UMFK reserves. Here you'll see a little bit of the credit hour discussion we were having. So you'll see the projections that we provided along with the projections or the altered projections that we used in order to build our budget. I'll briefly go line by line through the major categories. Early college, you'll notice that there is no projection growth for this year. The reason we did that is because of the lifetime maximum change to credit hours. We felt in order to conservatively budget early college hours, after having discussions with others, we decided that we would keep these rates flat, these credit hours generated flat from last year. That can be seen in the reduction of 354 credit hours, again, from the system projections we are provided to our projections. We made no changes to the in-state rate because we felt, after analysis, we felt it already closely reflected the expected increases resulting from new programs in athletics. However, we did reduce the projected number of out-of-state and international credit hours. With new sports and programs, we are projecting approximately 15 additional out-of-state and international students, so we adjusted the credit hour assumptions to reflect the equivalent rather than what was provided. Because Canadian students generate a relatively small number of credit hours overall, we were comfortable using the system's projected growth in that area. With the current information from Tableau, we have not made changes to the credit hour projection for RN to BSN. Lastly, one of the most important areas to discuss is the rapid growth in our Masters of Nursing and a Doctorate of Nursing practitioner. Based on current applications and admits and matriculations, that growth is very clear. Original trend analysis had UMFK generating over 1,300 additional credit hours through these programs next year. After conducting our own internal analysis and applying a more conservative approach, we reduced that number by 360 credit hours. Altogether, we are proposing a budget based on 22,947 total credit hours, with 18,897 of those hours excluding early college. Here you will see our enrollment history year over year. This is another point of pride for us. For the fourth straight year, we are projecting and budgeting enrollment growth. This continued growth reflects the momentum we are seeing with new programs, athletic teams, and graduate education. This is one of my favorite slides to share. It's a new one for us. In the top left, you'll see the waterfall chart showing how we arrived to the credit hour total from the previous slide. One of the questions we received last year was about residence hall students and in-person students. In an effort to combine that information with broader enrollment trends, such as the national conversation about male participation in higher education, we thought it would be useful to provide this additional context. With the help of our lead registrar, we were able to produce both pie charts and the enrollment snapshot you see here. Our residence hall population is almost evenly split by gender, 73 female students and 69 male students, which is a 51% to 49% split. Among our in-person students overall, we have 198 female students and 140 male students, which breaks down to 59% female and 41% male, respectively. To the right is our enrollment snapshot. For fall 2025, we are reporting 829 total students. Of those, 677 are undergraduate students and 154 are graduate students. The geographic breakdown of our in-person students is shown below. Around 52% in-state, 24% out-of-state, 20% international, and nearly 4% Canadian. This represents an improvement in diversity from last year, when the split was closer to 60-20-20. You can also see the states and countries listed below, as well as our astonishing rate of first-generation students that we bring to UMFK. I will move on to the next slide and allow President Hedin to share our marketing initiatives.
Jacob, could I interrupt and ask you or the president, could you go back to that previous one for a minute?
Absolutely.
You've done a great job of attracting international students and focusing more on athletes. But are you concerned at all that given the international climate we're in and what we seem to read about other schools having difficulty in attracting international students in this environment, that your numbers might be overly optimistic, or do you feel good about them?
I can speak to it briefly. So our admissions team and our athletics team, so our recruitment, a lot of our recruitment is done internationally. They are still actively engaging with our international population. They are, in fact, doing it ahead of time now because of how long sometimes appointments take with the embassy and getting all of their paperwork in place. But we, at this point, are still continuing our recruitment efforts, and we are still seeing improvement in our international numbers.
Thank you.
Yes.
Thank you, Jacob, for that response. Yes, and we haven't had difficulties this year. Our students have still been able to, we've still had strong presence on campus, even with the national difficulties of international students entering the country. So we're moving on to our marketing slide. In 2026, we moved into phase 3 of our marketing plan that included the following initiatives. A chatbot was added to the website to assist students 24/7. New promotional videos to showcase our new Bachelor of Science degrees in Forest Management and Wildlife Management. UMFK's first virtual tour will launch soon. This will be helpful for our out-of-state students, international students, as well as students in Southern Maine, because that is a distance from here, right? Our focus has been on marketing, efficiencies, and expansions. Next slide. We added a new position, customer relationship management, CRM, and social media manager. This position provides strategic email outreach for program-specific communications. We now have a stronger presence across our social media platforms because of a dedicated person managing all social media channels. Trustee Alexander?
I had a question about your chat box.
Yeah, sure.
Is that virtual AI generated, or is that talking to an actual person?
It's generated. And it's
Right.
based, yes. And so we help to train it off of all of our material, all of the information that's within our website.
Right.
Thank
You
you.
might want to, yeah,
Yeah.
just at some point, conduct consumer satisfaction surveys with that approach.
Yes, yes,
As
we
one
have.
who's
Mhm.
had to deal with them frequently on a variety of media, it is inevitable from that the complicated question is not answered and that you need access very promptly to an actual human being to interact on an individual basis. So it's just not a comment to you directly, but to the
To
whole
monitor it.
idea.
Yes,
Yeah, right.
thank you, Trustee Alexander. We're still in the beginning phases of using it, and we're doing a lot of testing and experimenting. And then when it really can't answer something, there's always an opportunity for the person seeking information to email or contact somebody. So then that connection can happen. Thank you for that. I'll pass it back over to Jacob.
Here, I'd like to give a quick update on our financial aid. I'll start with the pie chart on the right. You'll notice our budgeted ENG scholarships and waivers for FY27. The split is very similar to prior years, but we are seeing increases in academic scholarships, athletic scholarships, and waivers due to increased enrollment in FY27. On the left, you can see how that rolls into the budget. We're able to keep scholarships and waivers relatively consistent in FY27. You will notice a 2% increase in the proposed budget, which is due to several scholarships and waivers, such as dependent waivers and some academic scholarships being higher than expected in prior years. As an example, FY25, when we came to you last year, had a budgeted discount rate of 16%. After going through and looking at our actuals for FY25, we came out to an 18% discount rate. So we feel this change in FY27 correctly resolves that. The three efforts listed below remain true for FY26. As mentioned, we continually try to keep a consistent discount rate that reflects those ongoing efforts. Residence hall occupancy. So Ryan mentioned us a little bit earlier about having increased occupancy for FY27. That is due to a building that was previously offline and in need of renovation coming back online. On the left, you'll see we are proposing an increase to occupancy of 220, supported in part by the Powell Hall renovations. We are continuing to see growth over the past few years. 107 students last year, 107 students in FY25 was the average amount that we had in our residence halls. This year, our average is 142 students, and we are projecting 174 next year. This is due to the increase in out-of-state and international students who are coming for athletics, as well as our Recovery High School, which I will speak about briefly. Our encouraging point is retention within the residence halls. Last year in FY25, we lost nearly 30 students between fall and spring. This year, we began the fall semester with 147 students and are currently at 137 this spring. This is a significant improvement from a negative trend we had seen. On the right side, you will see a few additional housing topics. At the Lodge, we are still currently housing 2 Maine law students, as well as holding 4 suites for admissions visits, candidate visits, and new employees. We also do house many outside groups and individuals in the summer. We've already received nearly a dozen requests for the summer period, and they're continuing to go up. Now turning to Powell Hall in FY27, Powell Hall will be used for the Upper St. John Valley Recovery High School, which will be the first in-residence recovery school in the nation. Powell will also support UMFK's accelerated nursing program on the second floor. We are looking forward to building a relationship between those two. And we know that our Recovery High School students are typically students who are returning back to school and typically have some life experience. So our analysis led to us choosing that the second floor would be best for them. Bathroom renovations are underway and will be completed by August. This will significantly improve flexibility and functionality within the building, turning community bathrooms into individual bathrooms. The work was supported in part by a $95,000 award from the Davis Family Foundation. I'll touch really quickly on our residence and dining hall rates. You will see around 4% increases to all of the res halls and dining, which leads to a $49,000 increase in residence halls and a $42,000 increase in dining. One of those other factors in that residence hall increase you're seeing is a step up from $400 to $500 for our individual suites or for our individual rooms. When students decide that they want a single and it's not medically approved, we do go through that process of allowing that if we have the room. I'd like to also quickly touch on our capital projects and facilities update. Currently, we're still continuing construction on Fox Auditorium. It is fully underway. This project began a little later than expected, but we expect to have it completed in December of this year. Most of the project will be expensed by the end of this fiscal year, but we anticipate about $750,000 of the work to occur after July 1st, beginning in FY27. We were also recently awarded funding through the Department of Housing and Urban Development to construct a new computer system administrations lab, which you'll see here. We've already begun preliminary meetings on that. Some of you may remember the Sear Hall sprinkler system that I had brought to you a few months ago. Construction on that project will begin shortly and is expected to be completed by December of this year. And those are three major projects I wanted to touch on, but you can look here and see the different projects that we have planned in FY27 along with their funding source. Moving through the slides, here you'll see our Gordian data showing UMFK's performance against target. As you can see, we are below both benchmarks for increasing net asset value and lowering risk profile. A major reason for the shortfall is due to the delay with the Fox Auditorium expenditures, which we were hopeful to show here this year. Because of that, most of the expenses will occur in FY26, which will show the asset investment for FY27. That project, along with others I just described, should significantly improve our annual stewardship and asset reinvestment metrics in 2026. And we look forward to showing that to you next year. Next, you will see a slide about our space reduction. This is another slide I was excited to create because it takes all of our space reduction efforts and translates them into clear concrete information. I'll briefly skip through this, but we had about 17,516 square feet reduced as part of our space reduction efforts. With the building of the EAC, that is about a 12,316 square foot net reduced. In part of those efforts, 8 buildings were disposed and 2.8 million was avoided in asset reinvestment. So on the right, you'll see what's next. What are we trying to do? At this point, UMFK feels that we have reduced all of the space we possibly can at this point. All of our area is being used thoroughly, and I'm sure there'll be some pieces that will come up in the future where we do consider changes, but at this point, we have no qualifying spaces that are considered to be disposed of. Instead, we focused on our storage and our current square footage. You'll see we've invested in a new storage container for main trailer, and we're considering the purchase of 2 and permanently housing them in a space that will allow for our primarily used spaces to instead not store all kinds of things that we use once a year, but instead use it for instruction space or for activity space, offices, classrooms, those types of things. Next, I'd like to quickly touch on our reserves. Here you'll see our reserves at the top. Last year in FY26, we did dip slightly into negative territory in terms of reserves. This was due to a couple of unanticipated factors. We will continue to direct any available surplus into reserves to help offset that deficit. In the bottom right, you can also see, in the bottom left, excuse me, you can also see the growing variance between E&G and auxiliary reserves. With continued enrollment and on-campus students, we hope that this will address it over time. Real quickly, our strategic plan. How does all of this that I've been speaking about fit into our strategic plan? Well, we touch on 5 different goal areas revolving around infrastructure, sustainability, and academics. Many of the capital projects planned in the current and upcoming fiscal year directly support the goals in the strategic plan. We also have academic initiatives that support the strategic plan, especially within our academic portfolio priorities. That includes new programs and new modalities, both of which directly support the goal of advancing sustainable academic portfolios. Here you'll see the you will see the debt reduction story that I want to share with you. As of today, our Efficiency Main boiler loan has been paid in full. That brings UMFK's long-term debt in FY27 down to $2.77 million. This will positively affect several ratios that can contribute to our CFI, Composite Financial Index, which I will discuss on my next and last slide. There are several important points here. First, our annual external debt service being reduced by $132,000 from this year going into next. FY34 marks the final payment on our largest dorm, the Lodge, a 30-year loan that will be fully retired. As things stand, UMFK would have no external debt service payments beginning in FY35, but of course, future capital purchases could require financing, but at this time, no additional debt is planned. My last slide before I toss it over to President Hedin for closing is about our Composite Financial Index. We have identified 5 strategic initiatives to help strengthen UMFK's CFI and move us toward a more stable, long-term financial position. Our current CFI is 0.3. While that is above 0, we know that is not where we want it to be. Our first initiative, enrollment growth, includes the new athletics such as baseball, softball, esports, golf, and cross country that President Hedin mentioned, all most low-cost opportunities that will help us bring in additional students and revenue. More credit hours also are helping with this. Our FY27 projections are up 4.1%. which will help bring more students in the pipeline and increase our enrollment. Second is our new program development. Programs like our bachelor's degrees and master's degrees are helping us bring in more enrollment and more students. And of course, the continued growth of the MSN and DNP programs remains a major contributor to our new revenue. Third, revenue diversification. As I mentioned earlier, tuition is not the only lever.
Jacob, I apologize for interrupting. I'm going to have to ask you to wrap up quickly if you can, because we don't want to get behind. Thank you.
Absolutely. So as you can see here, the revenue diversification, the capital investment, and the debt reduction are also things we find very important to improving our CFI. With that, I will pass it over to President Hedin.
This is our last slide. UMFK will be celebrating 150 years on September 30th, 2028. We are working on a number of projects in preparation for this important celebration, including a 150th wall display, updating the past 25 years of the UMFK book that describes each presidency, plus interior and exterior campus beautification. Thank you for the opportunity to reflect on our FY26 accomplishments and our FY27 projections, which have been made possible by the dedicated UMFK faculty, staff, and students. Thank you.
President Hedin, thank you so much, and Jacob, for your very efficient presentation. We very much appreciate it. We are going to take a break, but we'll take questions at this point. Yes, Trustee Alexander.
Well, I would like to say that this was a very helpful and interesting and very detailed presentation. What are the risks of your assumptions being wrong about either revenues or costs or enrollment or credit hours, and what kinds of backup are you prepared to undertake in light of some external factors that none of us are able to predict, and that are unlikely to allow us to continue to do business as usual. So how are you facing that kind of risk analysis and internal planning to respond?
Thank you, Trustee Alexander. We really appreciate that question, and we think we have given a number of examples in our presentation today. First of all, we knew we needed to diversify our academic portfolio in terms of instructional delivery modality. And so you're seeing that. You're seeing in-person, online, 90 credit, your pace. So we know if we need to, we can't have all instructional modality in one place, because if something goes wrong, we have nowhere to turn to. So we have expanded and broadened our reach so we can be more agile and flexible in our response. Also, we're looking at our facilities, at our buildings, as ways of generating revenue. So that's why we're moving into providing space for the Recovery High School, because we know that will generate funds. We are also able to generate funds, revenue off of our lodge in the summer. And obviously, once we have air conditioning and solid ventilation on the second and third floors, we're going to be able to expand opportunities for people to have short-term housing and workforce needs in the summer. So we're definitely making sure we're looking at all areas, and then also the increase of athletics will definitely diversify and help our portfolio in that area too, in terms of bringing in more students because of having additional teams. Thank you.
I can also add really quickly that we did, at the end of budget building, make sure to include increases to our budgeted expenses that we could see ourselves pivoting from if needed in FY27.
Thank you. Trustee McMahon.
One of the programs you have is a 90 credit degree program in business management, I think it is. How's recruitment going for that?
We're in that initial phases of the recruitment. We're just at the very beginning. That was just approved in December. And so now we're doing all of our preparation work in terms of making sure everyone is aware on campus of the impact in terms of financial aid, classroom space, everything that's going on with that. It's actually not classroom space, it's online. But we are now doing the marketing materials and preparing to recruit.
Thank you. Any other questions? Seeing none, again, thank you very much for your presentation. And if people have questions later, write them down and we'll make sure we get them to the president and to Jacob. Thank you very much.
Thank you.
We're going to take a very short break, only until 10:35, so we don't get too behind here. So why don't we just take a 5-minute break and we'll be back with USM. Thank you. Okay, well, welcome back, everybody. After this very short break, we'll get started again. And our next presentation will be from the University of Southern Maine. So yesterday, I went to the mailbox and got my usual mail, and in the mail was the Maine Biz New Edition. I don't know how many of you have seen it so far. And this edition is about Business Leaders of the Year. And in the lower left-hand corner is Jacqueline Edmondson. So there's a great article about her in here, which I hope you'll get a chance to read. Congratulations, President Edmondson, and welcome.
Thank you so much. It's really wonderful to have our university highlighted in Maine Biz in that way. And I also want to say that it was a great honor because I know 2 years ago, President Farini Mundy was also recognized by Maine Biz. And so it's nice to have our University of Maine system recognized. So thank you for that. It's wonderful to be here with you this morning. Again, I'm Jacqueline Edmondson, President of the University of Southern Maine. I am also joined today in the presentation with our Vice President for Finance and Administration, Justin Swift, Vice President for Enrollment, Retention, and Marketing, Dr. Megan Arena, and our Provost, Dr. Adam Tyszynski. Before turning to the presentation, I do want to acknowledge the extraordinary work of our budget leadership team, which in addition to the people you'll meet today, involves our Vice President for HR and Workforce Development, Natalie Jones, and our Vice President for Student Affairs, Dr. Andrew Pollum. This group meets weekly across the entire year and makes some really thoughtful and careful decisions. So this budget also reflects the hard work of our deans, faculty, staff, and other partners across the university community. And building this budget required thoughtful planning, difficult choices, and a shared commitment to stewarding our resources responsibly. In a time when higher education institutions across the country are facing significant financial pressures, I'm proud of the careful and collaborative work that has allowed us to bring forward a balanced budget that supports our mission, our values, and our students. I also want to thank the Chancellor, Vice Chancellor Ryan Lowe, and the board for your continued partnership and support. Your guidance and your commitment to the University of the Maine system has been essential as we navigate these challenging financial conditions. Throughout this process, we've remained focused on what makes the University of Southern Maine distinctive. USM continues to serve as an intellectual and cultural hub for our region, bringing together students, scholars, artists, and community leaders to learn, create, and engage with the most important issues of our time. The budget before you reflects not only fiscal discipline, but also our values and our commitment to sustaining our role for the people of the great state of Maine. So I'm grateful for your dedication and that of so many who contributed to this effort, and I look forward to my team walking you through the FY27 budget and the priorities it supports. I'll turn it over to Justin.
Justin, we can't hear you yet.
Thank you. Thank you for the opportunity to present our draft fiscal year 27 budget with you. This budget this budget development started early last year, and many meetings, many hours of work with many people have gone into it. I hope you'll find that this budget, we put a lot of effort into trying to minimize our risk. It's a conservative budget and a very realistic budget. As you are probably very well aware, USM has been working at addressing a structural budget gap over the last several years. In fiscal year 2024, we had identified a $9.6 million structural gap. In fiscal year 25, $10.3 million. In the current fiscal year, we addressed an $8.1 million structural gap. Our fiscal year 27 budget had a $5 million gap. And then we anticipate in fiscal year 28 a $1 million structural gap. And then if all goes as planned, we will enter fiscal year 2029 with no structural gap. The campus has been addressing this structural gap through a combination of permanent and one-time solutions. We have been very focused on revenue generation. We have been looking at all of the opportunities the campus has, not just within the enrollment area, but also within our auxiliary operations as well. There has been a lot of attention to our housing and dining program, our parking and transportation program. There's been a lot of effort there. The university store, and lastly, our conferences area. So we have not actually cut our budget or reduced our budget by this amount to close the gap. It's been a combination of working with our expense budget, but also trying to maximize our revenue opportunities as well. So I mentioned that in fiscal year 27, we had that $5 million structural gap, but we also, in building this budget, we actually had an $8 million gap to solve. And there were items that we built into the budget that were above and beyond the structural gap we had. For example, we budgeted the debt service for the Gorham Art Building that's now under construction, that the board approved earlier this year. We also set aside some budget for the eventual Roby Andrews Residence Hall renovation project that we hope to do on the campus. And I'm aiming for fiscal year 2030 with the intent that by the time we get there, we've carved out the debt service for that project. So there were some costs that were not part of our initial structural gap that we have solved for. And this is how we identified or solved for this $8 million gap. The tuition and fees, the 4% increase amounts to about $2.8 million. We are proposing a room and board increase of 4%, which is about $500,000. Our appropriation increase, which we are very thankful for the system, the state of Maine, the governor for, that was $1.4 million. And our shared services appropriation of $1.1 million, as Ryan mentioned early on, the trustees, we are very grateful for them for helping us with that. The organizational efficiencies of $1.5 million. These are actions or decisions that have already been made and implemented. And so on the campus, we have what we call our position review committee. It meets every Tuesday. And we look at every position, every compensation request goes through this committee. And it's evaluated on the need. We also look at, are there other ways to, work within the organizational structure to have this work done? And so as positions open up, it used to be that it was just assumed by departments that, someone retires, we'll just automatically refill them. And that's not the case on the campus anymore. And so we were able to take offline about $1.5 million of compensation. This includes benefits too, so it's not just salaries and wages. And then scholarship offset, you'll see that $500,000 there. We budget in our institutional budget, merit scholarships, for example. And we are working with our University of Southern Maine Foundation to raise funds to offset some of that temporarily. So we're looking at that as a one-time solution, but it will provide budget relief of about $500,000. And then attrition, $200,000 there. What we are planning to do is when we built this budget, we increased our attrition target by $200,000. This is inclusive of fringe benefits. Since this presentation was put together, I have worked with our HR department, and we've come up with a strategy and some savings to actually hold our attrition budget flat. So that adds up to $8 million, which leaves, right now our budget is balanced. Our tuition rates, about 2 years ago, we presented and the board approved expanding our differential tuition rates. We have programs on the campus that are some are more resource intense, have more resource needs than others. Some of it's just because of the nature of the program. Maybe they have lab equipment or facility needs that are more expensive. Sometimes the faculty are more expensive too. In other cases, there might be accreditation reasons too, where the accreditation limits the number of students per faculty too. That can also make that program more expensive. More than half of our programs still fall in our base tuition rate, and which is the differential tuition one that you see there on the screen. And all of these rates are increasing over fiscal year 26 about 4%. Some might be just a little bit more than 4% or just a little bit under because we round to the nearest dollar. Our comprehensive fee is currently $89 per credit hour. We are proposing going up to $96. And so that includes a 4% increase. It also includes a $3 per credit hour increase, and I'll explain to you what's going on there. Right now, our health and counseling center, they see students, they provide health and counseling services. The demand in that area is also increasing, particularly with mental health needs. And right now, we bill students health insurance for services. And, that has been becoming even more challenging. Not as many students have health insurance now. It causes financial challenges even within our budget as well. We have to wait for insurance to pay us. Sometimes they don't pay us what we've requested. It makes the revenue modeling very unreliable and unpredictable. It also creates inequity in insurance too. Some students with insurance are able to receive services, while students that do not have insurance, we don't turn students away, but some students that don't have insurance, sometimes they're embarrassed to come to the health and counseling center to receive services. And so there are students that are foregoing services that they could benefit from just because of that. There's also the privacy aspect too, where the EOB, the explanation of benefits, sometimes gets mailed to someone other than the student. Maybe they're on someone else's health insurance too. And so it does create some concerns with students around, other people finding out about their mental health or other health needs that they might visit the health and counseling center for. It also, with the staffing, we also dedicate staff time to insurance billing too. We also have to make sure that our staff are credentialed to do health insurance billing. And so that has added a lot of administrative inefficiencies to our health and counseling operation, where if we went to for fee model, we can eventually over time streamline more of that. So more of the resources can be directly to serving the students rather than administrative overhead. And we also anticipate that going in this direction, it will help also retain students as well. If students can get the mental health counseling, we see a lot of that. And, the health needs that, if they can get that met with the health and counseling center, we do think that that will help increase our retention among students too, and keep them enrolled and finish in their programs. And then lastly, the technology fee, that's going up we're proposing that going up $1 because we round up to the nearest dollar.
Justin, let me stop you there.
Yes.
If I could, Trustee Alexander has a question.
Yes, sorry.
If you could go back one slide. Yes, this one. Have you identified aspects of these increased revenues that are potentially at risk? And did I hear you correctly that you have no reorganization or organizational efficiencies being no new ones being implemented this coming fiscal year? Is that what I heard?
This budget is not dependent on any future actions. So all the organizational efficiencies, that $1.5 million that I have on the slide, that has already been realized.
So why wouldn't you be doing new ones in FY27?
We may be, in anticipation of fiscal year 28, we may have to, but we have not, that is not part of our fiscal year 27 budget.
Okay, thank you.
You're welcome. Okay, our housing and dining rates are generally, we're proposing almost an across the board 4% increase here. Some of them you'll see are 3.99%, some are just a little bit over the 4%. We do try to keep them on the $5 increments. And we also look at we look at the market, we look at the expense side of the budget too, and try to keep our rates as low as possible, as competitive as possible. We do try to be as fair with students as possible, and we propose these rates. The institution went a number of years without room and board rates. And so, during that time, our expenses still continued to increase too. So we are trying to narrow that gap there. Our rates are very, they continue to be competitive. Right now, for our fiscal year 27 budget, we are basing this on a 93% occupancy, which we believe is conservative based on what we know at this point in time. Our fiscal year 26 budget was based on a 95% occupancy. So we are trying to be conservative there, trying to minimize the risk, the potential risk that we have. And then this is our housing projection. So this is how we get to the 93% that you see down in the lower right-hand corner. We do break it out by campus. We have housing on our Portland and Gorham campuses. And this does also include, we do work with the main school of law to house some of their students. And we also have relationships with other universities in the area that we do provide housing to. So of this, about 160 of these are non-USM students. So this just shows you how we project what we're projecting for fiscal year 27 during the academic year anyways. Our E&G budget. So tuition and fees makes up the lion's share of our revenue. And we did propose a 4% tuition and fee increase. You'll see that the change here is only 3.2%. And that's because I worked with as a leadership team, we do look at enrollment projections. We did try to make our projections for fiscal year 27 a little more conservative than what they were for fiscal year 26. And Megan will get into more detail on that when we get to the enrollment section. Tuition waivers and scholarships. We did go through the budget line by line, and we did a lot of cleanup. There were some departments with just miscellaneous scholarship budget that had not been used in a number of years. We did clean that up. As you might recall from a couple of slides ago, about $500,000 we are offsetting with foundation philanthropy funds. And so we did end up moving $500,000 out of our E&G budget in anticipation of substituting those with gift funds. I'm looking at that as a one-time solution for fiscal year 27. Our appropriation increase is the $1.4 million that is plugged into our budget. Investment income down slightly. That's a smaller amount on our overall budget. F&A recovery of facilities administrative costs. This is what the institution receives to cover overhead in support of our sponsored projects. And so you'll see that I'm holding that flat. In fiscal year 25, we ended the fiscal year with just about $5 million in actual revenue here. And, last year, you might recall some of the uncertainty around the funding of different projects. And so, trying to be conservative here, I held the budget flat. I think it might end up being better than that, but it's early. It's still early. Sales service other, the bulk of that $366,000 there, about $300,000 of that is removing their budgeted revenue from the third-party billing in our health and counseling centers. So that's anticipation that if you so approve that comprehensive fee adjustment that we're making to make sure that our health and counseling services are accessible and more equitable for all students, that revenue for for insurance billing will be removed.
Rustin, let me jump in with a question if I could. On the revenue, on the appropriation line, why aren't you assuming a 4% increase in appropriation?
That because the appropriation goes through the model, the formula that the system office uses, and that was USM's share of the appropriation.
Yes, I see. Thank you.
We'll put together a breakdown of the appropriation for the April meeting. We'll start with the top and show you a waterfall of that too.
Thank you.
Thank you. Jumping down to the expense side of our budget, personnel expenses makes up about 65% of our expense budget. And so this includes the 4% increases that we've budgeted for. You'll see that this is also a little bit higher than 4%. It's 5.1% increase. As Ryan mentioned at the beginning of today's meeting, some compensation that was budgeted in shared services is going to the campus in fiscal year 27. So this is funding those positions. As I mentioned earlier, I had that $200,000 for our attrition as a solution to balancing our budget. I was able to work with human resources, and we were able to identify some additional savings to keep our attrition essentially flat. And so we believe this is a very realistic and attainable number. Our typical attrition is between 4% and 5%. And so this is lower than that. So we expect that we'll exceed that just through the normal course of business anyways. Fuel and electricity. This has been one that I've been looking at. We do forecasts. The CBO's office does forecasts for the campus every month. And we look at, the fuel and electricity is one that I keep a very close eye on. It's also one that we've been budgeting very conservatively the last several years. USM, as you recall, has had a number of large buildings come online over the last couple of years. We had the Portland Commons come online just over 2 years ago. We had the McGoldrick Career and Student Success Center come online. This past year, we had the Crew Center for the Arts come online. And so there have been a lot of changes to our square footage that can affect the fuel and electricity costs here. As a campus, between our E&G and auxiliary budgets, we budget about $5.7 million. And even in the current year, even with the winter being a little bit colder than it has been the last several winters, we think that we're going to come in around $5.5 million, so still less than what we've budgeted. And not adding any square feet for the upcoming fiscal year, we believe it's reasonable to keep our budget relatively flat there. I do have some strategies if there are any unexpected increases in that to offset that. We are very well aware of what's going on in the world, and that could also affect these costs. And so we are watching that, and we will react to it as needed. Supplies and services. This, when we did this budget development, I had over 50 meetings with different departments on campus. And we went through budgets line by line, trying to just clean up, fine tune the budget, make sure that we're budgeting for expenses that we know about, budgeting for revenue that we know about, and also, adjusting budget if it hasn't been used in the department for a number of years. We also had the conversation of removing it from different areas too. My goal is to have a budget that's realistic, that departments can trust and operate from. And so that's one of the reasons you see a fairly modest increase in the supplies and services. The majority of that increase is our increase to our USM Foundation. Shared services, this is a line item where we pay back the system office for services that they have provided for us. Typically, IT, procurement, some of finance, human resources, legal, and you'll see that there's a decrease there. A portion of that decrease, just about $1 million of it, is compensation that is going back to the campuses in fiscal year 27. So that budget shifted from shared services to the personnel expenses. There was some non-compensation there too that went into the supplies and services, but very minimal. And then the amount that we're very grateful that the trustees also were able to help us out with there. Depreciation is an accounting formula that we're given. It's not surprising that depreciation went up. We also had some new buildings come online too that are factored into that. Interest expense, you'll see that went down a little bit, but you'll also see that our debt service principal went up. Just like with a mortgage, as you go through the amortization schedule, more goes towards principal, less towards interest over time. Maintenance and alterations, it's essentially flat here. We did just do some budget cleanup there, so very minor changes there. Travel, a modest $25,000, almost $26,000 increase there. That's budgeting for expenses that we know are increasing. We do have bus contracts that, have annual escalations too, that we make sure that we adjust the budget for. Other expenses and transfers, that is increasing $140,000. The majority of that increase is in our insurance. And then jumping down to the modified cash flow for the E&G budget, we add back the depreciation. The capital expenditures there, you'll see that increases $300,000. And you might recall earlier that I had mentioned, that last year's budget presentation, we also added $300,000. The campus is committed to trying to address our deferred maintenance. And so last year, we added $300 to our capital expense budget. For fiscal year 27, we're proposing adding $300,000 to it. So over 2 years, an increase of $600,000. It's still a long ways to go to where we need to be, but we're trying to be very methodical and take steps to address the deferred maintenance issue on the campus. The capital reserve funding that you see there, the $750,000, that's the repair and replacement funding on the new buildings that we had committed to the board on funding. And so we did that last fiscal year. We're going to do it this fiscal year. We're going to do it next fiscal year. So the $750,000 there is for the 4 new buildings on the campus. And there are separate reserve accounts for each one that will be reallocated into. The debt service principal here, the increase is, we did set aside just about $975,000 for anticipated debt service on the Gorham Art building that is now under construction. And I also added another $100,000, just set aside $100,000, trying to carve out budget for Roby Andrews. So Roby Andrews is a project that we know that we'll have to deal with in the future. And when we do get to that point in time, I just want to make sure that the campus has carved out the budget to cover that debt service. So that's our E&G budget. Our auxiliary budget, not as much change here. The tuition and fees that you see there, that $1,050,000, that's part of the comprehensive fee that gets transferred to our parking operation that covers student parking permits on the campus. The tuition waivers and scholarships is funding that we set aside to cover our resident assistant room and board waivers. And we adjust the number of RAs in anticipation of the number of students living on campus. So that's one of the reasons you don't see a significant increase there. Housing and dining. So you'll see that this is, even though we're proposing going up 4% on our housing and dining, the overall budget increase is about 1.4%. And that's because we're trying to be more conservative on our housing projections. We have a number of strategies in place where we're trying to boost or bolster our housing. And so, we're hopeful that we'll exceed what the budget is based on, but the budget right now is based on 93% occupancy, which we are very hopeful that that's a low bar being set. Sales service other. So the majority of this line is our parking and transportation budget and the university store. And we just made some adjustments there to set revenue budgets in line with reality. Personnel expenses. We did budget for the 4% increase here, but throughout the course of the year, we also go through and review positions that are funded here, and we did end up finding other ways to be more efficient here. So we did see some savings here in overall. Fuel and electricity, same situation is on the E&G side. We are currently not spending what we budget now, and our projections are showing that the budget is adequate, even forecasting modest increases for next year. Again, we are also continuing to monitor the macro global situations too that could affect energy costs. As I mentioned, I did set aside $100,000 for Roby Andrews that is just being parked there in anticipation of growing that funding over the next several fiscal years. And on a one-time basis, if I need to, I can also reallocate that if fuel and electricity ends up being more than expected. Supplies and services, we did go through this budget and we identified areas for savings too. But the majority of this cost here is also our dining contract. And so there were some escalations there that we did go in and budget for. Depreciation, again, is a non-cash expense item that's formula driven. Interest expense, you'll see that that goes down a little bit, but our debt service principal does increase. Maintenance and alterations, we did go through and true up the budget here and budgeted expenses that we know are going to be occurring next year. Travel, we've held flat here. In other expenses and transfers, we were able to go through this budget and also come up with some savings there. Okay, jumping down to the modified cash flow, capital expenditure is essentially flat here. And then debt service principal, we're budgeting for debt service principal that we know that we have. So this is our combined E&G and auxiliary budget, and you can see that fiscal year 27 is balanced. So I'm hopeful that we've demonstrated or explained anyways that this is based on what we know at this point in time, a conservative and realistic budget. And we, as I mentioned, we do forecasts every month. And that, having timely forecasts does allow us to address emerging concerns early so that we can catch them before they become a problem. The forecast have found to be very helpful too. It's allowed the campus to actually, even with a structural budget gap, it's allowed us to balance the budget the last 2 fiscal years, and we expect to be balanced in the current fiscal year at year end. Okay, our capital investments. So this shows that we are not investing in our physical plant the way that we should be. Just to lower our risk profile, we need to be at $17.1 million. And we are a long way from there. If I go back to this prior slide, you'll see that we're budgeting just about $4.8 million. And this is up $600,000 from just 2 years ago. And so we are trying to make efforts to get to that point, that we are trying to build up to addressing the growing deferred maintenance. It took many years to get to this point. It's going to take time to address it as well. And, sometimes the projects find us. So this is our capital plan. So we budget about almost $4.8 million for capital projects. It is a $300,000 increase over the current fiscal year. This is how we are proposing to allocate this budget. So one of our residence halls on the Gorham campus, Upper Class Hall, we are anticipating mechanical, electrical, and plumbing upgrades in that building. Philippi Hall, we are looking at some HVAC improvements in that building. Bailey Hall, this is our largest academic building on the Gorham campus. And you might recall earlier this year, the campus presented a plan to replace the building envelope on that building over a number of years. And the first phase of that project was approved by the board. And so we are continuing to fund that in anticipation that we'll be coming back to the board later to continue the following phases of that project. Corthell Renovations, this is one of our older buildings on the Gorham campus. And it used to house the School of Music. It now houses some administrative offices. It houses admissions. It does still have some practice rooms in it for music students who live on the Gorham campus. The building, just because of the nature of its age, it does need some work. And so we are setting aside $300,000 for that. The next 2 projects, these are projects that generally aren't visible to people, but if they stop working, everyone notices. And so we are trying to do some preventive maintenance to our central heat plants on the Gorham and Portland campuses. Portland, more recently, we had already done some work with, so that's why you do not see as much being invested there. Abramson Center, we'll be doing some HVAC work in that building, and so we are setting aside $450,000 there. Sidewalk repairs on campus. This is an area that we, being in Maine, the sidewalks take a lot of abuse. We have frost heaves, we deal with the climate. The salt and sand also do a number on them through the winter months. And so we do have sidewalks that we will go through the campus and try to address. Part of this too is trying to also make sure our campus is, as accessible to those with physical handicaps as much as possible too. So it's trying to address those concerns.
Excuse me, Justin, for interrupting. I just want to point out we've only got about 10 minutes left.
Okay.
Thank you.
Then our Lewiston campus, we are setting aside budget for HVAC. So I will turn it over to Dr. Arena now for enrollment.
Thank you. And I realize we're tight on time, so I'm happy to answer questions, but I will run through this briefly. Please just know that much like the leadership team goes through the budget line by line. We also go through the enrollment projections line by line. So this is all very strategic and conservative. Overall, we are projecting a 2.17% increase in credit hours from where we actually landed in FY26. And this really is a conservative increase in graduate growth, as well as an expansion of our online with an understanding and refinement of our program modalities. Thanks to the Chancellor and his leadership, direct admission through niche and through high school partnerships has really helped bolster our undergraduate enrollment. And we have continued efforts to improve retention. We're focusing now on second to third year retention after seeing some years with retention rates in the mid-70s overall. We also receive feedback regularly and have done surveys for our continuing and stopped out students. So we have a pretty good idea of where we need to go in terms of retention and undergraduates. At the graduate level, we are reviewing in-demand programs and adding cohorts whenever possible, given limitations like internship placements. For example, we are adding in our a new Masters of Social Work cohort, and we're looking at our Masters of Counseling Education to see if we can add more students there as well. Doing a better tracking of our undergraduate post-graduation paths so that we're making sure we're retaining our own undergraduates into graduates. And many of you know, because you approved it, thank you, our digital marketing analytics launched recently and has been successful for us. Trustee Riley asked me recently about the number of students that take online courses, and so I have put that in here. And Trustee Riley, you'll note this is a little different number than I gave you before. What I gave you before was just undergraduates, but 10% of all students are in online-only programs, but 60% of our undergraduates will take an online course in any given semester. Justin, if you want to move to the thank you. And this is a brief walkthrough of how we get to that 2.17% increase overall. We're expecting moderate increase of 0.5% in our in-state undergraduates. We've had the largest incoming in-state class in the last 4 years in the fall of 25, and our funnel looks even better this year. Again, thanks in part to direct admission initiatives with the Chancellor's leadership. We're also projecting a 6.4% increase in out-of-state and international undergraduates. And while that sounds like a bigger percent, it really translates to about 30 students. Our applications are up 13% and our deposits are up 31%. So we're feeling that this is still a very conservative number. At graduate level, we are projecting a 1.4% increase in credit hours. And we're looking for that to bounce back a little from this past year. We had some cohorts that are off cycle and now they're back on cycle. So that, along with our new cohorts in social work and digital marketing analytics, we know that this is also a very conservative increase. A lot more on my notes here, but I'm going to stop there for the sake of time and happy to answer any questions now or at the end.
Okay, Dr. Churchinsky.
Thank you. And I will also keep it short. Thank you for the opportunity to present. And I also will be presenting in April if you have other questions about our academic portfolio. But in a sentence, I would say that the academic mission at USM is excellence in the classroom and opportunity beyond. And it's hard to say any university in Northern New England or in public education is fortunate, but I think we are fortunate at USM to have a diversified academic mission that consists primarily of 3 academic portfolios. A graduate portfolio that is growing and generally serves the professional workforce of the region and state. We have a rich array of academic programs that serve traditional and non-traditional students alike in face-to-face formats. And we also have distance learning options that cater to degree completers that allow students to complete their degrees in most cases by simply completing the minimum accreditation requirement of 30 credits at USM. In my role as provost, my focus is primarily on academic excellence. When our president arrived at USM, she gave us an immediate charge to focus on the R's. In my area, the 2 core R's are retention and reputation. Those things lead inevitably to recruitment and all contribute to the foundational revenue of the university. So If you look at the slide here, I've listed a wide array of programs that focus on retention, recruitment, and reputation. And I'd be happy to answer any questions about how those programs are going, where we are in their implementation, or if you'd like, we can continue this conversation when I do make an academic presentation in mid-April. And thank you for your time and your public service.
Thank you, Adam.
Okay, and then in conclusion, I hope that you'll find that our fiscal year 27 budget is conservative and realistic. For fiscal year 28 and beyond, we are committed to continue to invest in our physical plant, work on enrollment and retention strategies, and build reserves. Our financial priorities, continue to become structurally balanced, which we hope to do at the start of, be completely structurally balanced at the start of the fiscal year 2029 year. Continue to build reserves and address deferred maintenance. So thank you.
Thank you. Questions? So Justin, let me ask one if I can. In the materials that we had at the meeting earlier this month, you included a page about sort of the profitability or lack thereof with respect to various academic programs. I'm not sure that's in these. You didn't talk about today. Is that in the materials that are in the book? I just can't recall.
We do not include that in the.
Okay. Could you that might be a helpful thing for us to share with other committee members. It's very instructive about which programs are breaking even, which aren't, and as we talk about financial stability.
Yes.
So we can get those out.
Thank you.
But other questions or other comments? Could you maybe also just talk a little bit about the electricity and fuel costs? It's a little bit scary thinking about that. What's our potential risk here if things continue to go downhill internationally and the price of oil even stays where it is now? How much extra?
So
how much
right
extra is
now,
that likely to be?
Yeah, right now we believe we have about just around a $200,000 buffer in our fuel and electricity budget. And so that does give us some room for, some unforeseen or unexpected increases in costs there. It's, the situation is unfolding day by day, and so we do continue to monitor it. And as I mentioned, we do have budgets set aside in anticipation of the Roby Andrews project that also can be reallocated if needed. And
how much is that?
$100,000.
Okay. I'm sure you're thinking about these things, but it just, when we're spending about $4 million, I think, on energy, the risk seems like it could be a big number.
Potentially. It's something that we're very aware of. We continue to monitor, and as a campus, we will, address it as we learn what the situation, how it unfolds.
And just one other question I have, and then others may have questions. Again, talking about Roby Andrews and the potential renovation, very expensive renovation of that building. You've got $100,000 put aside. Did I understand that there were other parts of this budget which might have an impact on those dollars, or not? Was that it?
That was it at this point.
Yep. President Edmondson, would you like to make some closing remarks or raise any other issues?
No, I just want to thank everyone for their time and attention to the details. I'm proud of the fact that we have presented a balanced budget, and I'm confident in the hard work that went in to bring us to this point in the process. So thank you.
Thank you. Thank you again for the excellent materials and the presentation. And if nobody has any further questions, we will end and even take an extra 5 minutes for lunch and reconvene at 11, oh no, I'm sorry. We're going to hear from the law school first. Pardon me. So thank you very much. And we'll welcome President and Dean Softly. Good morning.
Well, I thought I was about to get lunch, but it's lovely to see you all. Let me just start by welcoming Chair Riley to her 50s. It's good to have someone else who's maturing into her 50s as I have been. While we're thinking of USM, I just want to take a moment to congratulate President Edmondson, who is on the cover of Main Biz this week, with some very exciting information about how things are going on the USM campus. So well done, President Edmondson. And with that, let me say good morning to everyone. With me today is Nicole Vinyl, our CBO, COO, CFO, you name it, she's an O. And she is now our Director of Advancement, and she is joined by Amy Blaisdell, who is our Executive Director of Finance, and they've done some incredible work. I'm just going to launch right in and invite questions as we go, and Nicole will put up our first slide while I give you a quick overview before we get to the details. So today I want to talk to you about three things, obviously leading into what our budget looks like. First, I would be remiss if I did not address the budget of Maine Law without thanking the board, without saying to Chancellor Malloy, his vision for a thriving law school has helped get us where we are. Governor Mills and the Maine legislature have been incredibly supportive. And as you know, coming into this process, Ryan and Miriam and Carolyn and Jeff have just been amazing in helping us get to where we are. And my second point is where we are is in major and exciting transformation. Maine Law right now is a success story. And in the past, 5 or 6 years, it has gone from an institution which was possibly to be closed to just an extraordinarily thriving community state law school that is attracting national attention. And with regard to the budget that I'll be going through with you for the second year in a row, we will begin the year with a balanced budget. We will end the year, we're in this year balancing the budget, which is, I know that sounds like something everyone should do every year, but it's pretty extraordinary for this institution, which was limping by quarter. And we will close fiscal year 26 in balance. The transformation has moved Maine Law into the top 100 law schools in the country, and I'm confident that we are going to stay in that group. And all of this is enlivened by the extraordinary number of applications to Maine Law. So here's a number. As of today, Maine Law has received 1,400 applications for our 1L class. That is more than twice the number of applications received in the previous largest year of applications to Maine Law. It's really very exciting. But my third point is cautionary. We're not done. There is more to be done to stabilize the success here. We are where we have planned to be, which is good news, and I think puts us on the road to stability. But apropos of Trustee Alexandra's questions, we have one area of risk management that we are working on constantly, and I will talk to you about that in greater detail in a minute or two. So as we move forward, let's just go. You all know what our mission is. I am excited to say that we are all about quality, community, and affordability, which in today's federal atmosphere, where it is much more difficult to obtain the kind of student loans that students have received in the past, that affordability becomes critical, and people can come to Maine Law with that in mind and receive an extraordinary education. Slide. There we go. So here is where we are. We have gone from really a substantial crisis to excellence, so much so that we are being recognized nationally. We have a clinic that is providing close to 18,000 hours of pro bono legal work every year and is expanding in the next 2 years. And I have to say, I know you hear me talk about this facility all the time, but the transition from the old facility to this amazing building has just made all the difference in the world. And we are at the point right now where our faculty are doing amazing work, and we have stabilized that faculty, and everything at right today is going incredibly well at Maine Law. So our job now is stabilize and watch those risk factors, and we'll go through that as we move through the budget. Next, this is our brag sheet. It's pretty incredible for a small state like Maine to have a nationally ranked law school in the top 100. Our environmental law program is very exciting, and we draw many students for our public interest programs. Next. So let's talk about the financial situation as from a big picture. And I'm just going to be really fast about this, but I'm happy to talk about any of these aspects. Maine Law's budget is actually very simple. We do not have, as you have heard me say, we don't have dorms, we don't have a plane, we don't have the sports programs, all of the issues of management that my colleagues are dealing with. What we have is quite a different challenge that we'll get into later, but it means that the budget is very, very straightforward, and we'll go through that. It is the future budgets that are going to challenge us. I'm very excited that we have established a reserve account. I'll show you the numbers in just a second. And you're seeing the application growth and the enrollment growth to this year, 104 students in our starting 1L class, and we expect to have the same number in the class coming in the fall. Slide. Here is the most exciting demonstration of how well Maine Law has been doing. The admissions data is really exciting for 2026. As you see, the credentials of the students going up and our discounting rate coming down, which is a part of the trilogy of issues we have to look at to make sure that we can maintain this stabilized budget. Next slide. Here's the 5-year application data, just to show you this the top row. We are now officially at 1,400, where you're seeing 13, 16. The applications continue to come in. We have rolling applications. We have just an extraordinarily large wait list of students, and we are aiming at a class size of 104, which is the stabilized class size for the resources and the space that we have right now. Next slide. So many people have asked, what is it that has drawn so many new applications to Maine Law? And understanding that will help us measure what we may be looking at in the years to come. So I've done a little bit of a deeper dive here. You'll see that the national trend in applications up about somewhere between 18 and 20%. Right now it's running at around 15% because we do day to day, year to year. As contrasted with ours, which is up over 85% at this point. And the regional trend in New England is only 19% increase. So here's the question: why is this happening at Maine Law right now? And is it sustainable? What has brought all of these new applications? So we're seeing across the country a political climate. And as politics change over the decades, we see law school applications grow and then reduce. Right now, we're in a period of time where the applications are growing. We know there is a competitive job market, but it is really unstable. And we're looking at that much more closely. And there are all kinds of issues around AI and how it will affect other professions, including the law, that may be contributing to these additional applications across the country. At Maine Law, we believe that there are additional components that are bringing people here. And one is the quality of this school. So the increased ranking shows people across the nation that it is a quality school, the excellence of our faculty, our students' success, because that goes into that number. That is, do they pass the bar? Do they get good jobs? Those all go into that number, and that is impressive at a national level. The facilities draw people here. It's right in the middle of a thriving area of Portland. It's a very exciting place to have a law school. You can't underestimate how much that has improved the applications here. We also have a very strong commitment to public service, and we're seeing an awful lot of students who are very interested in that particular area. And then our relevant signature programs, privacy, cybersecurity, AI, all joining together with our environmental program and our wonderful, really thriving business program, have brought people to Maine Law, as have our rural access programs. So the clinic in Fort Kent actually brings people into Maine Law and brings up the applications. The other thing that brings people to Maine Law that we don't want to underestimate is its size. So we are aiming at a law school size of 300 students, about 100 each class. That allows very personal interactions with faculty, with staff, with the local bar, with the local judges. We just had the state Supreme Judicial Court come and meet with all of our 1Ls. The very personal environment at Maine Law is a very big draw. And of course, the state of Maine, my state, draws people in because it's a beautiful place to live. Next slide. So you've seen this chart before. We try to update it each year. We've got another update, but I'll just take you through this one very quickly. As I've indicated previously, Maine Law's tuition has stayed quite low as compared to its competitors in New England. And we've been talking about the fact that that of course affects our ability to bring in resources. So we are, in fact, raising tuition this year. We'll get to the numbers in just a second, but you can see even with these, even with an increase in Maine Law's tuition, we are not close to any of our New England competitors. And if you look at places like Suffolk and Northeastern, we are about half the tuition that those schools are imposing at this point. And that will begin, we will inch toward changes, but we want to keep Maine Law affordable. We want to keep it at a community school. So a little bit at a time is where we're going right now. Okay, next slide. So here is where we are proposing to go with resident tuition. The percentage of students who are Maine residents coming to Maine Law runs at about 60%. There have been some aberrant years, but most of the time, about 60% of our students are coming straight from Maine. Here is the tuition we will move to. And for this first year, we are now eliminating the changes year to year, and the tuition will be identical for each of the 3 years. And that you'll see that we have been moving toward that incrementally, and we will reach that in fiscal year 27. Okay, next slide. And here is where we are moving. There will be no more differential tuition on admit year. Maine residents will be at $27,150. non-residents at 39.6, and the Nebbies at 34.3. With non-residents under 40,000, again, we are highly competitive on the tuition front and very affordable for out-of-state students. Next. This is just a breakdown of the changes from year to year. So previously, we had differential tuition each year, which was not good for anybody. We're fixing all of that. We've been doing it, as you see, incrementally, and we will now reach that for all classes going into fiscal year 27. Next. This is a good indication of Maine Law's draw from across the country. It's always interesting to see where we're bringing students from. We have a lot of students from Texas, which is lovely. And of course, throughout the Northeast, we now, because we are offering in-state tuition to Alaskan graduates who are looking to go to law school. Alaska is the only state without a law school. And we are now drawing more and more Alaskan students each year. And so far, the Hawaiian students seem to be happy with Hawaii. So perhaps in the years to come, we will draw in some Hawaiian students. Okay, next. Here's the budget. And as I say, it is very straightforward. 75% of the Maine Law budget is people. That's no surprise to anyone. The expense budget, as you see, is very straightforward. And the most exciting thing about this page, which I get excited about until I hear from my colleagues, is that if all goes well, as we conclude this year and go through fiscal year 27, we will have a reserve account of $41,000. Now, some of you have heard me say that my colleagues make fun of me. They're all talking about reserve accounts in the millions when things are going well for them. But this will be the first time we have gathered reserves, and we are working very hard on creating reserve accounts so that Maine Law can have a buffet against whatever is coming down the road. And we are looking at a lot of potential changes that are difficult to anticipate as we move down the road. Okay. Questions here? I want to stop because this is the critical budget page. Yes, Trustee Kane.
Thank you. This is a great presentation, very straightforward, as all of your budget presentations are typically, but there's sort of this undercurrent of we are awesome at Maine Law, and so many people want to come to us that we have record applications, and we don't see and hear like and here's how we're going to get more of those people to come. That's like, I want to just ask that question because it's not a here and now question, but it is sort of because this is awesome. I mean, we got a lot of people who want to be here from as far away as Alaska, which is almost as far away as you can get from us. And you got awesome opportunities and affordability. I think the question I have that comes out of this presentation, which maybe is for another day, but is there a growth opportunity in here as well?
So I'm so glad you asked. Right now, we have resources that are sufficient but a little strained for the 104 students that we admitted last year and that we hope to admit this year. I'm pretty confident we'll hit the same number this year. My biggest fear is that more students will actually ultimately decide to come to Maine Law, and we will not be ready with the resources. So this question, should Maine Law grow? It is really 3 or 4 different questions in one. The first is, if Maine Law has the opportunity to bring in wonderful students at higher numbers, so going to 125 or 150, what is the cost? How do we prepare to receive those students and provide a great education and keep the success rates of our students high. And that means more faculty, more space, much more in the student support area. So we're actually going through that analysis right now. That's the sort of hard cost analysis. If we grow, what do we need to meet the students at the door? And we'll have that analysis in the next month or two, so that we'll be ready for the following year. We could not this year expand the size of the class successfully without substantially more resources. So we would get ready for those hard cost issues. Then there are the soft cost issues. What do you lose if you take a very close-knit community school that's been very successful because it is a relatively small institution, and enlarge it? And then you start to, the classes all, of course, have to be separated. You need much more space. You start talking about differences in your capacity to bring in the bar, the court. There has to be multiple, all of the kinds of things that change a small school to a moderate sized school. You need to talk about, is that a great idea? And then the third thing that I'm looking at, and this I think we can talk about at much greater length, this is where I think we get back to what Trustee Alexander is looking at. The risks here in over estimating what we will see in the years to come are large. The last thing you would want to do with a school that has found success and has done really well by its students is 3 years out to be larger than you need to be and to be looking at retrenchments. So we are looking at, for example, the roller coaster of applications to law schools over the last 20 years is pretty substantial. It goes up and then it crashes and then it goes up and down. So we're looking at, just on a general basis, where are we in that cycle? We are also, one of the things that graduate schools and law schools very much in particular have to make sure we're paying attention to is the demographic cliff that is just now affecting our undergraduate institutions. So in a year or two, and certainly in 3 years, the number of people coming out of colleges and universities throughout the country will be smaller. We're seeing that already. What does that mean about the number of people who apply to graduate schools, including law schools? Is that going to affect it? And then, of course, you have all of the issues around technology and AI. Are people going to turn to different professions? Are we going to have the same number of people looking to become lawyers? And what does it mean for the state of Maine? Right now, we know the state of Maine needs lawyers, in great contrast to 15 years ago when everybody said the last thing we need is more lawyers. We now know that lawyers are really important for a thriving economy, for access to justice, for all of the business issues. So we know Maine needs lawyers now. Do we know how many more the state of Maine and other New England states can absorb over the next 4 or 5 years? All of those trends we're looking at as we think about the out year. So this is much more than you wanted to hear, Trustee Kane, but it is, we see this extraordinary increase in applications as an opportunity. One of the opportunities is to improve the credentials of Maine law, which means that as those credentials go up, the success rates go up, and Maine law's quality and excellence goes up. So there's that issue. But then should we expand the class itself? We will know better, I think, within the next 3 to 6 months what the trends are going to be looking like. And by that time, we will have a full fiscal analysis of the costs of actually expanding the law school. Chair Riley.
Just one more thing, if I could say,
sorry.
Emily, thank you for that question. It was an important question, and I want to get a transcript of what you just said because it's really refreshing and important to hear your perspective on what's happening and what the risks are going forward. So thank you for thinking that deeply. Chair Riley.
And for your fiscal conservatism. I was struck, Lee, it looks like when you do the comparatives across law schools, that our real competition is Northeastern. I mean, that's in terms of quality and the LSAT rates, and that's pretty impressive. And I'm wondering,
it's very exciting.
to your point that, growth brings with it risks, which I fully understand. And given how much you rely on state appropriations here, is there any appetite, or what would it do to enrollment, given those numbers, to raise tuition more than you have?
Well, so that is, of course, one of the factors that you would have to insert. Right now, I'm going to give you a rough number, and Ryan will correct me at some point. The state appropriation that supports Maine Law is about 44% of Maine Law's expenses, and I haven't included center expenses there. So Ryan will have a full analysis of that. There is clearly room for us to raise tuition, and I will be arguing to you each year that it's going to be important for us to keep that tuition moving upward, because there's a reputational issue to tuition that is simply too low. People will look at that tuition and assume that the quality we are talking about is not as strong as they're thinking. So over time, we need both to cover costs and to address that issue of tuition. And we will be moving toward the 30,000 level for our in-state tuition, and then looking at out-of-state tuition as we go forward. So the answer is yes. This year,
why not in this budget is my question.
In this budget,
what you might get your reserves up to 43,000.
Would be so exciting. So our tuition has moved up 4% for the incoming class, for what it would have been, for the 2L class, and more than that for the 3L class. If we go much higher, we really hurt the students who are here right now. And what we will do at the end of this fiscal year is assure that steady tuition across the board, so that when we determine that we want to bump up across the board, we can let everybody know as they are applying. And we are looking toward that, probably moving us toward 30,000 a year for resident and in-state tuition to assist with all of those costs. Absolutely something we need to continue to look at, but I think we need to do it carefully and fairly and get everything in order as we start to move up.
And so the 3Ls, once these 3Ls are gone, then everybody experiences the new tuition policy.
Exactly. That's exactly what we're looking at.
Other questions? Go. I don't think you were done.
Okay. All right.
Go forward.
You were hoping I was.
No, not at all. We want to hear from Nicole too.
So this is just a quick check on every year, actually several times a year, I sit down with the chancellor and go through, here are the things I really want to accomplish in the next year or two. Here is where we are. We've done really well, I think, getting addressing the tuition discounting commitments. We're hoping that actually comes in right on target. We have stabilized faculty. We are working on stabilizing our staffing. We are expanding the clinic staff, which is just, I think, wonderful for the state of Maine. And we have been able to consolidate our advancement work into a director of advancement who now has even more initials before her name. Our continuing priorities, and one of the things you're not seeing here is we are looking very hard at our staffing levels, which you've heard me say are not sufficient for this class of 104 students. We need to do better by the students, and we need to do better by the staff. So you'll be hearing from me about that. We have a whole lot of amazing signature programs that really need additional support, additional faculty support. So we'll be looking toward that in the future. And we're all working on making sure that the fiscal relationship with the Maine Center is a bit clearer in the years to come. And part of that is a comprehensive fundraising campaign that is necessitated by this extraordinary gift from the Alphons. So those are the things we're working on as we move forward. Next slide. And here is some great information. With Nicole's help, we are really doing very well. As you know, we have launched a campaign. We're in the sun. I never understand these language issues with advancement. We're in the silent phase of the campaign, and silently, we believe we've raised just over $3 million, which is just wonderful. When we get to the point where we have raised about half of the planned 10 million, we will go into the noisy phase of the campaign. But part of that is happening right now. We are traveling. We're out in the world visiting with our alumni and getting a wonderful response from them, as you can see from all of this. Next slide. Here's our endowments. Now, I don't see President Farini Mundy on the screen because our endowments don't quite compare to how well the University of Maine has done, but we are beginning to get recognition from both our alumni and from organizations that have benefited from the wonderful graduates from Maine Law. So this is all great news. Next slide. And here's how our endowment is working right now. I keep looking at the market, and I know that Ryan has done this for years. I get up in the morning and look at the reds and greens, but it's doing quite well. Next slide. This is the IR enrollment data, which works much better for campuses that have many, many students. As you know, our students vary between 80 and 104 students coming in. And we're pretty much right on track with IR every year. We're predicting an increase of a grand total of 407 credit hours more than IR would predict. But I think we're on target and we're doing fine there. And next. And here are the credit hours going up as Maine Law's national and Maine reputation have increased, which is very exciting. We just keep finding wonderful ways to work with these students. And next slide. This is a really critical chart, and I'm just going to tell you I'm concerned about all of this. Our students have left Maine Law with among the lowest debt of even looking across the board nationally. Currently, we're showing about 73,000 in debt as they leave, which compared to national averages is much lower. All of that will be affected to a certain extent by increased tuition and lower tuition discounting or available scholarships. And all of it will be affected by the changes at the federal level with maximum borrowing capacity. And we're looking at that every day. We're tracking through trying to figure out how can we make sure our students can come to Maine Law and not be saddled with enormous debt when they leave. So many of them go into jobs where they are not going to to Wall Street. They are working in Maine, doing incredible work, and some of them are stepping right out into privacy law, where the salaries are amazing. But we want our students to have every option. And to have every option, we need to make sure they're not buried with debt. So we're working on that. Chair Riley.
Very important point. Just curious, what percent of graduates have debt? Is it 100%? Is it 50% of any kind?
It's around 75%.
75, yep.
Yep.
No other questions? Next slide. Here is each time we go through the budget, we make sure that we are attaching everything we're working on to the commitments that we have all laid out in UMS's strategic plan. And so you'll see this at the end of our budget slides each time. We are focused at Maine Law on making sure our students pass the bar and get good jobs. And that there are a million different things that go into those two key performance indicators. But those indicators tell us how we're doing on those myriad issues as we go through this. So you'll see it in every aspect of our addressing the core commitments. Next slide. I think it's the remaining commitments. And the innovations going on at Maine Law right now are just as exciting as the foundational aspects. With the Business and Law Clinic launched in collaboration with Maine's MBA program. It's really very exciting. It is, interestingly, a one of its kind, although a lot of law schools have business law clinics. They are all law students. And here, our Business and Law Clinic involves both MBA and our students at Maine Law. The Rural Practice Clinic collaboration with UMFK has shown us that our faculty working with undergraduate faculty create courses that students really enjoy and connect students both ways. So we're very excited about all of that, and we're about to move into a new phase with that clinic. And we're working, I as always, want to say thanks to President Farini-Mundy, who's just been wonderful. Her folks have helped Maine Law move into the system on issues around grant assistance and environmental collaborations. And so I'm grateful to everybody for all of the collaborative work that we're doing. And I think what we didn't get onto this slide is the new Criminal Justice Clinic, which we are again working with the University of Maine folks to make sure we've got all the funding set up correctly, and hope to be moving into opening that clinic in the very near future. Next slide. And there is Finn. Thank you. I know I talked kind of fast. Happy to answer questions.
Thank you for your presentation, as always. Questions, Trustee Michoud.
Yeah, thank you very much, Mr. Chairman. Thank you very much, President Softly. It's a great presentation, as the others. I'm very excited about the business clinic, because I know that sounds similar to what was done years ago at the university with, I think it was called the Knowledge Transfer Alliance.
Yes.
And
Yes.
actually some startup businesses are very excited about it, because I've been giving out the brochures, and I know they've reached out to your folks. And so I just want to commend you and the staff that put this stuff together, because it definitely will help out the small business, particularly in rural areas that really need the help. So thank you for the initiative.
Thank you. That's wonderful. We are always looking for entrepreneurs and startup businesses to be of assistance to.
Thank you.
Dean Softly, could you talk just a bit? You mentioned the Maine Center, and as we are now buying the building, I know this is very complicated. your relationship there. Are you a tenant? Are you going to be a tenant of this main center, or are you a co-conspirator, or what's your role there?
Unindicted co-conspirator, please. So at some point, I'll bring Ryan in on the building piece. The university will be buying ultimately the building, including the dirt. So the fee all will be in one place. When the university owns the building, it is the main center that is expected to be the building manager. The center is now in the process of, actually, I think all the bids are in, and construction on some of the new pieces is underway. We are in the building. I think tenant is the wrong word. So Maine Law is now situated in a building that will be owned by the university system and managed through the center. And as you know from ABA standards, Maine Law has to demonstrate to the ABA that it has primary control over the spaces of the legal institute itself. We are working with Seth around all of those issues going forward. And there is a shared services component from the center to both the law school and the University of Maine, and I think ultimately possibly to UMS, but not now. And that shared services component, we're still talking about what informs it and how we will all budget it and what it does with all of us. The more politically, with a small p, difficult issues we are working through right now, and you've all seen it, so I'm just going to say it out loud, is trying to figure out how in a building that is owned by the system, managed by the center, but provides the only home to Maine Law, how do we do signage that reflects the Alphonse Extraordinary Gift and at the same time makes it clear that this is Maine Law? This is a very important place for students coming into Maine Law. So signage and they call it wayfinding and all of those we're working on right now. And I would just turn it over to Ryan to see if I have used any of the wrong terms along the way.
Perfect. Nothing to add. No.
Thank you. We've had this discussion before. I just wanted to make sure the committee understood the complexity of the situation there.
Can I just do a follow-up, Roger?
Please.
In a sense, once we own the whole building, what percentage of the footprint is the law school versus the rest of the building? Are you 50%? Are you?
It'll be once the whole building is owned and renovated, Maine Law will exist in a little bit more than 50% of the entire space. So right now, where we are probably 50%, there is a new classroom anticipated in the new space, and there is a new space that is clinic, that is the business and law clinic shared by the University of Maine and the law school. So getting into square footage, I think it'll be slightly more than 50% when everything is online. But that is, it understates the value of all of the new space that will come online, because that new space will allow a whole lot of the collaborations, presentations, gathering, all of the kinds of things that we've been talking about through this Alphonse gift that the Chancellor and President Farini-Mundi anticipated going forward. So all of the community gatherings, all of the work between and among business, engineering, Maine Law will be augmented by the space that is now being renovated, a floor at a time. I think 2 floors are under renovation right now. And again, Ryan, Gretchen, I welcome your thoughts.
That's accurate. We have 2 floors currently under construction, which we're very excited about. And I think in terms of the square footage, we can follow back up on that, but I think you're fairly accurate, President Softly. And there will be access to shared space as well. So even with the law school having assigned space for the law school, there's still like conference rooms and that gathering space that people in the main center will have access to, including the law school.
Great,
Thank
thank
you.
you, Fred.
Thank you very much. Are there other questions for President Softly? I am not seeing any, so thank you very much again for your wonderful presentation. And we'll now take a break for lunch, and we will reconvene right at 12:45 with the University of Maine at Farmington. Thanks. Okay, everybody, welcome back. And we'll pick up on our agenda by moving to the University of Maine at Farmington. And the president is with us, I believe.
Yes, I am. And I'd like to
Welcome, President
welcome-
McDonald. Hi. Why don't you
Yes.
go ahead, sir?
Yeah, I'd like to welcome you to the UMF budget presentation. I'll provide overview and discuss programmatic matters, and Lori Gardner, our Chief Business Officer, will go through the numbers for you. So let me begin. First, to provide some just overall context, just 2 years ago, we had a $2.6 million deficit that we have reduced to $650,000 projected for this year. Just to give you context, I mean, UMF is primarily a residential university. We fill a niche in Maine for students who do not see themselves going to Portland, to the big city, or to a large university like University of Maine. But we're a small university that is attractive to a certain group of students. And I can say that when I look at the active matriculates for this year, so far, we're up 15% over last year, and we're up 41% over the previous year. So we are fulfilling that niche. But with the demographic decline in high schools, we've embarked on what we call a barbell strategy. On one side of the barbell is our traditional residential undergraduate university, but on the other side is online programs for adult completers and graduate students. And that has been a successful strategy. Our adult completers are up 38% this year. Mostly ed techs, mostly in education, which is really our reputation in Maine in that area. Graduate enrollment is up 14%, and we've added new programs. And those programs, those graduate programs, are in education and in counseling. So they're very, very focused. And our transfers are up 28% this year. We have more than 60 articulation agreements with community colleges and dedicated admissions counselors. So that's really helped bring in those transfer students. We've also moved forward with the Your Pace program. We now have 2 majors, 4 certificates, 43 classes, and we're growing. But this is not a program where we can require faculty to participate. Everything is voluntary. And these programs have not yet shown their potential. You know, we're in the early stages, and we anticipate that we will see far more revenue from these programs as next year and the following year, and we will be adding to these programs. The other thing I would say is that we're seeking to get more students to live on campus by requiring both first and second year students now to live on campus. We did a study to determine whether we should convert one of our dormitories to adult housing, senior housing, a hotel, and really came to the conclusion that the best thing for us to do is to get more of our students living there, which is why we moved to sophomores on campus. We're also, reducing our energy costs. We're basically a fossil-free campus, and that has helped. I will say that we have headwinds, or as Trustee Alexander would say, risks. We have too many faculty in low-enrolled majors. This is a legacy problem dating back 15 to 20 years. So if I just take one program like math, we have more faculty than we need in math. The youngest faculty member in that program has been here more than 21 years. So you can see that these are decisions that were made a long time ago that we are now dealing with. We have reduced faculty by 33% over the last 5 years. And our residential campus is going to need more full-time faculty than online programs where it's easier to use adjuncts. But still, we have areas where we need work in this area to reduce faculty. On the expense side, the increase in compensation from one year to the next because of the 4% across the board is adding an additional $600,000 to our budget. And then we, of course, are still dealing with the $650,000 projected deficit this year. That's baked in to our budget. Now, these are offset somewhat with an increase in appropriation, an increase in tuition, and an increase in projected credit hours for some of the programs that I already mentioned. We have been freezing expenses, operating as frugally as possible, but not spending, in certain areas like marketing is a little bit of a headwind, because the more marketing that we spend, it would help with the credit hours. So that's that cuts both ways. And in terms of attrition, we're counting on attrition. When there's ever a position that is vacant, there's a lag before we hire back, but attrition is somewhat uncertain. So that's it's a brief overview of the situation that we have, both on the very positive plus side and also recognizing that we have headwinds. So Laurie, why don't you take it from here?
I certainly can. So let's just look at the big picture to start with. Here's a high-level summary. On the educational and general side, we're projecting a total revenue of $33.1 million against total expenses of $34.9 million, which is a net operating deficit of about $1.8 million. Excuse me. However, when we apply the modified cash flow adjustment, adding back approximately $3 million in depreciation and subtracting about $1.2 million in capital and debt service E&G balances. On the auxiliary side, which is housing and dining, the picture is stronger. $8.7 million in revenue against an $8 million in expense budget, yielding a positive operating result of about $694,000. After the modified cash flow adjustments, auxiliary nets a positive of $91,000. Combined, we're at a positive $91,000. So if we separate these out and let's drill into E&G. So our total revenue has grown 5.1% from $31.2 million to $32.8. That's driven by an 8.4% increase in net student charges revenue and state appropriation that includes support for UMS 08 employees that have been moved back to the campus. Indirect cost recovery is down about 18% as a result of grants we have lost, and additional grants that we get, they cap their overhead. Total revenue is up about 5.1% or about $1.5 million, reflecting our current enrollment growth strategies. On the expense side, personnel costs are up 5.7%, largely due to contractual salary increases and adding UMS 08 employees back to campus. This also includes attrition. Other expenses and transfers increased by 3.3% or about $348,000. Supplies and services increased by 17.7%, which in part reflects an investment in advertising and additions for the UMS 08 operating budgets. Shared services costs decreased by 21.5% or about $918,000. Again, that's moving the deck chairs. It's moving UMS 08 back to UMS 02. We had a gap that was reflected in the previous year, and it has become part of the work for FY27 when we remove the unassigned budget line. The transfer line includes an estimated transfer to UMPI for CBE support. It reflects a decrease in early college and a reduction in support from fundraising. Overall, operating expenses are increasing by 5% from $33 million to $34.6 million. The operating deficit of $1.8 million, and after the modified cash flow is applied, the budget is balanced. we move to auxiliary, it tells an encouraging story. Overall revenue is up 10.4%, driven by strong increases in both dining and revenue. It's up 10.2%, and residential revenue is up 12.9%. That's a direct result of our decision to require first and second year students to live on campus, which has improved housing utilization. The 26.3% increase in tuition waivers is a result of the number of students taking advantage of a Be Home waiver for local high school students, and also a small incentive for current first year students to return in the fall, as they were not recruited under that particular requirement. Expenses are growing at only about 0.4%, significantly below revenue growth. Fuel and electricity costs are down 15.5%, thanks to the ESCO work that we've done, and that we were very wise in locking in rates for multiple years. So we locked in rates a few years ago, which were resulting positive results for us now. Supplies and services is up about 14%, which includes the dining payment that we make to Sodexo. Depreciation is down 26.6%, as some older assets have been fully depreciated, and other expenses are down about 20% with a removal of cable TV for the residence halls. The operating surplus of $694,000 is a $532,000 improvement over FY26. And then after we do the cash flow adjustments, auxiliary produces a positive surplus of just over $91,000. We move to key drivers of the budget and we look at enrollment. Joe, I'll turn this over to you.
Yeah, well, we're driving it with this barbell strategy on both the residential side, making the residential community more engaging, and we're doing a number of things there to do that, including focusing on career development, fostering teacher improvement, really getting our faculty to be great teachers. I think it's a strength that we have, but we're really doubling down on it. And we're also looking to revitalize Gen Ed and make that more attractive to students by allowing them to take a Gen Ed minor. That's still up for discussion with the faculty, but we've got it out to students now to vote on it. And in discussing it with students, they thought that was very, very positive. And then, of course, on the other side of the barbell are all the programs that I had mentioned. And we've got a new master's degree in education, which we think will be positive. We're going to get more grad certificates, one in marriage and family with our counseling program. We're trying to bring a art education program to campus, which is really mostly for our art students to make our art program stronger, to give those students a career pathway. And then we'll be moving forward with more CBE courses. Retention is a strong point for this university. We've really made a concerted effort on that front, and I think one of the areas in which we're doing it is our Learning Commons, where we have students tutoring other students, which is a great program for the tutors and those who are being tutored. I think those are the highlights. As we see, the credit hours are increasing. Very positive sign there. So partly as a result of the new programs, but we're seeing students who are coming out of high school now that are several years beyond COVID as being far more engaged, far more ready for college work than we saw just a few years ago. And those students are more likely to stick with it than students who had their high school years disrupted by COVID. Those students came in woefully unprepared academically, emotionally, and socially. So this has been a positive year, and I expect next year to be the same. In terms of our current programs, I mean, education are our strongest programs, and that's where our reputation is. And that's, by far the identity of this university. I mean, psychology is also a big program. Business is a big program. Creative writing are, relatively big programs. But of the 36 majors that we probably have 5 majors that are of size. And those would be education, psychology, business, creative writing. Those would be all the others are really much too small and should be more interdisciplinary. We're moving towards that. We move that in that direction with music. We've moved in that direction with theater. We would move in that direction with other areas, but we have more faculty in those areas, so it becomes harder. But a lot of those faculty are spending too much time in Gen Ed, and we want to pull them from Gen Ed to get them into other programs such as YourPace. But of course, that's all on a voluntary basis. So we're pushing, but we don't have the authority to actually reassign. In terms of cross-campus collaboration, we have some very positive collaboration that takes place. Certainly the biggest collaboration that we have right now is with UMPI in the YourPace program. But there are other opportunities. We're in discussion with UMA on using our math faculty for an AI program that Augusta wants to begin. We have our nursing program in conjunction with Augusta as well. And then we have a few other programs, even our art education program that we're trying to get through would be in conjunction with UMPI and USM. So we're very much open to participation and cooperation. And when it comes to online programs, we have these strong programs in education, but we have not jumped in other areas because that would be a direct competition with our sister universities. And that's something that we don't want to do. On the other hand, that puts us at somewhat of a disadvantage because running the online programs is more lucrative than running a residential program. Okay.
So let's take a look at our 10-year credit hour enrollment. This chart shows our 10-year trajectory. You can see the decline in in-state undergraduate credit hours from 43,600 in FY17 to a projected 17,100 in FY27. This is the demographic and the market reality that we're operating in. But let's look at what's replacing it. So graduate credit hours have grown from about 2,500 to over 6,300. UMF Online, which didn't exist before FY26, is projected at over 10,000 credit hours in FY27. This is the result of the barbell strategy that President McDonald just spoke about. CBE has 288 subscriptions, and at this time, we're projecting nearly 40,000 credit hours for FY27. With a diversified revenue mix that's far more resilient than the ones that we had a decade ago. Fall headcount is stable from fall of 24 to fall of 25, and the actual FTE has increased from fall of 24 to fall of 25. But I do want to underscore that we are actively reviewing these estimates and will bring changes forward as needed. As we were building these credit hours, this is how we did it. So we started with our base projections, and then we layered in our outdoor recreation and business administration degree, which is we call ORBA. It's a grant that we have, and there are enrollment goals associated with it. Strategic plan growth targets across 5 priority areas, and credit hours associated with the 288 CBE subscriptions. The combined total is just over 41,000, excluding early college. If I remove CBE from the mix, the total credit hours budget is 39,373. Again, we're actively reviewing these estimates.
Lori, could I interrupt for?
Absolutely.
This confuses me a little bit. The projections to build.
So those were our projections based off of what we received from the system. So we made some modifications to those system adjustments. And we're in the process of re-reviewing those and seeing what the impact is.
There's a 26,000, almost 27,020 was your 27 estimate.
Correct.
Has it been reduced to 16,599?
16,500 plus the 210 plus the 192. So you can see going across for in-state, 16,500.
You have significantly reduced your expected enrollment.
Yes. Mm-hmm. But we also did online. So the result of online enrollment is mostly made up of in-state students. So we added 9,995 credit hours to the online. So you add those two together, it's about a $26,000 credit hour, which is on par with what the system came up with.
And the confidence we have that we can reach almost 10,000 online in this budget?
I think I am at just over 8,500 credit hours right now online for FY26, and that we haven't even touched summer yet.
Right.
So
thank you.
Okay. You're welcome. Joe?
Lori, let me jump in with another question.
Oh, sure. Sorry.
To follow up on Chris's. I'm sorry. Could you just put that slide back? Yeah, thank you. So the online 9,900 credit hours, those are delivered by what faculty? Your faculty?
Yes. Joe?
Yes.
Yep.
Okay, thank you.
Yep, you're welcome.
So I guess we have to when we first had our first meeting, there was a 9 or 7% increase in enrollment, and so that's been adjusted here because you've moved more into, I saw that you built in attrition, but you built more into online. Is that the answer?
No, we have not changed the top line. I think the only thing that's being changed is the total number is the same, but we're moving more of the courses from in the class to online.
So what percentage of, you're still expecting an increase in enrollment?
Yes.
And what's that percent?
And well, in credit hours, the increase in this budget is the same as it was when we met earlier, which is 9%. Now, we're going to look at that and that's an aggressive number. There are programs that are in place to justify it, but there are also headwinds that could throw that off. The question is, if we came down in credit hours, could we come up in something else that reduces expenses? That would be the trade-off. Otherwise, we would be continuing to have deficits.
And we're actively reviewing that right now.
So, retention is a big part of our strategy. To see students come and then to see them leave is, what we're trying to prevent. So this is why we have this big push on tutoring, which I think has been extraordinarily successful. transfer programs are successful. Our early college program, especially in education, has been very successful in terms of creating a pathway in for students who are interested in, particularly interested in the pre-K area, the early childhood. And then adult degree completion is building on our relationship with school districts, and because they have the confidence that we can turn their ed techs into teachers, and that confidence has boosted the enrollment in that area. So that's that's our strategy, and thus far it's working. Whether it works so successfully that we can get the numbers that we're hoping, I don't know, but we certainly know the strategy itself is working.
So let's shift gears. Just go ahead. I'm sorry.
Yeah, let me ask another budget question if I can. And first of all, I think I and all of us are well aware of the significant challenges you're facing there, and all of your efforts to fix it over a number of years now, which do not go unnoticed. But I want to ask a question about the balanced budget. And Ryan, a question for you, I guess, was the expectation that each of the campuses would produce a balanced operating budget, or a balanced budget after modified cash flow was taken into account?
Yeah, our position forever has always been after modified cash flow is taken into account. That's been our position going back to the early 2000s. I referenced it earlier in the meeting, at different times the board has set where we really deviate is depreciation. You've seen that a couple of times. We don't fully fund depreciation. And so the board, back in 2010, 11, 12, tried to set targets for the campuses. This year you're going to fund 80% of depreciation. Next year it's going to be 85 and 90. So we were consistently upping what we were doing, and the campuses were going in the opposite direction in what they could fund. We were set 90 and they would be at 42. So we moved away from that, acknowledged that we weren't going to be able to fully fund depreciation overnight, and went to the strategy that I referenced earlier in the meeting, which is around 2014, 15, we looked at what the campuses were spending in deferred maintenance, in facilities, and then we said that number needs to grow on a consistent basis. It needs to grow by at least 5% every single year. So that was the strategy we took. So we've always had the modified cash flow. We always make that exception.
Okay, thank you. Please go ahead. Thanks.
Oh, sure. Thank you. So let's look at residence halls. So residence life is an important part of both our student experience and our financial model. FY27 capacity is at 783 beds with budgeted occupancy of 694. Proposed rate changes are modest this year, 1.4% for room and 3.26 for board, with an overall increase of 2.51 or $275 an academic year. This year, we updated community themes, included adding a community for athletes. We achieved the highest return rate ever recorded for FY26, which was 73%, up from a historical average in the mid-60s. These are the students who are here in one year and come back in the next. So Mallett Hall reopened in the fall of 25 with updated infrastructure. For FY27, we're taking Lockwood offline. We're repurposing its focus to be to working with our local school district to provide international student housing for them. And we're implementing a first and second year student live-on requirement, which will improve housing utilization. We've reorganized the student life department. We're recruiting a new director, and we've had leadership turnover in Sodexo, which has started to improve satisfaction across the campus.
Lori, can I interrupt again?
Yes.
With another question? So the requirement that second year students now live in the dorms. So last year's freshmen, For now, do we have any indication of how this year's freshmen are reacting to that in terms
The
of
ones that we're
coming back next
recruiting,
year? Well,
ones that
no.
we're
So
recruiting. Oh, our current.
that requirement that sophomores have to live in the dorms is going to go into effect, or it already has.
It will be going into effect for fall.
Yeah. So this
So it's
year's
the
freshmen.
current. Yeah.
Do we have any idea of how this
we've
year's
had
freshmen are
we've had a little bit of pushback, but for the most part, the return rate seems to be holding strong.
Okay. Thank you.
You're welcome.
And of course, next year, all the first year students who come in will know that first and second year are on campus at this university. So this year was, transition year because we didn't tell the first year that they had to be on campus until we actually, looked at our numbers and said, this is really what we need to do to be fiscally responsible. So yeah, there'll be a little bit of pushback, but it really hasn't been as great as some people feared.
Just noting the 10-minute warning.
Yep. I was just going to jump. So FY27 cost of attendance. Here's a sample cost of attendance for an in-state student taking 30 credits. It increases about 3.1% or about $733, which goes up with our tuition increase, room and board increases, and then our discount rate is just about 25% for last year. Financial aid strategy is built around strategic awarding that maximizes the impact of every dollar. So the FY27 institutional aid budget is about $3.9 million, up about $260,000 from 26, and our average discount rate is about 25%. More importantly, 27 is the final year of our merit transition. Back in FY23, we overhauled the legacy merit program and implemented a new tiered structure based on GPA bands. This year, the last cohort with legacy awards phases out, and we've shifted from a heavy merit-only approach to a balanced merit plus need model, which has improved yield rates and provided more equitable aid packages. On the need-based side, we've increased institutional grants, launched the UMF Promise for Pell-eligible Maine students, and continue to work to maximize federal programs like Pell Grants, SEOG, and Federal Work Study. The focus for 27 is to complete the merit transition, expand need-based commitments, and optimize both yield and retention through strategic packaging. We move to capital expenditures. It's focused for 27, we have about $473,000 available in the E&G budget, and we're going to be working within the central heat plant, doing some campus plumbing work and some paving. Auxiliary projects is about $309,000, and we're looking at removing a building and doing some selective removal of a portion of a building in order to move our mainly outdoors program. Our FY25 net asset value stands at 64%, which is up 4 points over FY24. We're actively optimizing our campus footprint. We're leasing space to mental health organizations and RSU 9. We're looking at demolishing underutilized buildings to reduce square footage. We're working with NV5 on carbon reduction projects, and we've recently received a $1.9 million CDS award for a healthcare training center, and that will partner us with external rural hospitals to build a program to train employees to meet their needs. We are very excited about that. We look at investments. This chart shows our capital investment history from FY15 to 25. And you can see that in FY25, total capital investment reaches approximately $4.3 million against a funding target of 4.4. The goal is to continue lowering our risk profile while being strategic about which investments drive the greatest operational and enrollment impact. If we look at depreciation and reserve, for our depreciation funding, total E&G and auxiliary depreciation for FY27 is at $3.76 million. Through capital expenditures and debt service principal, we're making meaningful progress, and we've funded 68%, and that is up from 59% prior year. On the reserves, let's be transparent. Our ENG reserve balance of February is negative 9.8 million. GASB adds another negative 2.4, and auxiliary reserves are negative 1.3. We do have positive capital reserves on the ENG side and on auxiliary. The reserve picture, it underscores why our revenue growth strategies and cost containment are so critical. Joe, do you want to go through these quickly?
I'm just wondering if there's anything really more that why don't we jump to the last slide?
Sure.
Oh,
yep. Key takeaways?
Yeah, the key takeaways. And I really want to focus on what the system can do because I've spoken about the university. But as you look at this university, distinctively, we're a residential university. And residential university is more expensive to operate than a online university where I use a lot of adjunct faculty. Also, we're focused on education, all things education, from early childhood all the way up to graduate level in education. We've got our reputation there. We've got our relationships with school districts all over the state, not just in Western Maine. Creative writing, outdoor recreation, actuarial science are distinctive programs, only ones in the system. In terms of what we need, we certainly need less competition in education. We need centralized instructional designers or more designers dedicated to us. And we need more partners in online education, right? It'd be better for us to have partners than it would be for us to start programs that compete with our sister universities. So how do we get those partners? So those are, I think, the challenges that I would say are there for the system to keep this university on the course that it is on, because this could be a successful university. There's no question about it. The thing that is holding us back right now is having too many faculty in the wrong places and too few in the right places. And if we were able to solve that problem, this would be a university that would be within balance every single year.
Thank you very much, Joe. Questions from the committee? We can take a couple of minutes here for questions. Yes, Emily.
Thanks, Roger, and thanks, Joe. I know, could you just talk a little bit specifically about fundraising? I know that's something you've been trying to get at, and you have some money for. Can you just talk about how that fits into the picture of your financial picture in the next year or so?
Yeah, we were given some money from the system. We've had a couple of failed searches in that area, and we recognize that that's not enough money to bring in the kind of person that we need. So we're rethinking what that job should be and maybe make the job a little larger to include alumni and some other things to beef the job up, give it a higher salary, and then hopefully we'll be able to recruit somebody.
Have you considered a temporary, like a consultant role to sort of build out what you need and get things moving as you think about building something like that?
Well, that's one option. We didn't go down that path. We could think about it.
Thanks.
Other questions? I'm seeing none. Joe, Laurie, thank you very much for being here, and especially thank you for your candor about the challenges that are facing your university and how that fits into the system as a whole. Appreciate that.
Thank you.
And we'll look forward to continuing those conversations.
I appreciate your interest and we're open to all the help we can get. So thank you.
Thank you. Okay, we'll now move on to the University of Maine at Augusta with President Cushman and her team. Good afternoon and welcome. Nice to see you all.
Hi, everyone. Thank you for the opportunity to present our budget plans and to the trustees, chancellor, and system for everything you do to support our universities. I'm here with Kristen Eaton, our interim vice president of external relations, Jonathan Henry, our vice president of enrollment, Ilea Robinson, chief business officer, and Joseph Zakis, our provost. Next slide, please. So working up a budget is an exercise in which we need to stay close to our mission and strategic plan, especially in difficult budget situations. Succinctly, our mission is to provide access to higher education for all populations through multiple access points and support those students to complete and transform their lives while meeting the workforce needs of Maine. Our revised strategic plan supports that mission, and you see here our 6 pillars. We kept the 5 pillars from our 2020 to 2025 strategic plan and added a 6th, strive for efficiency and sustainability. And of course, today we are addressing that particular pillar, which supports all of the others and which intersects with the system and trustee strategic priorities. Next slide, please. So we believe our strategic plan will help us face the upheavals that are occurring in the higher ed landscape. EAB, which is a national organization that provides research and support for higher education, they recently offered a roundtable webinar for presidents of public universities. And this image and the one on our final slide are from that webinar. The webinar addressed 3 major headwinds facing higher education, including external accountability, financial sustainability amid decreasing revenue and rising costs, and market relevance, especially in an age of AI transformation. So EAB posited that universities needed institutional agility to be ready to face those headwinds today. And you'll hear that UMA continues to prioritize being agile in this environment in support of our financial sustainability to unlock opportunity in a disrupted sector. One takeaway from the webinar confirmed that you can't cut your way to sustainability. You need to cut so that you can reinvest in potential growth areas. So you'll see reductions in our presentation, especially in spaces as we prioritize people and programs, but also investment in growing areas like housing and educational technologies. So now I'll turn it over to Ilea.
Thank you, President Cushman. This slide shows a balanced FY27 budget, but it represents more than a single year of revenues and expenses. As our strategic plan outlines priorities for the next 5 years, our responsibility is to ensure those priorities are financially sustainable. Higher education operates at the intersection of mission and financial reality, and our role is to support that mission while maintaining stability. The FY27 budget was intentionally built to align with the strategic plan in a balanced and responsible way. The revenue and expense drivers shown here reflect the key factors shaping the budget and will be discussed in more detail by the leadership team throughout this presentation. To begin, I'll highlight some of the steps we've taken to strengthen UMA's long-term financial sustainability. When building this budget, it became clear that the goal wasn't simply to balance the budget for 1 year. The goal was to strengthen a model that supports long-term financial sustainability at UMA. This slide highlights 5 key areas where UMA has been actively working to strengthen that sustainability, each of which have had a direct impact on the FY27 budget. Starting with the student category, John and I will discuss these items in greater detail, but collectively, the initiatives represent over $1 million in revenue or savings, demonstrating how closely enrollment strategy and financial sustainability are connected. Another major focus area has been space utilization across our campuses and centers. Over the past year, UMA worked closely with our center directors to review how space is used across the state, which led to several strategic adjustments. First, the Rockland Center has been reduced by 23% or 2,443 square feet. The Rumford Center is closing as of June 30th, with the programs consolidated into the LAC Center. Our East Millinocket presence has been greatly reduced, and our Brunswick Center has been identified for consolidation with operations moving to Hangar 6 over the summer. Altogether, our space adjustments represent approximately $371,000 in FY27 budget impact. The next category highlights strategic partnerships, which have become increasingly important tool for maintaining efficiency while expanding capacity. During the fiscal year, UMA has had great success partnering with UMPD to provide security coverage on our 2 campuses, as well as USM to provide back-end student account support services. Moving into FY27, UMA is excited to continue to grow the partnership with USM by consolidating some back-end financial aid functions. Both campuses are header schools, so aligning with USM allows us both to strengthen our capacity while succession plan and in creating cost efficiencies. We expect for it to be fully integrated by October 1st, just in time for the next FAFSA cycle to take place. Another example of our efficiency efforts is asset optimization, including updating lighting and HVAC units across both campuses and the pending sale of Bangor Hall. The building is scheduled to close in mid-May. Finally, we're reviewing staffing structures across the institution to ensure that they align with our future priorities. As we plan for UMA's future, it's important that our workforce is positioned to support the institution we're working to become, while we expect to see significant savings because of this work. Taken together, the initiatives on this slide represent a collaborative effort across the institution and generate approximately $2.3 million in revenue and savings for FY27. And importantly, you'll see these efforts allow us to continue investing in the priorities that you'll see throughout the remainder of this presentation. Another way UMA supports data-driven financial decisions is through our annual quantitative review of academic programs. This slide is just a snapshot of that analysis. The goal is not to be punitive, but to provide a consistent framework for evaluating program trends in both credit hour production and expenses. Reviewing this data annually helps us identify areas of growth, align resources more strategically, and support informed decisions around program fees and cost management. While the analysis does not capture all institutional costs, it provides a clear and understandable baseline that supports transparent conversations around program sustainability. So next, I'm going to shift over to our operating budget. This slide shows the composition of our E&G budget and the changes from FY26 to FY27. The FY27 budget was built using conservative enrollment projections and careful cost management, with the goal of continuing to support instruction, student services, and core operations while maintaining fiscal stability. There are a few items here that will not be discussed later in the presentation that I just want to briefly highlight. First is the indirect cost recovery. While UMA is not traditionally known as a research institution, we have seen notable growth in the grant activity. Increased faculty interest in research and the success of several workforce programs have increased our F&A recovery, so we've conservatively budgeted a 25% increase in that revenue line. Next are supplies and services, which is driven largely by our new partnership with UMPI Dental Partnership, as well as investments in student-facing technology and marketing investments, which Christian will discuss later in the presentation. Finally, our travel expenses have increased by about $100,000 due to higher reimbursement rates, expanded athletics, and an increase in professional development opportunities in areas like AI. So next, I'm going to shift over to the auxiliary budget. So despite modest room and board increases that we'll talk about in a minute, our auxiliary revenue is projected to decrease by nearly 3%, and that's largely due to a more conservative hotel occupancy projection. So for student housing in Hallowell, we've budgeted 100% occupancy, which we've had since we opened the dorms back in 2019. But for the Augusta and Bangor hotel locations, we're budgeting just 30 students for both terms, which is a conservative average to account for the enrollment melt from fall to spring. I received numbers this morning from our housing director, and right now, as of today, we have 169 applications, and at this time last year, we only had 126. So these are conservative numbers, and we definitely think we're going to hit them.
Ali, could I ask a question there? But Emily's had her hand up for some time. Let me ask if you want to jump in.
That was just a leftover hand raise. I apologize.
Oh,
You're
okay.
doing great. I don't have any questions yet,
all right.
but I might
Thanks.
soon, just not yet.
All right. All right. Sounds good.
Thank you.
Hailey, I get a question there. So the decreased hotel need, I see that, but we're making a profit on that. In other words, were we charging students $50 a night, but it was only costing us 40? How does it impact the bottom line, I guess?
Yeah, I can provide some more in-depth detail with that. So we are recovering the cost of the hotel by charging enough to the students. Kind of the problem with really making money there, though, is the CA, the need for a CA. So the more students you get, the more CAs you need, and community advisor. And they receive the free room and free board. So that does impact the bottom line of that model, which is why this new housing unit is so important for us.
Sure. And again, this is a very minor point, but so I apologize taking the time with it. But if we're breaking even on hotel students and the number goes up or the number goes down, why does that make any difference to our bottom line?
We have to add CAs, so that we do have to pay for the CAs. So that
Right, but if you have less students, in the rooms, then we theoretically have a need for less CAs.
Correct, but we still have the room for one, and it's like between room and board, I think it's around $11,000 a year for a CA. So we're not covering that cost with the students in the hotel.
I see. Okay, thank you. Yep.
You're welcome. So next I want to just talk about supplies and materials. You can see that line increased, and that's mostly due to our food service operations. Like Farmington, we have a new manager, so we are expecting to see Sodexo coming along better, but that's still happening. The next thing I want to call out is the increase in the transfer line, which really just reflects improved tracking of our conferencing activity between E&G and dining budgets. As our conferencing program continues to grow, we have to more closely monitor the activities, and due to accounting requirements, those have to be budgeted in E&G, but the invoices actually come through auxiliary. So that transfer line just moves them over to E&G where they belong. The depreciation increase relates to bringing our new Bangor Cafe online. But the most important thing that I want you to notice on the screen is that UMA is making progress in that auxiliary gap. It is closing, and we are excited to bring on that new dorm in the next fall. So next I want to take a look at the student charges, beginning with the tuition and fees. As is shown on the screen, UMA has increased tuition and fees by 4% across all categories, and our undergraduate tuition rates remain aligned with Fort Kent and Presque Isle. Now I'm going to walk you through the room and board rates. As we move into our 8th year of providing student housing, our model is continuing to grow. Over the past several years, we've expanded residential programming and enhanced dining operations to better support our students. So in the fall of 25, we conducted a peer and market analysis and determined that increasing the room rates by an average of 6% would keep UMA aligned with the market while helping to reduce the auxiliary gap. Making this modest adjustment now is especially important as we are preparing to bring that new unit online in fall of 27. And for the board rates, our team worked closely with the Sodexo team to evaluate dining costs and service enhancements. Based on recent investments in our cafes and expanded food offerings, along with growing food expenses, we've implemented a 5% increase in meal plans. Student surveys that have been conducted by Sodexo have been overwhelmingly positive, with many students noting appreciation for the improvements that have been made in response to their feedback. As with the proposed room rate increase, we feel that 5% increase will better support our increasing expenses while remaining competitive with the peers. And so with that, thanks for sticking with me with my voice, and I'm going to pass it on to John Henry.
Thank you, Hailey. Before we talk about the enrollment forecast for the next fiscal year, I thought it would be helpful to have an overview of our student body. Last fall, we enrolled just about 3,000 regular undergraduate students. You can see that in the top left, and another 1,260 early college students. The majority of our students are part-time, averaging about 9.5 credits per semester. And 2/3 of our students, as is well known, are online, with the balance enrolling in on-site programs and courses at our two campuses and our centers. Our two fastest growing segments are traditional age students, in large part due to the residence hall offerings, enrolling full-time, and our graduate student population, which is slowly emerging to become a growth area for us. If you look at the bottom left, you see that 62% of our students are female. That's consistent across the country with the loss of men throughout. Ours is more pronounced given the population we serve. We are 38% first generation, and our average age is 32. This makes us discernibly different from most of our peers in the system, in the students that we serve. Next slide. Over the last 5 budget cycles, our credit hours have largely stabilized. The most significant decline occurred immediately following the pandemic, and then a smaller dip when the Maine community college system introduced its free college initiative. But despite those pressures, several positive trends have emerged. First, we have seen a growing share of credits coming from early college students, reflecting our strong partnerships with Maine high schools and an increase in awareness of UMA as an accessible pathway for higher education. Secondly, we're seeing an uptick in first-year full-time students, closely tied to our expanding residential capacity and momentum around our athletic programs, both of which are attracting more traditional students from the state of Maine and beyond. And finally, and perhaps most encouraging, we've seen a significant improvement in our student retention. That progress is critical because retaining students is the most sustainable way to stabilize and grow our enrollment and to meet our mission. I'll touch again on that later in the presentation. Next, please. For fiscal year 2027, we are projecting a modest credit hour growth of about 1%. This projection was built using 2 forecasting models, one developed by the University of Maine system and the other by our internal Office of Research and Assessment. The difference between these 2 projection models was only about 800 credit hours, or roughly 1%, which is the closest alignment that these 2 models have seen in recent years. For budgeting purposes, we chose the more conservative projection and our internal model, due in part to an unforeseen decline in spring 2026 new starts. We enrolled about 22% fewer new students this spring, or 63 students fewer than we anticipated coming into the spring semester, which did impact our spring 26 total headcount. The green bars you see, of course, are the waterfall representing new academic program opportunities. And the largest of those is the nursing program, driven by strong application growth and the additional capacity offered by, of course, the UMA Capital Center for Nursing and Workforce Simulation. We also expect continued gains and improved student retention, along with growth tied to the housing availability and our expanded athletics program. Notably, traditional students, those coming directly from high school, now represent 37% of our incoming class and 31% of our overall population. This is an important shift from our typical and historically known reputation for serving adult learners. Next slide.
John, I'm sorry, did you just say that 30% of the growth is with athletes? Did I hear that correctly?
No, 37% of the entering class in the fall will be traditional age students. And what's helping us grow that number, it's been in the mid-high 20s for years, is expanded sports and expanded residence halls.
Good. Thank you.
On the Augusta campus, sure. So there's a lot here, but I just want to point out 3 quick things. Rather than going through this detail, on the upper left, you'll see our summer projection, and that's slightly reduced from what we had last year. That's driven largely by our smaller incoming cohort this spring. If we have fewer new students coming in the spring, there's be fewer demand for courses in the summer, as some of our students do choose year-round enrollment. In the bottom left, for fall 26, overall credit hours are expected to remain essentially flat, but we do anticipate a modest increase in the incoming fall class. But that growth will again be largely offset by fewer returning students who would have started this semester, the spring of 26. And finally, on the right side, spring of 27 projection. This reflects a slight decline in some early college demand and a minor variation in continuing student credit hours. So not substantial differences for all 3 terms. Next, please. So how do we get there? There's 2 sides of this coin. One is recruitment and the other is retention. Building on a historic 86% re-registration rate this semester and a 15% increase in fall applications, domestic applications to date, we will implement another aggressive and diversified recruitment strategy for the new fiscal year. A key strength of UMA that has served us well is the diversity of enrollment streams that we serve. We recruit across multiple student populations and learning modalities, allowing us to reach students with varying needs and educational pathways. This year, we launched a large-scale student search, digital student search, reaching over 50,000 prospective student households in New York, New England, and New Jersey. And we will repeat that project going forward. We believe that is a large contributor to why our applications have increased 15%. We also maintain a strong presence at the community colleges, supported in part by the an adult student recruiter who's been funded by the Adult Degree Completion Grant received from the Chancellor's Office. Our prison education program continues to expand gradually but successfully, serving an important population while contributing to overall enrollment growth. In addition, we are strengthening our yield strategy. It is focusing on converting a higher percentage of admits into enrolled students through additional post-admission outreach and accepted student events on campus. It's always one of the better opportunities in our pipeline. On the retention side, we are seeing significant benefits from investments in high-tech and high-touch advising tools. Our professional advising team has leveraged the EAB Navigate 360 platform to identify and support students earlier in their academic journey. Using the Adult Degree Completion Grant funding, we implemented EdSites, a student persistence texting platform where we can interact with students through automated text messages who interact with a bot who has been named Augie. This bot helps us identify students experiencing barriers or at risk of attrition. When concerns do surface from students, we receive that information, and then we have a dedicated staff member who intervenes quickly to resolve the barrier or the perceived issue that the student is reporting through this texting mechanism. We also are participating in the National Institute for Student Success, where cross-campus committees are working on 4 key pillars: the advising experience, the first-year experience, the reduction of D, F, and W grades, and financial wellness. Finally, investments in student life and student affairs are paying dividends. Demand for campus housing exceeds our current capacity again, and interest in growing athletics continues to rise. Our recent designation as an NCAA exploratory institution will only strengthen those efforts, and we certainly appreciate the support from Chair Riley, from the system office, and from our peers to reach this very significant milestone for us. Next one. Over the past several years, we have carefully refined UMA's financial aid strategy to ensure that it supports enrollment while maintaining financial sustainability. One recent adjustment was tightening the criteria required to earn and retain our highest value merit scholarships. This modest change in criteria has generated approximately $200,000 in institutional scholarship savings, without negatively impacting our retention. We continue to promote the Pine Tree State Pledge, which is the most inclusive tuition program in the system. And importantly, the program has very minimal impact on our bottom line because students use their Pell Grants and their main state grants first to deliver on the promise. As a result of these adjustments, UMA now has a very competitive and responsible discount rate. Our overall discount rate is 11%, the second lowest in the system, and our first-year full-time discount rate is 17%, the lowest in the University of Maine system. These outcomes demonstrate that we are managing financial aid in a way that supports affordable access for students while protecting the institution's long-term financial health. And with that, I will turn it over to the provost to discuss academic priorities.
Thank you, John. And our academic priorities begin with AI, right? Our work continues to try to make sure that AI is going to be used and integrated in all of our academic programs. That is the work that is been going on for a few years now and continues to work on it. But we're starting to see good efforts there, and we'll continue that. As we work to improve student services, we're going to focus on really 2 sides of things. The transfer side, making sure that every credit that students bring in, if we can, counts, as well as making sure that we do improved advising to make sure that every class they take also counts. And so we keep working on those two sides among all the other things to try to improve the student experience and just the nuts and bolts of just enrolling and coming and admitting and all that fun stuff. Staying true to our access mission, our work continues on our Title II and our ADA compliance, as well as making sure that all our learning materials are going to be neurodiverse friendly. We see good buy-in from the faculty on this effort, and we just we see this as more opportunities for more students to enjoy and engage and be successful in higher education. John mentioned the retention things already, so I'll skip over that. Our academic programs, we will have some growth in some areas, cybersecurity being one in our forensics area. Interdisciplinary studies at the graduate level is also one that we're trying to identify students with some graduate credit, but not enough to create a credential. Also, our efforts working in the allied health field, again, aligning with workforce needs, medical laboratory science program, which is in partnership with the University of Maine at Presque Isle. Priority Leads, we've also started working a little with the community colleges on trying to support their efforts with EMS, yet another critical workforce issue. Finally, on this side, the certificate component, we have just got an AI certificate up and running, and we are working on a computer gaming certificate. Each one is laying the groundwork for more. So as know the tool, trying to understand that. But with the computer gaming one, it's not just to make computer games. It's also to help us do that next step, which is as we start to double down on our efforts in simulation, but also virtual reality or extended reality. And our partnership, we've been working closer and closer with the Maine College of Engineering and Computing on both the XR, VR front, but also on things like the critical infrastructure on creating cyber digital twins so that we can continue to meet the needs of the state. And with that, I'm handing it off to Kristen. So thank you.
Thank you, Joe. We're building a more integrated external relations approach at UMA, connecting marketing, communications, and advancement to not only support our enrollment growth, but build on our brand awareness, donor and alumni stewardship, and advancement efforts. Over the past year, our marketing work has shifted to a more targeted outreach, focusing on students who are actively looking for our high demand and workforce aligned programs, and making sure UMA is visible at the right point in their decision-making process. As John mentioned earlier, in partnership with enrollment and admissions, one example is a targeted campaign to high school seniors that contributed to a 15% increase in our domestic applications for fall of 2026. We're also expanding beyond Maine into regional and out-of-state markets where interest is growing, particularly in programs like architecture, cybersecurity, and our online offerings. In the fiscal year 27 budget, you'll see a 14% increase in marketing and communications expenses. This is mostly supporting our continued investment in our digital strategies, our conversion rates, and our overall awareness work. At the same time, we're investing in UMA's advancement infrastructure with support from the system's small campus fundraising initiative. We're strengthening our capacity for alumni engagement and donor development. We're starting to see the early results of that work, including a Davis Education Foundation grant, which was supporting our AI and virtual reality work, as Joe just outlined in his slides. Our focus in fiscal year 27 is ensuring our investments are aligned with enrollment growth and building a stronger foundation for UMA's future. Next, we're going to move on to the final portion of our presentation, which is about UMA's facilities. And I am going to take one for the team here and help Eiley out with her voice. So bear with me here as we walk through these final slides about our facilities. UMA places a strong emphasis on maintaining and investing in our physical infrastructure. The sightlines analysis on this slide helps us evaluate whether we are investing at the level recommended for long-term facility sustainability. While UMA continues to increase our capital investments account by 5% annually and prioritize reinvestments in existing facilities, we still fall short of the recommended annual investment target. This is why it is so important to evaluate our buildings portfolio and strategically reduce underutilized or high-risk space and thanks to strong stewardship over the past 15 years, UMA has already reduced its footprint by approximately 90,000 square feet with additional reductions planned. Next slide, Eiley. Thank you. Looking more closely at our capital improvements, while we are not yet meeting the recommended funding level, the investments we are making are highly strategic. Our focus has been on addressing underlying facilities deficiencies rather than short-term fixes. As a result, UMA continues to maintain the highest net asset value among peer institutions and across the University of Maine system. This reflects a disciplined approach to stewardship, taking care of the facilities we already have while planning strategically for future needs. And one more, Eiley, thank you. Finally, I want to briefly highlight UMA's institutional reserves. Healthy reserves allow the university to respond to unexpected challenges while also positioning us to invest strategically when opportunities arise. As of February 2026, UMA maintains more than $10 million in reserves, placing the institution in a strong position for future planning. These reserves are not simply a safeguard for unforeseen circumstances. They represent our capacity to invest in students, programs, and facilities when it matters most. With that, I'd like to turn it back over to President Cushman to close us out.
Thanks. What a great team. This is the other image from the EAB President's Roundtable webinar. The webinar posited 6 attributes of a thriving institution, including 4 operating capabilities and 2 endurance capabilities. We are striving to meet these 6 attributes. We focus daily on the 4 operating capabilities. We see our decision resolve in prioritizing supports for our mission. We have a clear focus in our mission and strategic plan of meeting all students where they are, including through multiple in-person and online access points and workforce-aligned programs. Our portfolio makes sense because we aren't afraid to cut, but as we do so, we invest in growing areas. And we change our systems as the world changes using new processes and technologies as they arise. But we also keep our eyes on the future, building our endurance capabilities for the long haul. We see the urgency of planning, not just for tomorrow, but for the day after and the decade after that, by aligning ourselves with Maine's 2030 goals and investing in sustainability. Finally, we model long-term resilience in our leadership, most recently with our revised strategic plan, which will see us through to the next decade. Thank you. Questions?
Thank you, President Cushman. Questions? Yes, Trustee Michoud.
Yep, thank you. Thank you very much, President Cushman. Yeah, could you, I won't ask it now, but could you send me a copy of what UMA's mission statement is? Because I do have a concern that you're getting away from that. So if you could send that to me, please.
I will send it to you.
Send it to the board, yeah. Thank you.
Other questions?
Mr. Chair, can I jump in?
You sure may. Please do.
I just want to go back to Speedy John Henry. I didn't get to interrupt him. He was moving so quickly. John, it was interesting that, and it relates to Mike's question. If 37% of your incoming class are traditional students, do you have any sense of what they're coming for, what programs they're joining? I know it's pre-major time, but.
Yeah, that's a fairly consistent inventory. It is typically architecture, aviation, which are both located here, nursing at this Capitol Center, and a myriad other programs like business management, mental health, the ones that are the big picks. Cybersecurity is in that mix as well. Joe, I'm sure I'm missing one, but generally it's those that you would think that are particularly Augusta focused.
Great.
And yeah, I just want to reiterate that our traditional age growth has appeared in our sort of workforce development that meet Maine's workforce needs, which is part of our mission. So we're happy to see those numbers growing.
I would also add for the Bangor at veterinary technology and dental hygiene, I believe, Eiley, correct me if I'm here, we already have 16 housing applications for Bangor, which doesn't even have a residence hall. And that represents the traditional students who really wish to have safe and secure housing to do the vet tech or dental hygiene programs up there.
So, John, is it fair to say that the number of, say, traditional liberal arts students who want to study the humanities or other general liberal arts are making up a smaller percentage of your student body as time goes by?
Sure. I'd welcome Joe to step in here too. As a political science undergraduate, I sadly have to say I think that is happening in a lot of places. That we have not seen a really big growth. Interdisciplinary is getting some attraction there because it's a great degree completer for adults. Joe?
Yeah, I was just going to say the degree completion is a big one. We're seeing the psych and the social science also have opportunities. Our mental health program is still one of our largest programs, and so that which has that kind of the human-centered focus and what's interesting is that the traditional students, yes, are growing, but they're still doing a lot of stuff online. Our numbers haven't shifted in terms of our modality needs. It's still in the high 70% of almost all our students taking some form of distance.
Thank you. Other questions? I am not seeing any, so thank you very much for your presentation. Very much appreciate it. Well done. And we'll now take a break until 2:15 when we'll hear from the University of Maine and the University of Maine at Machias. Thank you. Okay, welcome back, everybody, and we'll now move on to the University of Maine. And good afternoon, President Freeney Mundy.
Good afternoon, Trustee Cates. Good afternoon, everybody. It's great to be here with you all. We have a lot of detail in this presentation, so we'll move quickly in, and I'll suggest that members of the team introduce themselves as they speak, so that we can get right to it. I'd like to begin by thanking Chancellor Malloy for his steadfast support of the state's R1 Land, Sea, and Space Grant and Research University, as well as the entire staff and leadership at the University of Maine system, this board, of course, Governor Mills and her administration, the legislature, and our congressional delegation, and all the very generous donors who are such an important part of what we do here at the University of Maine. We will be focusing here on all of these areas, and we can just keep moving through. Jenny, thank you for running the slides. I'd like to say a little bit about a reminder about our statewide mission, and then a bit more about the how and why of the kinds of changes and proposals that we'll be putting in front of you today. Then we'll dive deeply into the financial landscape and our three core pillars: academic and student success as one, the research, development, and innovation enterprise, and then very specifically innovation and partnerships. And then finally, we'll talk about auxiliary operations and the importance really of our longtime motto here at the University of Maine, which is define tomorrow. And we see that as critical for our students and for our state. And here you see the graphics representing the types of facilities and operations that we have statewide. So let's go to the next one, please, Jenny. I'd like to, oops, can we go back one? I'm sorry. I'd like to talk a little bit more specifically here about what it means and why we keep using the language of learner-centered R1 University. We've had, as you know, for 2 years now, an effort underway called the Strategic Re-envisioning Initiative, and I'll say just a little more about it. There's quite a lot of detail about it in the slides, and we won't cover all of that with you, but you're welcome to take a look and get back to us if you have questions. But the statewide footprint includes cooperative extension offices, farms, marine research facilities, forests, field experimentations, 4-H camps, incubator, academic, and outreach programs statewide. And so we want to be able to convey the complexity of this university while at the same time providing a thorough and transparent picture of our fiscal situation looking forward. But we take very, very seriously our role as the state's land-grant university. Next one now. Okay, now we're over to Jake.
Hi, I'm Jake Ward, Vice President for Strategic Partnerships, Innovation, Resources, Engagement. Thanks again for having us here today. I just wanted to put a little more detail on our what makes us unique in the system, and understanding that as a statewide institution, definitely a leading driver of educational and economic development. We're the only institution in the state to have an R1 designation, and also have the land grant, sea grant, space grant designation. We have also the NCAA Division I athletics, and home of cooperative extension, 4-H, and the Maine Agricultural Forestry Experiment Station. Many of these resources are definitely unique to what UMaine is all about, and our service to the state, as well as a lot of the mechanics and administrative and logistics that we play on behalf of the system, and partnerships and supporting other parts of the University of Maine campuses. And we're the only, of course, we have the regional campus at UMaine Machias as well. And the numbers on the right give you a sense of the volume of activity that is there. 88% of all the university-sponsored research in the state of Maine, and significant expenditures which allow us to create additional economic impact, as much of that spending is in the state of Maine. Next slide. But with having these responsibilities, we also have some unique challenges in sustaining these core responsibilities. Some of the activities, such as the Maine Agricultural Forest and Experiment Station and cooperative extension, are federally funded. We have mandates along that, but we also have to provide cost share and match in order to be able to do that activity. We also do a large percentage of the Maine Economic Improvement Fund, and we also are always leveraging additional funds to make that those programs go as far as we can. We have costs associated with our partnership with the University of Maine Foundation, which is a great partner in all of our fundraising activity, and really leveraging their capability to help support the philanthropy side of the house. as well as we're starting to see, and many of you are aware of the changes in our federal landscape, which also require us to spend money for facilities and administration costs, and some of that is in flux right now at the national level. And then we also have to contribute costs to the NCAA associated with being a D1 athletics program. So what we have on the right is the FY27 costs that are sort of very unique to the University of Maine and how we're dealing with them in the FY27 budget.
So building on that and getting ready to dive into the 27 budget particulars, I just want to be very clear that the strategic vision of the university needs to drive the budget. And we are continuing, of course, to get better at that. But we also want to maintain the very clear commitment to our learners, to the communities that we serve, and to the impact that we serve for the state of Maine. And ways in which we do this, I think, include the strategic re-envisioning, our view of ourselves as Maine's R&D department, and then massive investment with extremely important external investment in capital and facilities in our 161-year-old university. So being specific now about the strategic re-envisioning, just very briefly, because that's a separate talk in and of itself. We launched this in May of 2024 with this question: what would the University of Maine look like if we were designing it today? And we've heard elsewhere in these presentations the importance of constantly adjusting to context, looking to the future as a part of higher ed. It's always been important, but right now, as things are rapidly changing around us, all the more important. And so we have worked to put in place some structures, some approaches to having these conversations university-wide. And we have met some successes, and we're continuing to work in several areas. The next slide just summarizes the number of people who've been involved, more than 200 individuals across our campuses in a wide variety of types of sessions. And I wanted to call attention to the website for the SRE effort, because that has been revised recently, and it includes an inventory of progress and specific projects that have been undertaken. The next slide lays out some of the original drivers that were driving both the strategic re-envisioning and therefore ultimately our budget priorities. So we remain committed, as you see here, to the leaders and innovators of tomorrow, the land grant responsibilities, stewardship in many domains, and remaining a leader in teaching, research, and public engagement. Now, these next slides, I'm going to highlight a few things here. The 4 areas mentioned on this slide map SRE activity to structural challenges that we face as a university. And these challenges are not that different than many of our peer universities around New England and beyond. So we have undertaken an academic portfolio review, which is an intensive and expansive process that has engaged faculty and administrators across the university to identify what will be programs of distinction and also ensure that all of our programs are relevant. And if not, then we need to make adjustments. In parallel, a research portfolio review underway. And then 2 much more specific areas. One is about accelerating the interactions and integration of our efforts here at UMaine in advanced manufacturing, materials and composites, and workforce, so that we can test out what it would take to try some innovative structures to move more quickly in those kinds of areas. And we had an administrative business services group, which has morphed into the President's Advisory Council on Administrative Excellence. So many SRE structures that are in place now. I'm going to skip the next 2 slides, Jenny, maybe 3, and go and wrap up what I'll say about SRE here. It has to be a piece of how we achieve a balanced budget and how we also use the guidance of SRE to drive ourselves forward. And you see here the kinds of things that we are working on and have made some great progress in the last year, and we'll need to continue to make progress and focus here. I'll just end the SRE piece by saying, to be a learner-centered R1 university, which is an outcome of SRE conversations that has resonated well, means bringing together our commitments on the research side and our commitments to excellence in learning for our students and weaving them together in ways that will make us quite unique among our R1 universities. And we are making great progress on doing that. It also requires changes and structural shifts that we're working on as well. Now I'll turn it to Jenny now.
Thank you.
I'm Jenny Boyden. I'm the Interim Vice President of Finance and Administration and Chief Business Officer for the university. And we'll move now into some of the specific numbers. Our financial landscape is the foundation that allows our strategic vision to become a reality. We aim to be completely transparent about where we stand, the challenges that we face, and the specific plans we have to achieve long-term sustainability. UMaine's financial operations are complex and multifaceted. We manage a mix of unrestricted and designated funds. Every year, we plan for a balanced budget in our core unrestricted operations, the ENG fund, and our auxiliary enterprises. We also manage dedicated operations that are critical to the state. The Maine Agriculture and Forest Experimentation Stations, Cooperative Extension, and the Maine Economic Improvement Fund. It's important to note that we do not annually budget sponsored research grants or restricted gifts, as these are tied to specific projects. Nevertheless, these are all critical pieces to operate our R1D1 land grant flagship university. Since fiscal year 22, we have regularly relied on the strategic use of one-time reserves to bridge our structural gap. In fiscal year 24, UMaine presented a 3-year plan to use the one-time reserves to close our structural gap. The planned use for those 3 years of fiscal 24, 25, and 26 totaled $14.4 million. In fiscal year 25, our critical hire review process was so successful that we actually generated one-time attrition savings, allowing us to add $1 million back to our ENG reserves. While we anticipate using $5.5 million in reserves for fiscal year 27, this glide path actually uses fewer reserves over the 4-year period, $14.2 million, instead of the $14.4 million we had previously identified over the 3 years. Our goal is to balance the ENG budget in fiscal year 28 without further use of reserves. This chart shows the trend of our net reserve balance from fiscal year 22 to our fiscal year 26 projection. Our total reserves have moved from $86.5 million in fiscal year 22 to a projected $39.7 million in fiscal year 26. While these reserves include auxiliaries, capital project funds, and cost sharing, they have protected us during recent volatility. The downward trend underscores why strategic re-envisioning is so urgent. Reserves are buying us time to make strategic decisions and build a sustainable core for the University of Maine. We face several
Jenny,
daunting...
I'm sorry.
Yes.
Jenny, I'm sorry. Can I interrupt you with a question there?
Of course.
Going back to the last slide. I'm not suggesting you would ever want to do that, but what's the potential availability of designated funds if they were needed for a budget balancing purpose?
We do look at those. So those are funds where they are coming over from endowments for some instances, and we've looked at utilizing some of those to support some of our positions for a certain period of time. So that's an ongoing effort that we have to make sure that we are using those funds in a strategic way to recognize potential savings on the ENG side. As far as if we could use a large block of them, we haven't found that opportunity, but we continue to look at them.
Okay, thank you.
So we face several daunting and persistent challenges which are not unique to UMaine. However, we aren't just letting these challenges happen to us. We are meeting them with proactive responses. We're fighting declining out-of-state enrollment by optimizing our financial aid and expanding our learner offerings. We're addressing rising compensation costs through a rigorous critical hire process for every vacancy. And we're tackling deferred maintenance by prioritizing projects that let us reduce unneeded square footage and utility costs. So where does that leave us? As of October 2025, our initial FY27 budget projection showed a $19.8 million shortfall. To address this, we issued a clear directive to all of our units in December, including administration and athletics, and tasked them with a 7% reduction in ENG expenses. We acknowledge that these targets would require difficult choices, but they're necessary in order to stabilize our finances for the future. As a result of the expense reductions and other budget adjustments, we're closing the projected gap through 5 specific levers. $5.6 million in ongoing reductions to unit operating budgets, $2.3 million in additional state appropriations with thanks to the system for this allocation, and $2 million through changes to both the UMS and University of Maine Foundation endowments. Nearly $1.5 million in increased payover from the University of Maine Foundation to offset E&G financial aid, and another $500,000 through an increased UMS endowment management fee approved by the investment committee in December. The remainder of the gap will be managed by one-time solutions, a $5.7 million savings through one-time attrition, either through vacancy savings or by utilizing gift or grant funding, and a $5.5 million use of one-time reserves. All of these levers leave us with a balanced FY27 budget.
Yeah, I'm sorry, another question if I could. The attrition figure, is that higher than it would be if we were not facing these challenges, or is that your just estimate of what normal attrition would be?
I don't think it's an unreasonable number. I'm used to being in state government where we base budgeted 1.6% and routinely increased it to 5% for attrition. This equates to about 2.8%.
Thank you.
It should be achievable with normal operations.
Thanks.
We've plugged our budget into a version of the multi-year financial analysis because we really want you to see that while we are proposing a balanced FY27 budget, we've not solved the problem going forward, but we have closed some of the gap. You can see our budgeted tuition and fees are actually slightly lower than our budget for fiscal year 25. In total, our fiscal year 27 revenues are just slightly higher than they were budgeted for this fiscal year. Salaries and wages, as well as fringe, are up. Other expenses we're trying to manage to just below the current year budget, with a net balance of the $5.5 million that will fund from reserves. When our MYFA was submitted in November, we were projecting a $19.3 million gap in FY27. So we've managed that down to the 5.5. And in the out years, we were looking at a $30 million gap, a $46 million gap, and a $54 million gap. And we have mitigated about a third of that in each year.
Jenny, can I just ask a question on that? You said in 28, your goal is not to borrow from reserves, and they are getting precipitously lower from where they began. So, and yet you still have a serious problem in the out years. Can you speak?
Yes. We showed this slide at our town hall on Monday. And the message I conveyed is that we have to start right now. That we were presenting this budget to you for FY27 today, and that we immediately needed to start talking about how we address fiscal year 28 so that we can engage with the appropriate shared governance processes to make any changes that we need to recommend going forward.
Good luck.
Could I speak to this as well, Chair? I would just add that this, you've heard us talk about how we're working in 27. It has been focused on reductions. It's been focused on trying to find savings. A part of our work continues to be looking for revenues in more aggressive ways than we have in this presentation. And so I think that's an important factor as well. And the SRE has given us the guidance, or is close to giving us the guidance that we will need as we think about any potential new programs and new revenue streams, in addition to the continued kinds of restructuring that will be needed to get these numbers down.
Great, thank you.
Mr. Chair, could I ask a question? I had a question, Jenny, I guess on the On the reduction of the $19 million on the shortfall, a part of that was foundation and UMS endowment changes. Can you describe again to me the nature of those changes?
Absolutely. On the UMaine Foundation side, they have been extremely successful in their management of funds. And during their November board meeting, voted to increase the payover percentage. So we anticipate having a larger pool of funds available to utilize for scholarship funding in FY27, which allows us to reduce the amount of E&G funding that we use to support financial aid. On the University of Maine system side, we had proposed increasing the management fee on our system held endowments, which we then use to support some of the costs on the foundation side. And that was approved by the investment committee. And that is about $500,000. So those two things together allowed us to adjust our E&G budget by $2 million. And those are ongoing changes.
Thank you very much.
I think we'll go to Gabe now.
Good afternoon. My name is Gabriel Paquette. I have the honor of serving as provost at the University of Maine.
Excuse me, just interrupting you, Mr. Provost. Just wanted to offer our congratulations on your assuming that title permanently. Thank you and congratulations.
Thank you very much. I appreciate that greatly. Thank you. I have the privilege today of talking about budgeting, and ultimately that's about supporting our students. And academic affairs and student success are at the heart of our learner-centered R1. And I just want to describe a few of the innovative approaches that we are taking to support our learners. We have moved the graduate school into academic affairs to ensure that our R1 research is more closely aligned with our teaching mission. We have revamped our general education curriculum and introduced student success-driven modifications to the way that we handle credit for prior learning. We've also significantly revised our catalog and viewed it through the lens of student success. All the while, we continue to see the benefits of the UMS Transform student success and retention initiatives. And we are offering this fall a new Universal Bridge Week so that we can enable more students to become acclimated to the University of Maine from their very first day on campus. Next slide, please. With regard to enrollment, we've launched a new website that you can see here that's been optimized for the prospective student experience. We've also reorganized our marketing staff to do more in-house work, and that way we can maximize every dollar spent on outreach. We are engaging in more out-of-state recruitment actions, and we're putting recruiters on the ground in key states where we have an opportunity to increase our application yield. We've also relaunched our Alumni Ambassadors program to expand our presence not only across the country, but actually the entire globe. We are not neglecting non-traditional learner populations, and the UMS-funded Finish Strong initiative is gaining strength, and that's certainly going to be a priority moving forward. Next slide, please. As you can see, our enrollment management team, led by Vice President Kevin Coughlin, has done tremendous work. And at Orono and also in Machias, we've received more than 15,000 applications, and this is a lead over previous years at the same point in the admissions process. We also, perhaps most importantly, have our largest number of active matriculated students at this point in our enrollment cycle. And you see here on the slide, it says 929, but as of Monday, it was 1,077 as of the 23rd of March. Now, this large lead reflects positive momentum. It shows that our outreach is working, but now it's up to all of us at the University of Maine and also in Machias to ensure that we make these new Black Bears welcome and engaged, and to avoid summer melt. And that is when students who have deposited end up not coming to the University of Maine. Fortunately, all of us, administrators, staff, faculty, are working in lockstep with our Vice President for Enrollment Management to try to ensure that these matriculated students end up attending the University of Maine. Next slide, please. The next few slides show that we've been seeing a trend in declining credit hours after several years of growth. And most of this decline has been in in-state students, but we are beginning to see some improvements in our in-state enrollment. Our graduate enrollment continues to be fairly stable, and this is driven chiefly by our growth in doctoral research. Next slide, please. For fiscal year 27, we project fewer credit hours than in fiscal year 26, and this is precisely why our efforts to optimize the use of financial aid and also our new recruitment strategies are so critical to our revenue projections. By recruiting more students, particularly out-of-state students, we can stabilize the decline and set ourselves up for future growth. I just want to note that we are also redoubling our retention efforts to ensure that the students who do come to the University of Maine remain here and can enjoy the success and ultimately graduate. Next slide, please. From this slide, you can see that a large reason for the decline in student credit hours is due to fewer incoming students with a higher completion or withdrawal rate. And our efforts to grow enrollment and enhance retention are directly working to combat this decline. We are also projecting a small amount of credit hour loss due to instructional budget reductions, but we have worked very hard collectively to mitigate this through raising the caps on enrollment in individual courses, as well as enforcing course minima enrollments to maximize our available resources and meet student need. And with that, I will turn things back to my colleague, Vice President Jenny Boyden.
Thank you. Consistent with the other campuses, we are proposing modest tuition and fee increases to support the quality instruction and critical infrastructure at UMaine. 4% increases in undergraduate and graduate tuition rates support the higher cost of compensation, goods and services, which are necessary to deliver our degree programs and campus student services. UMaine has certain differential tuition rates for higher cost programs such as business, engineering, and nursing. We're proposing modest increases in those rates as well. In addition, we are increasing our sole campus controlled mandatory infrastructure and technology fee by $1 per credit hour. The rate increases for the University of Maine Machias mirror UMaine, with the exception of a new academic support fee for all Machias students. This fee will help support student services and campus supports on the University of Maine Machias campus.
I'll jump in here to explain that even with these modest increases, UMaine does remain the lowest priced New England land-grant institution, both for in-state and out-of-state learners. So we are able to deliver on our mission of being an excellent learner-centered R1 while maintaining access and affordability in comparison to our peers. And taking that point one bit further, when we look at our in-state tuition, Jenny, we can go to the next one. We look at our in-state tuition and fees and compare it to our New England peers and against median household incomes. You see that UMaine does remain the most affordable in-state option among the New England flagship universities. And this, again, is compatible with our commitment to access and affordability in the New England area.
So we're using an optimization strategy targeting financial aid to encourage earlier deposits and recognize academic excellence. This means that we can compete with other flagships and peer institutions for the best and brightest learners. It also gives us an early lead, as Gabe mentioned previously. This is a critical strategy to boost retention and mitigate future melt. The pressure on yield and headcount in out-of-state first-year populations the last 2 years is concentrated among student athletes and students from Massachusetts. This fits with regional and national trends on migration of student athlete enrollment to transfer and graduate paths and aggressive efforts by in-state public institutions to protect against outflow of residents to other states. While the flagship programs helped make UMaine competitive, many public flagships and regionals are now embracing more aggressive discounting of in-state students to secure against those recruitment efforts from out of state, which has eroded yield in recent years. UMaine will be adopting a hybrid approach for aid interventions for out-of-state students, including a $500 boost widely deployed and a $3,000 boost narrowly tailored to MCEC and marine sciences, along with specific boosts already executed in the past couple of months. These interventions project an increase of 30 headcount relative to baseline, resulting in a 45% discount rate compared to 42 to 43% at baseline. While our out-of-state first-year discount rate has increased, our in-state first-year discount rate and discount rates for returning students remain similar to last year.
Jenny, could I jump in with another question there? I mean, it's a heck of a story we have to tell how we're the least expensive cost of attendance for our own students as well as for out-of-state students. Do we have any data on what kind of discounts, though, other schools are giving and what the average net tuition is once you take that into account? Do we still have that great story to tell, or yes, but not quite as much, or do we know where we stand?
We can certainly try to, I do understand. We can certainly try to bring that back to you for the workshop. I can check with our enrollment management team to see if they have that level of detail.
That'd be great. I don't know that we need it for that quickly, but it would just be interesting to know because those charts are really encouraging, but it's really the net amount that matters a lot to students. So thank you.
Mr. Chair, some of that information is in the discount report that comes from Jeff's shop. You've seen it show up in a couple of screenshots where we show the discount rate not only for our institution but also for our peers. So that doesn't answer all of your question, but there's a piece of it in that material that we can provide the committee as well.
Great. How about you start with just providing what Jeff's produced, and maybe we can go from there. Thanks a lot.
Hi, so this is me. I am Giovanna Guidoboni. I am the Interim Vice President for Research and also Dean of the Maine College of Engineering and Computing. And when we talk about the value of the degrees that we offer, research actually plays a crucial role. Being R1 means to be in the top percent of the universities across the United States. Why is it so important to be a high level research university while we talk also about teaching and workforce development? Because basically this means that our classrooms are also meant for the future. While our students learn in the classrooms, they also learn how to solve problems that no one has ever solved before. And that is one of the greatest impact that our workforce actually can bring to Maine. There are two main metrics that are important to maintain the R1 status. One is to have at least $50 million spent in research and to graduate at least 70 doctoral degrees per year. And actually, I am very proud to say in the next slide that we don't only meet those requirements, but we exceed them by far. So this year, we just submitted our survey to HER, that is from the National Science Foundation, and we reported 217 million in research, so way above the threshold of the 50, and this gives you a sense of the magnitude and the relevance of the research that the University of Maine is leading. And actually 88% of all university research in Maine is actually led by UMaine. And over 5,500 undergraduate students have been involved in research experiences across the whole system in collaboration with UMaine. And for what concerns the second metric, that is the doctoral degrees, we confer around 80 degrees PhD per year. And actually, I'm happy to report that this year we have the highest ever enrollment in PhDs with 641 headcount. And in the next slide, you will see why this matters for Maine. So in our research in Lightcast, you will see that in the time frame from 2020 to 2025, the job postings in Maine asking for a PhD level degree have increased of 200%, with over 3,500 postings asking for a PhD and with a high level of salary. So cultivating and supporting the doctoral degrees is really a mission that is part of the learner-focused R1, as well as an incredible feeder into the R&D engine for the whole state. Jake?
Yep. I wasn't sure I was going to do this one or Joan was going to do it. Again, we want to just remind people that we think of UMaine as the state of Maine's Research and Development Department, and as many of our activities that we'll talk about are especially aligned with the state's needs. We provide all of the R&D infrastructure that we have here are very available to working with companies and other organizations within the state, and trying to draw alignment to what is important to the state, such as advanced manufacturing, blue economy, and health and life science, and make it nationally and globally relevant at the same time.
I will jump in here to say that when we try to think about what it would mean to be the state's R&D department or asset that's available, it means expanding our national and global recognition, because we can't serve the state well unless our researchers and scholars and innovators are working at the cutting edge that's recognized nationally and internationally. And so that's a key focus for us. We're not just leading in advanced manufacturing, blue economy, and health and the life sciences. We also will be working in new areas that bring in AI in very progressive and frontier sorts of ways. When the GEM Factory of the Future comes online later this year, we will become one of the world's foremost sites for AI-based advanced manufacturing and structures and composites in a variety of application areas. So I think it's important to note that we are solving Maine-specific problems, but we are also delivering national and global results that are widely recognized. At this moment, I'd like to acknowledge, and there's not a slide here for this, but the incredible support that we have had through congressionally directed spending by the members of our delegation, and in particular with Senator Collins' leadership as chair of House of Senate Appropriations, over the past several years across the entire system, has helped advance this general concept of learner-centered R1 ideas, both at UMaine and in other institutions as well. And for the University of Maine going forward, in fiscal year 26, we expect to see some extraordinary investments coming through CDS that will actually help support our capital growth that's needed to be a learner-centered R1. The system receiving in 26, $61.285 million in investment through CDS. So we need to be grateful for that. It's also a factor in continuing to improve our capital infrastructure. These are other sectors that are very important, and workforce development is quite tightly tied to this work that we do statewide in R&D. And so you see that student success becomes central to this and to these areas that are important for the University of Maine. We've mentioned several of these, but I want to be clear that our focus on driving economic impact through innovation is central to what we're doing here. This is Jenny, right?
Yes.
Yeah.
So our research endeavor does operate in some ways like a business. It has overhead costs, and the federal F&A, or Facilities and Administrative Recovery, is how we pay for some of the lights, the labs, and the administrative support for our scientists and our student researchers. We're projecting a $1 million reduction in F&A recovery next year as federal award activity shifts. This means we must be even more efficient in our grants management to ensure our research infrastructure remains self-sufficient. And as you can see from this graph on the slide, the F&A awarded in fiscal year 26 is slightly less than the F&A expended. So we're not filling up the pipeline as quickly as we were in previous years. And that's what we're monitoring closely at this point.
And that has a lot to do with various factors that have changed in the past year. We can be on the next one, Jenny. That's okay. At the federal level, fewer RFPs available, slower spend rates by the federal agencies on grants, and more competitive situations, as well as shifts in priorities in research. All of those are factors that affect how well we were able to bring in grants and then how well we're able to see the F&A recovery. This slide shows that we were on an upward trend, and we obtained our R1 status and began to hit new highs, but we are aware of adverse impacts right now to existing and new awards. And so Trustee Alexander, back to some of your very early questions. We're very attentive to the potential risk here, and we are projecting a decline, as you see.
We are also closely monitoring and supporting the submission of proposals. The thick gray line tracks FY26, and so you can see that we are at the level in February. This is what the picture shows of FY21, and this is also a result, as President Ferrini Monday was saying, that several calls for proposals were suspended for a while, and so the activities slowed down a bit with respect to the previous year. However, I am happy to report that at this moment we have 167 proposals that are currently in review for submission, and it is the highest number that we ever had as a university at any point in time. And this is a good indicator, basically goes in support of our faculty that are submitting proposals now that calls are open again. And we are also working collaboratively across the system to support the prompt response to new initiatives that the government is advancing, such as the Genesis mission that is focused on AI-driven education, discovery, and innovation.
Sorry about that. So to move into a little bit more engagement, innovation, and partnership, we can move on to the next slide. A little bit a different way of looking at some of the things that we've just talked about relative to external awards. One of the things that I want to mention here is to echo what Joan and Giovanna had said is that not only are things changing, but they're changing quickly. And so even in the federal awards, we're seeing the buckets of money change year to year, and we're trying to keep up with that and really pursuing whatever federal funds make sense and create the opportunities to continue to leverage that resource for the state. We can go to the next slide. A year ago or so, we were showing these slides on a regular basis about the challenges we were facing with terminations, et cetera. That seems to have pretty much stayed off for right now. And so after all that, we are still moving ahead. And again, the numbers on the right are really redundant to what Giovanna was just talking about. We do have a large effort going on within the state to make sure that the infrastructure and resources that we get through federal funding are extended to our private sector partners. One of those projects was through the Maine Jobs and Recovery Program federal funding. But with just the $2.5 million, we were able to have a great impact on a huge number of companies and partners across the state. And again, one of the areas that we're always trying to do is make sure that we can leverage those resources for students. We have significant internships with many companies. An example of the Innovate for Maine program is the large number of students coming from across the state, not only University of Maine system schools, but some of the other schools, and placing them in many of Maine's startup and smaller companies that are growing our economy. Just again, the breakdown of where the Innovate for Maine students come from where they're placed throughout the state, and then where they're coming from all over the world. And one of the areas that we talk about on a regular basis is our advanced manufacturing projects and partnerships, and just wanted to give an illustration of the number of companies, the kinds of companies from all over the state, from all over the country that are well-known names where we're doing work with. And finally, I think this is the last one, just by our numbers. Again, good efforts to try to bring in industry funds to help support this large number of projects, trying to patent and licensing and creating that commercial opportunity. Again, many of Maine companies are not going to be multi-billion-dollar companies. So nearly 500 projects are for 5 million, shows you the size and scale of those types of projects. Very accessible to Maine companies.
Okay, we'll move on to our auxiliaries and capital planning. While the E&G budget covers our core mission of teaching and research, our auxiliary enterprises covers things like housing and dining, and is designed to be a self-sustaining operation. A strong auxiliary system isn't just about financial help, it's about the essential, vibrant residential campus life that helps us recruit and retain students. For fiscal year 27, we're projecting a modest net balance of approximately $300,000 for our auxiliary operations. We are closely monitoring the out years. Current projections suggest that we could see slight deficits in fiscal year 28 and 29 due to rising labor and food costs. This makes our current efforts to streamline administrative services even more critical. Our residence halls in Orono are essentially at full capacity in the fall. While we estimate that we'll be at 98% occupancy by fall census in October, we historically have exceeded this capacity at the beginning of the fall semester. To avoid using triples or lounges, housing 4 occupants, we're proactively working to mitigate these capacity issues through off-site housing. In recent years, we've leased space at Orchard Trails. This year, we are exploring a partnership with Hotel Ursa to offer a different type of on-campus housing. This option has many benefits. It will keep the students on campus and allow us to evaluate the viability of a higher-end residential housing option and help us mitigate the guaranteed payment that we've made to Hotel Ursa for the last 2 years. This high demand is a testament to the value of on-campus experience at UMaine. However, it also means that we must be strategic about modernizing and maintaining our current facilities to remain competitive for incoming students. We had completed a housing study in 2025, and we're continuing to look at that study and how we can incorporate the recommendations going forward so that we have residence halls that are attractive to our students where they want to stay and have the sort of options as far as suites and apartment style housing that is desirable.
Jenny, I had a question regarding the potential to do something different with Hotel Ursa. I know there's 3 structures there. Does it involve all 3 structures or 2 or 1? What would you suggest? What is the suggestion that we would do there?
The suggestion right now that we're discussing with Hotel Ursa is utilizing all of one building, the building across the street, which I'm pointing at, but you can't really see, as well as 10 rooms in the Polaris building.
Thanks. Appreciate it. Thank you.
Jenny, can you just be more specific about which building? Is it
Coburn?
Coburn, thank you.
Yes. The picture at Machias is different. We're currently estimating about 60% capacity in our residential hall capacity. This represents a significant opportunity. We're looking at ways to leverage this available space and attract new student cohorts to the Down East region. To maintain our facilities and meet the rising costs of food and service, we're proposing modest increases to room and board rates. Even with these adjustments, we remain committed to a residential experience that is affordable compared to our regional peers and the private market.
Mostly, I just like this slide. I'll find some words to go with it, but I guess I can say that we are no stranger to physical changes in the infrastructure of the university, made all the more necessary by the incredible deferred maintenance needs that have built up over decades here at the University of Maine. We have been changing infrastructure for 161 years, and we continue to do so right now. Our capital planning involves, of course, we can go to the next one, Jenny. Involves focus on fixing what is broken. And in a university with as many very old buildings as we have, we spend a fair bit of time and energy planning and anticipating and making those repairs. But there is a strategy as well in our capital planning, and it's about advancing the learner-centered R1 mission. And so here you see the ways in which we think about that. It's about creating teaching and research environments that are being designed now in an integrated way. So we won't be seeing more, this is a separate research facility, this is a separate teaching facility. They're going to be coming together in ways that are appropriate for our mission. All of this is, of course, while staying committed to being responsible stewards and prioritizing community connections and spaces, which will include a plan for renovation of residence halls over time. Here are a few of the major projects that we're working on right now in fiscal 27 and beyond. The construction of Morse Arena, the planning to modernize the residence halls, and critical updates to our electrical and HVAC infrastructure. These are essential investments for the campus to keep the campus safe, functional, and attractive to the next generation of students, as well as to our wonderful faculty and staff who work in and conduct research in and teach in these facilities and buildings.
We're using a diverse mix of funding sources for these projects. For example, the $60 million for Morse Arena and $6 million for Boardman, as well as the associated projects with Boardman, are funded through generous gifts from the Alfond Foundation and other donor support. Over $16 million in congressionally directed spending will enhance several areas of campus in Orono and at Machias. Simultaneously, we have allocated $8.6 million from our E&G and auxiliary operating budgets for vital funded depreciation and break fix projects, the necessary behind the scenes work that keeps our campus running. Other ongoing projects include finishing up GEM, the electrical infrastructure improvements, HVAC projects in Sawyer and Aubert, and some envelope and exterior repairs at Machias. Additionally, you will all see the proposals for UMEC coming to future FFT and board meetings, where we just had the information session in February. While we're not able to allocate enough E&G funded depreciation to meet our Gordian provided annual investment target of $31.1 million, we have been able to meet the target over the last few years through these additional funding sources like congressionally directed spending, borrowing, and gifts like UMS Transforms. We're incredibly grateful for the support of Maine's congressional delegation, Senators Collins and King, and Representatives Golden and Pingree, as well as the Harold Alfond Foundation and our generous donors and supporters.
So as we continue our long-term master planning, we are committed to reducing our total square footage, improving building density, and decommissioning aging inefficient structures so that we can significantly lower our utility costs and improve our carbon footprint to ensure that UMaine remains a responsible steward of our physical and natural environment. And this is an ongoing process that is in full alignment with the UMS strategic plan. And I'll speak to that in conclusion now. We've looked at the data, we've looked at our academic shifts, we've looked at our potential learner audiences, and I want to talk a little about how that fits into our broader strategic direction. And this budget is a tool to advance that direction, not only our campus and university goals, but the collective mission of the University of Maine system. We align with the strategic plan financial sustainability actions with our focus on growing enrollment and improving persistence to degree. We are very focused, again, as I've mentioned, on being a learner-centered R1, and we enact that through various programs that you see noted here. You've heard the provost mention Finish Strong, a very comprehensive effort in student success, where we also have partnered with the National Institute for Student Success, expansion of UMaine Online, and expansion of our badges and credentials that are available. Also, the direct admissions work that the system has promoted and that Chancellor Malloy has supported is beginning to yield fruit for us, as you see in these various kinds of programs, as well as our early college efforts and summer programming. The second commitment of the UMS strategic plan is about financial sustainability, and I wanted to speak to that briefly as well. We are conducting, as I mentioned, as part of SRE, a very comprehensive, possibly first time ever academic portfolio review of its type, in that the number of variables being included goes well beyond the standard quantitative metrics that would be done here, but instead have included a number of qualitative considerations, has been iterative with deans and faculty and staff to get to a very clear picture of the current state of our academic portfolio and where it could go, particularly as we pay attention to new technologies, a stronger and more intentional expansive connection to the workforce needs of the future in the state of Maine, always being mindful of accreditation considerations and regular program reviews. We also are focused, of course, on energy and space efficiencies. In future discussions, you will hear more about our UMEC energy project, have worked for improvements consistently in dining and housing, looking at our off-site facilities, of which there are many, and considering whether there are alternative ways to manage those facilities. And Jenny chairs a space committee that is engaged in trying to look at the long-term capital picture. So in conclusion, leaving some time for questions or for us to go back to things in more detail. First of all, someone pointed out that this slide, if you kind of blur your eyes a little bit, looks like wild blueberries. I wanted to point that out. We care a lot about that here at the University of Maine. But I want to bring us back to where we started, which is our mission. Every line item that we have discussed today, from the research expenditures to the residence hall modernization, does reflect our core values here at the University of Maine, which is to be a learner-centered R1 university. Thank you for your time and attention. We have a brief video that we could show you if you would like, but we can also pause and see if you have questions here. I want us to think about this financial proposal not just as a financial plan, but it's a ramification and an instantiation of our identity and our aspirations as a learner-centered R1 university. So thank you very much. And Trustee Cates, I will stop here unless you'd like to see the video for a change of pace.
Why don't you show the video first, and then it'll give us time to think some questions.
Okay. Not getting sound, Jenny?
I think you got to click share sound when you share the screen. There's a button. You might need to unshare and then reshare, selecting that button.
Okay, I could use a little bit of guidance then on making my audio on the video audio work.
Yeah, unshare. And then when you start to reshare the screen again, you'll see a button over in the right-hand side that says share sound.
Okay.
Welcome to a place of ingenuity.
A place of exploration.
Where we see what's next.
Build it together.
Steward what's entrusted to us.
Where we face the wind and push forward. We see blue on the horizon.
And together, we chart the way forward.
For Maine and beyond.
Terrific. Thank you. Questions for the team? President, following up on Barbara Alexander, who would ask this question if she were here, what you've already addressed some of them, but what risks do you see in the budget? Where are you going to keep a close eye because things could not go as well as we're hoping? Mm-hmm. And you mentioned the whole federal landscape is one example, but are there others as well?
Mm-hmm. I would cite our focus on student success, enrollment, retention. That group of areas is really critical for us. And we have plans in place that we are beginning to accelerate, I think, to broaden the population of learners that we attract to the University of Maine. We'll be bringing more programs forward for creating online opportunities in several areas, as I think I mentioned. And in general, the university is going to need to stay very focused on who the learners are, recognize that these great partnerships that Jake described in Inspire and elsewhere put us in connection with private sector organizations, with companies in Maine who are increasingly interested in special credentials, in workforce development operation offerings for them that can be specialized within programs like our MBA and so forth. So we will be putting emphasis there, and one of the worries that I would have is that we just need to really work on that domain. I've already mentioned the research area. I might ask if it's okay for the provost to chime in as well, and he would maybe have more to add here.
Sure.
Thank you, President Freni-Mundy. Just to emphasize what the president has already shared, we had a year or so ago record retention from first to second year, and while we're doing very well in that respect, we haven't quite matched that, so that obviously will have an impact on overall enrollment. although I think we continue to trend in the right direction. One of the other challenges is out-of-state students. In spite of all of our efforts to optimize financial aid and our discount rate in order to make the University of Maine more attractive, other states are responding in kind. We're all facing the same demographic cliff. So we are continuing to develop new strategies and implement those strategies. But certainly that is one of the risks, as the president already cited.
Thank you. So it sounds like we were ahead of the curve on recruiting out-of-state students compared with other states, and they're catching up.
That's right. They're going deeper into their wait lists, especially the flagships in other New England states. So students who would wish to come to a flagship, go to an R1 institution, are staying in state because they have greater opportunities to do so.
The strategic re-envisioning process, and I think I asked you this at our last meeting, and I just can't remember the answer. That process is due to be completed approximately when?
So in many ways, the concept of continuous improvement for us needs to be ongoing. And so what we are doing as we wind down this academic year is taking a look at all of the dimensions of this work, all of the ideas that have come forward, continuing to prioritize, but essentially have those evolve into ongoing structures, ongoing procedures, ongoing groups that we have on campus. So I don't think we back away from the need to constantly assess how we're doing and where we're headed, but committees that are in place within academic affairs, within the research domain, in financial areas, and so forth, those committees increasingly are taking up the issues that started out as ideas in SRE.
Thank you. Other questions? I am not seeing.
Roger, I'm
I'm
here.
sorry?
Just,
Please. I didn't see your hand. It's in the window.
I know you can't see everybody. It's okay. I'm struck in this presentation by the challenging budgetary issues that will go off into the future, and the work around SRE. It just feels so integrated that it's planned, a planned approach to this budget that is very encouraging and I know challenging, and engaging so many people in this work is so important to it. But I know very, very challenging to bring all those people together, and it's encouraging to see a sense of enthusiasm, excitement, and not just being
Well,
about a budget.
you know, I'll speak to that, Chair Riley, and
only if you give me my one. I want one. If we can do this at some point, and I know you're all overwhelmed. The E&G budget and the auxiliary budget do not reflect the budget of the University of Maine when you think about all the external federal funding and the research. And I would love to see a pie chart that just shows not the whole budget, but just a sense of it.
Yeah, an all funds presentation.
Yeah, and for new board members, it would be really important.
It's very interesting. Just back to the SRE. So it's not uniform enthusiasm, Chair Riley. You know, it's hard. It's looking at data. It is having conversations that propose ideas that would make major change here. And some of those go more readily than others. And so we're still in it. You know, it would have been nice if we could have said after a year, oh, yes, it's all done. We figured it all out. But a variety of factors mean that we're wanting to engage people as widely as possible, engage in shared governance as expected, and at the same time, kind of with the same people in many cases, manage the federal situation. So I feel that we have an excellent base. Just a look at the website, if folks have time, will I hope be encouraging, because it includes multiple reports and thematic group discussions and ideas that I think really have some promise for us. But the next steps will be challenging as we take those ideas and look at what they look like in implementation. That's where we'll move things into existing structures that we already have, when we can.
Thank you. Other questions? I am not seeing anything. So President Farini Mundy, you're a great team. Thank you very much for your presentation. We'll see you, I'm sure, at our next FFT meeting in April. Thank you.
Thank you all very much.
Thank you.
Thank you. And we're 5 minutes early, but I bet that President Rice is still here. And do you need a few minutes, President Rice, or should we wait till 3:25? Maybe he's not here.
I think he's about to jump on.
Okay. We'll wait for him. We need to wrap up on time because we need to allow Chair Riley time to celebrate her birthday. So we don't want to go past time.
I have to leave early for that celebration.
Wait, what? Birthday? What?
President Rice, we decided to leave you for last because of your energy and wit. You're the closer here, so you're on.
We will try to ensure that Chair Riley is able to enjoy her birthday a little bit early. How's that? So, thank you very much. Chair Cates, I'm glad to be your closer here this afternoon. I believe you're about to see Megan sharing our slides with you. So here's our introductory slide. We have 27 slides. We will move through them expeditiously. And if we can go right to the second slide. So this slide really, I just wanted to point out this slide because it came from this great book, Dual Transformations, which came out in 2017, which I read. And that gave really the nexus to the YourPace programming, in which we would create a new growth engine, that's Transformation B on the right side of the slide. And then at the same time, work on repositioning the legacy operations of the institution, that's Transformation A on that side. And the really cool thing that I wanted to try to utilize was what's called the capabilities link. It's the resources you have in common for both A and B, and those were full-time faculty. It is what allowed us to be unique in the public sector using competency education. All of the other large players in competency education are all privates at this point in time and remain privates. Most of the small players are also private institutions. So very interesting that this has been so successful. I'll just note that our resort, the result of Transformation B, as it says down in the bottom box there, has exceeded certainly what I originally thought it would be. Although there is I am incorrect in that slide, so I apologize that I posted that YourPace represents approximately 50% of UMPE enrollments. It's 50% of UMPE revenue, of course. Megan can chime in on the actual enrollments if you want to mention that briefly.
Yeah, YourPace actually now represents about 82% of UMPE's total enrollments, and 11% of the YourPace population are actual Maine residents.
So again, two really important things there, the importance of the enrollments in the program that are nationwide. It truly is, I think, the university system's single most nationwide program with the largest amount of nationwide recognition of any individual program in the system at this point in time. And just the statistics show that 11%, of course, is logical in the sense that we are seeing very large growth in the Southwest and the southern states in particular, but also states like California, which now double the enrollments that Mainers do. That number, though, has remained pretty steady throughout. So we continue to serve the number, a slowly growing number of Mainers. But again, it's this program, the YourPace program, is functioning the way we would hope it would function as a national as a national program. With that, we can go to the next slide. And this, I'll turn this over to Megan because she has the understanding of the financial situation much better than I do.
Fiscal year 26 was about proving the model, and now fiscal year 27 is going to be scaling it to respond with responsibility. So let's talk about some of those headliners. Total revenue is projected to grow from 32.9 million to 40.7 million. That's a 23.7% increase year over year from last year to fiscal year 27. The vast majority of that growth, over 96%, comes from YourPace, which grows from the 16.1 million to 23.5 million. This is not a budget based on assumptions. This is actually built on the trajectory that we've been seeing with YourPace. Total expenses are growing from 30.5 million to 39.9 million. a 29.4% increase. The largest driver you'll see is personnel. We're adding critical staffing tied directly to the student to employee ratios and correcting salary inequities that have existed within this institution for years. We will not hire ahead of enrollment. Every new reoccurring position is actually triggered by sustained growth. Our E&G operating surplus remains solidly positive at $2.8 million. Auxiliary operations show a modest deficit, which we are addressing through structural right-sizing of housing and dining. More on that shortly. Our consolidated net change for fiscal year 27, as you see, is the $1.7 million. Still a surplus, reinvesting 1/3 into capital, 1/3 back into operations, and 1/3 into reserves. The fiscal year 27 capital plan on the bottom shows $10.5 million. It's the largest in UMPE's recent history. Most of it being anchored by the Govan Center of $4 million CDS funding, ESCO project for fiscal year 27, the $2.6 million, and then potential beginning of the normal hall removal. Back to you, President Rice.
Megan, I muted myself while you were talking there. So I have the next two slides. This first slide is really our FY26 academic portfolio expansion for this year that we experienced. I just want to highlight a couple of the slides. The Master of Science in Business, which the board approved, launched with 3 out of 10 concentrations. We're filling out the rest of those concentrations now. That program has already enrolled over 150 enrollees into that graduate program. A couple other really important ones are particularly the YourPace collaborations we have with our sister campuses, such as the public policy delivered through UMF, which launched with 12 majors in the fall, has added 36 majors this spring, and is already enrolling people for the summer semesters. So that 300% growth from fall to spring is a nice growth for any program, particularly a program such as that, which we're launching in the portfolio. UMFK also launched its RN to BSN, and we're seeing the first matriculations in that program currently. The next slide looks at our portfolio for FY27, and really just want to point out the continued growth in the business program and all modalities, adding business minors into that, adding graduate certificates into the Masters of Science in Business, and particularly because we have an increasing number of students nationwide that are really interested in graduate certificates rather than full programs, but they can then build them into full programs. That's probably one of the fastest growing areas within graduate work. So we've added those to reflect that growth as well. And then again, launching this summer, a BS in cybersecurity, BS in computer science, and the MS in healthcare administration, which came from the Title III grant from several years ago, is now launching in YourPace, and continuing to look at the 90 credit hour programming, the psychology, which has already been approved, and the applied BS in liberal studies, which we're hoping to see approved this month. The next slide looks at our academic program evaluation process. We continually evaluate these academic programs through an internal program review process, which we're actually building a new process that is germane specifically to the YourPace programming itself. Thanks to the new associate vice president that we brought on board. We go through external accreditation processes as well, for a number of our programs. We go through the annual AAPR review where we identify programs that are expanding, programs that need attention, and programs that we might have to consider whether they should move from one modality to another, such as a live on-campus delivery to a Your Pace delivery, which we've already made that decision, for instance, with the healthcare administration, which we moved directly into the Your Pace program. We've also evaluated programs based upon our strategic plan, our latest one, 2028. The last two strategic plans we've done have been closely aligned with our plans for growth and where we've seen growth, including in the Your Pace programming. So we continue to look at our goal of 10,000 Your Pace subscriptions coming up in 2028, and a stretch goal of 1,000 semester-based enrollments also by 2028. That gets us to our dig down deep financial progress budget slides, which Megan will be presenting to you.
This slide actually tells the story of UMPH's financial momentum. So in fiscal year 2025, our budget revenue was the 25.8 million. We actually came in over 5 million greater at 31 million. So as you can see, our fiscal year 26 budget is actually going to be increasing from the fiscal year 25 by 5.9%, bringing our total revenue to 32.9 million. We intentionally are conservative with our revenue projections, building credibility with a track record of exceeding targets rather than missing them. On the expense side, personnel investment again grows by 2.5 million. 15% of this tied directly to the student growth ratios I've described earlier. This growth reflects both new hires and salary equity corrections. Bottom line, our fiscal year 26 budget shows a surplus of approximately 2.9 million, a balanced plan that will not only remain in the black, but will allow us to reinvest meaningfully back into our institution. Going into our fiscal year 27 proposed budget, let's look deep into education and general budget. In fiscal year 27, we're projecting $37.6 million. The single largest driver, of course, is Your Pace, with the 23.5 million, growth of 7.5 million year after year. Traditional revenue declines modestly from 5.5 million to 5.1, reflecting Northeast demographic trends. This is expected and accounted for. The growth from Your Pace clearly more than offsets this. On the expense side, salaries and benefits, again, are the largest, increasing 6.7 million, over 34.4%. The other notable increase is supplies and services, which will grow by 1.6 million. 1.2 of that supplies and services is actually our marketing partner, Hybrid. And this investment is to grow Your Pace nationally with our brand as well, to continue our enrollment growth. So overall, our E&G operating surplus of 2.8 million, still firm and positive, and the net change after, before our modified cash flow, you'll still see the 2 million. The auxiliary picture is a bit more challenging. Revenue is budgeted at 1.9, am I on? Yeah, sorry about that. 1.7 million against expenses of 3 million, producing an operating deficit of 1.1. This reflects the reality of residential operations at our current occupancy levels. We are addressing this structurally. Merriman Residence Hall is actually being closed for use in fiscal year 27. It will reduce our bed count from 309 to 195, while our residential student count remains approximately 170. This will significantly improve our occupancy rates, though, and we are actively negotiating Sodexo contract, dining contract to move forward towards a more break-even model as well, which we will discuss in more in depth on slide 16.
Sorry, Megan, could you just go back there for 1 minute?
Of course.
Thanks on the auxiliary. So with the closure of a dorm, you're projecting an auxiliary deficit of 1.2, or is that before you close the dorm?
That is after we close the dorm. So our residence halls, we do not require any of our students to live within our residence halls, but if you do live within our residence halls, it's tied to the meal plan as well. So if we
Okay.
reduce our number of students within the resident hall, it actually affects our contract with Sodexo as
So what are the plans for turning that number around? And I know the whole budget more than balances here, but that's a pretty big auxiliary deficit. How are you going to deal with it going forward, do you think?
Of course. So as mentioned before, in multiple other campus presentations, we are looking at our residence halls and the not necessarily structure, but the make of them. Do we have any upgrading to do? And as well as discussions with Sodexo, which actually makes up about $500,000 of this deficit moving forward. We are we are shifting around our rooms from doubles to singles and looking more into singles as well, because that seems to be the need of our students.
We're also
Okay, so
looking
I'm sorry, please.
One of the major drivers in the dorms are athletes. We're looking at increasing the rosters of several of the sports teams, which were diminished in their rosters from their maximum highs just prior to COVID, and looking at adding 2 potential sports as well, which would also significantly increase the potential number of students in the dorms. Also looking at, and this is for a later slide, looking at closely looking and ensuring that the programs that are offered in bricks and mortar format at semester-based format are ones that draw students specifically to this locale based upon the programming themselves. So
Thanks. How many dorms does this leave online? Is it
2.
after you closed one? I'm sorry, 2?
Correct.
And what's occupancy rate is tricky depending on how many people you assign to a room, but what's the projected occupancy rate in this budget? Do you know?
Yep, it is 87%, and we've been typically around 55%.
Okay, so you're thinking these changes you just described are going to increase that percentage?
Correct.
Okay, thank you.
Of course. Next slide. This consolidated view is clearly the most important when we're looking at modified cash flow. After capital, debt service, and depreciation, our proposed fiscal year 27 budget is looking about a $1.7 million surplus. So UMPI will deliver not only a balanced budget at the end, but with the surplus as well for the 3rd consecutive year. Salaries, wages, and benefits. This is sort of our hot topic because it has the largest growth as well. So we started fiscal year 26 with a current budget of the $19.54 million. I definitely want to clear the air about and being direct about what's really driving this. This isn't necessarily runaway costs. It's intentional investments in 2 areas, as mentioned before. We are increasing our new hires to meet the student to staff ratios with our enrollment growth demands. And the second is the salary equity corrections for all existing employees whose compensations has not kept pace with the markets. As noted earlier, we're planning for an increase within our enrollment base for this fiscal year into next, but enrollment will be staged, or employment will be staged. We will only bring people in on a student growth once confirmed, and the budget reflects the ceiling of need, but not the guarantee of spend. This is the cost of scaling responsibility. YourPace alone grew 47% in revenue, and we cannot deliver that experience without the people to support it. So we're building the infrastructure to match our ambition. Fiscal year 27's tuition fees, room and board. We are recommending modest tuition increase in line with system guidance. Our in-state undergraduate tuition per credit hour cost will increase about 4%. Same with our out-of-state, as well as our unified fee and technology fee. Our YourPace rate, subscription rate, we're actually holding flat from fiscal year 26 to 27, both with undergraduate and graduate. This was not a passive decision. It was the most deliberate strategic choice in this budget. At $1,800 per session with 0 additional fees, YourPace is still the lowest cost accredited public competency-based program in the United States. The volume math supports this decision. YourPace revenue growth grew from 16.1 million to the projected 23.5. That's the 46.6% increase. Again, with it being the 96% of UMPE's total revenue growth in fiscal year 27. We did not need to raise the price. The growth is coming from enrollment volume, and when you're growing revenue by $7.5 million on volume alone, 100 to 200 per session price increase is the increase risks deaccelerating that growth in the wrong trajectory. Every year that competitors raise their prices while we hold ours steady, our pricing advantage widens, and that advantage compounds in the word of mouth channels that drive this RCBE enrollment. Room rates for fiscal year 27 have also stayed consistent from 26. However, with the reduction of our resident hall, Merriman Hall, we brought back to life the triple as doubles, which we originally had as almost like conference rooms or hangout spots, but now we're repurposing them back as rooms. IR projections versus campus projections. The headline number, our campus projects 160,511 credit hours in fiscal year 27. Even though that's 30,000 more than the IR projections, the gap is not wishful thinking. It actually reflects our visibility in YourPace enrollment trends. For instance, in springtime, the enrollment trend was about 32,000, but we've actually already hit 35,000 in credit hours for this fiscal year. So we're adjusting these enrollment projections to catch up for what's happening currently right now. YourPace itself accounts for 88% of this projected total at 144,916 credit hours. Traditional on-campus enrollment remains steady and conservative. It's grounded by the fiscal year 26 census data. And again, the conservative enrollment strategy you see reflected here is deliberate. We're not necessarily chasing numbers we can't deliver. Our projections reflects what we're actually seeing in real-time student activity.
The next slide comes back to me, and this is our 10-year enrollment trend in regards to credit hours. You just heard from Megan about how that FY26 bar is actually lagging behind the actual enrollments because of the growth in the second session of the spring semester. One thing I do want to point out is we saw a really nice acceleration of growth from last spring to this spring at over 50%. So that was an acceleration that I'll admit I was really hoping to see, and it's good to see that starting to take hold. You can see from that as well, the light blue bar, those are our semester-based students or first-time full-time trimester-based students. And you can see that that percentage, again, that puts in a stark contrast about how that's kind of stayed static over the past several years, shrunk a bit, especially right after COVID. But you can see that that now is a minority part of our credit hour generation by far. You can also see that red stripe at the top is the growth of the international students that we see, and a continuing incremental growth in international students in the EURPACE program. The Canadian students are mainly in the gold bar there, are mainly in our traditional semester-based programs, but some of them obviously in EURPACE programming. The one thing I'll note too about credit hour generation accelerating the way you're seeing it in particular is due to the situation in the EURPACE programming, in which the majority of the students are actually full-time students, which is very unlike historical or traditional degree completion program in which the majority of those students would be part-time students. So our students take a little over 3 courses a session, an 8-week session. In other words, they're taking about 7 courses in a semester, which equals 21 credit hours. So you can see that explains the acceleration in credit hour generation, as well as the acceleration to graduation and the increased graduation rates as well.
And another thing to point out before we move away from this slide, at the time that we made this slide, our fiscal year 26 actual year to dates was that 98,000 credit hours. As of today, we've actually surpassed our budget. We are actually at 110,547 credit hours. The waterfall slide gives you the component by component view of how we've moved from fiscal year 26 to fiscal year 27 credit hours. I do also want to notate that, again, as of today, we have had 1,613 students apply to graduate this academic year, which has been the largest in UMPE history. Residence hall and dining. Residential operations, again, have been a structural challenge, especially since COVID. But let me clearly be transparent about where we stand and how we're going to move forward. Over the last 5 years, our bed capacity has ranged from 253 to our largest at 309, while actual student occupancy has only peaked about 183. So it was never close to our capacity. Occupancy rates have ranged from 53% to 68%. In fiscal year 26, our occupancy rate is 56%. So meaning out of the 309 beds, we were averaging about 174 students. So for fiscal year 27, as we close Merriman Residence Hall, this reduces the bed count to 195, still leaving room for all of our students on campus and increasing our occupancy rate to 87 for fiscal year 27. For dining, our residential students remain on the unlimited meal plan with takeaway options. We're actively working to restructure the Sodexo contract to move dining operations towards break even as we right size the student residential population. Also, Merriman will not simply sit vacant. We are repurposing the 2nd and 3rd floors for staff offices, and a study is underway to reevaluate the future options for the 1st floor as well. For this current semester, I did want to notate from 174 in fall. We only lost the about 16 students to 156 with closing Merriman Hall. So we truly just saw the typical turnover from fall to spring within our residence hall, even when closing a residence hall down. I want to give you the full capital picture, both where we are in fiscal year 26, but also where we're going in fiscal year 27. In fiscal year 26, we included 18 projects totaling 4.7 million. As of February 2026, 6 projects totaling over $2 million were completed. That included the dental lab renovation, which was funded by HRSA, and the Kelly Commons freight elevator. 12 projects totaling 2.5 million are currently in progress, including the first year of the ESCO project, which you'll gratefully approve. So thank you so much. In fiscal year 27, you'll see another substantial investment year of 10.5 million across 12 projects. The 3 largest ones are the Gavin Center, or we call Woodine Auditorium as well. Renovation, $4 million is actually funded by CDS funding. The remaining of the ESCO project with the Bank of America self-funding. And then again, potentially the phase 1 of normal hall removal. Our funding is appropriately diversified, 39% from CDS, 25% from DEP, and 20% from demolition funds. Only one project currently is sitting in a TBD status because we're waiting on grant approval. As we monitor year-end balances year after year, select projects may end up being deferred because we clearly do not want to overextend what we have, the momentum that we're building up. This slide reflects the Gordian, formerly Sightlines, analysis of UMPI's capital investment compared to the recommended funding targets. Just to notate that beginning in fiscal year 22, we made deliberate shift that included the Woodine Gym renovation. In fiscal year 23, we did the Kelly Dining renovation. And in the end of fiscal year 24 and all of fiscal year 25, we're in negotiations for our ESCO project. And as previously mentioned, we've just finally landed the true aspect of that project, and thankfully, again, was fully approved by you all.
Megan, let me do the next slide here on reserves.
Yes, sir.
Because I was the interim president that saw 0 reserves that I inherited. So very pleased to announce that, as you can see in FY25, our reserves will be 3.6 million. So we've essentially restored the reserves before we had our budget crisis a little over 10 years ago now. As you can see, that assuming we are meeting our enrollment projections as we presented them, half of that will go into capital projects and half will go into E&G operations. Again, really nice to see this dramatic improvement from a negative position in FY22. Literally, if you went back a few years before that, you'd see 0 in reserves. Our auxiliary reserves are still under pressure, primarily due to the book sewer deficit, which now is being addressed, and we are managing down all of the longstanding structural issues. That gets us to our financial aid strategy.
UMPI has operated within our historical institutions scholarship allotment, satisfying many of the student financial requirements within our budget. Word of contacts on the discount rate. Even though our discount rate may appear low, this is primarily because our large YourPace population pays that flat session fee. So it's not the credit hour rate, and therefore traditional tuition discount rate calculation underrepresents the actual facility aid activity. The 20% discount rate for first-time, full-time undergraduates is more representative of the traditional student experience. And again, every student who files a FAFSA receives assistance for federal and state grants. Our strategy is to maximize the federal and state aid and layer in institutional support for the qualified students and maintain the affordability that is core the value.
Megan, let me ask, I'm embarrassed I don't know the answer to this, but how is financial aid handled with respect to YourPace students?
YourPace students are eligible for Pell, so they're eligible for federal aid, but not necessarily institutional aid. We do have institutional scholarships they're able to apply for and receive.
Thank you.
Of course.
The next slides look at our strategies to enroll and retain students. And as you can see this, you just heard about our financial aid and scholarship management. We're also making a select number of scholarships available to YourPace students starting this coming year, and processing how that exactly will work with a nationwide group of students potentially putting in submissions. Our financial aid and scholarship management is conducted through intensive manual processes that require dedicated staff across 5 departments. There is a lot of work there that we're looking to maximize that labor-intensive work and and automate as much of that possible. We have a 3-layer student support system. Student support services provides counseling and tutoring. That includes to all YourPace students. We have a 24-hour online tutoring process that is available to students anywhere across the globe. Then we have an UMPI care team, which is a cross-departmental group that meets on a weekly basis that reviews individual students' needs and defines interventions in regards to those needs. So again, those students can avail themselves of support systems, whether they're on-campus students or whether YourPace students. And then we also are looking to maximize the EAB Navigate platform and to be able to use it with our YourPace population, which for many years it was not being utilized in that regard. So this coming year, we're looking to use that platform with the YourPace students, competency students as well, which runs multiple reporting campaigns each semester. Obviously, because the 8-week sessions are so short in YourPace, you need different types of reporting campaigns. So those are the kind of the issues we're working out to use that platform. And then that gets us into slide 22. Oh, sorry, I should just mention briefly our infrastructure investment, EV chargers, which you approved. Our thanks for that as well. Some of the other things you've seen, the outdoor gathering space, looking at the conversion of Merriman to staff and potentially faculty use, are part of creating a campus environment in which our traditional students choose to live here and to succeed. Our next slide, I wanted to give you a glimpse at how our strategic plan is aligned with the UMS strategic plan and really the alignment that we see to our basic core strategies. Our first strategy really looking that we inspire students of all ages and career stages. Obviously, that is a central part of our daily work. Our second pillar, that we employ exceptional, diversely talented individuals from around the world. The majority of our employees are in the Aroostook County area, but we are getting increasingly large group of them that work remotely and that work around the country. Third, we provide a healthy, caring, and inclusive environment for all of our learners and employees wherever they may be located. That includes the support services that we just mentioned, and that we continue to be inspired by the natural beauty of our historic locale here, but we provide tools and resources for learners everywhere to build an equitable, sustainable, and just world, realizing that that is our inspiration for that work that is provided to students now nationwide and internationally. The next slide, just wanted to show how we deliberately ensured that our Strategic Plan 28 is directly aligned to the UMS strategic plan and its commitments. I won't go through them all, but you can see that we look at accessibility, institutional sustainability, empowerment, and connection for students with their world directly into the UMS strategic plan. And that gets us to, I think this is probably Megan's happiest slide, our fiscal sustainability actions and successes.
Actually, it's the next one, but I'm going to go really fast because I know we've got 5 minutes and then Chair Riley wants to go celebrate her birthday. So this slide truly just highlights everything we've discussed over the last 35 minutes. Attaining the largest credit hours we've ever hit before, fiscal and energy efficiencies with our capital plan, as well as touching base on our reserves, which is incredible. The highest it's ever been as well. This is the one that actually makes me, I think, the happiest is showing how our KPIs in how we've turned from yellow to green, and we're hitting 3 of our 4 core ratios. And we've done so within 1 fiscal year. The remaining core ratio that we are trying to tackle right now is the primaries of reserves, which is why we have our plan to split any of our surplus between capital and E&G reserves to help build that core ratio.
And the last slide is my reality check slide, just kind of links back to the dual transformation that we started with, just to show we recognize the challenge that lies before us in what I would call our legacy operations, or Transformation A. On the left, I won't talk about Transformation B, except to say that you can see that we've experienced that growth. We realize we need to sustain that growth engine. We are being very conscious and deliberate about when to add positions at a 10% growth a status that is replicated 2 semesters in a row before we add full-time positions to that, and then at a 20% before we're looking at full-time positions, particularly tenure line positions, to ensure that we have that growth and that that growth is sustainable. That's something we put into place when we realized that we had hired on positions, particularly this year, as you saw, because we realized the necessity of them, but we wanted to ensure that we were right size. So now we will deal with that growth first and ensure that that growth is sustainable before adding full-time positions to that. Especially protect the 5% structural margin that we can put back into our reserves and put in our capital projects. We need to ensure that 5% is something that we're able to utilize each year, and that costs of staffing don't eat away at that 5% margin. Transformation A is the bigger challenge, clearly, and that's something working very closely with my provost and academic leadership as well as on the student and the auxiliary side, really looking at the full-scale review of our housing and dining, as you already had explained to you by Megan. Also looking at making sure that we're right sizing to match actual occupancy, Merriman Hall being a really clear example of ensuring we're setting ourselves up to have the space we need to deliver the programming in regards to staffing, but that we're being responsible in regards to maintaining 2 dormitories rather than 3. And then especially item number 4, which is continuing to define the essential traditional curriculum that is a semester-based curriculum. We were looking very closely at all of the legacy programs, looking at which ones are successful in an on-the-ground bricks and mortar geographically located environment here in Presque Isle versus ones that probably should exist in an online environment. So those are discussions we will have going throughout this year. Redeploying faculty talent into growth areas. We are plans that we have already started to undertake, and really looking at resolving CBO load equivalencies in regards to teaching schedules, which we work closely with our labor partners in that regard and our faculty partners in that regard. So with that, those are major 4 actions that are a result of the history of this kind of 10-year journey that you've seen us on, and how we kind of move forward into the next decade, so to speak. And happy to answer any questions you might have.
Okay, thank you, Mr. President. It's 4:04. You perfectly timed. Questions? I'm not seeing any. I know you.
Chair Riley has a question.
Chair Riley, your hand is in a light place there. I can't see it. Go ahead.
Just want you to know that, you know, my birthday takes second seat to anything that Ray Rice presents, and that was a great, rich presentation. I got befuddled about the discussion about the faculty. You talked about equity and revising salaries. How, for whom, and how's that working, and how does that connect with labor issues?
We did a review of staff. Staff salaries were underrepresented, I would say. And so we went through a 2-year process of examining every staff faculty and also every faculty salary as well, particularly faculty that either were in the tenure process or had already received tenure. And we reviewed all of those over the past 2 years to make sure that they were at the right levels of compensation. So that's part of the increases that you saw this year as well to our bottom line.
And that is consistent, obviously, with the contract, because it's just got it. Thank you.
Correct. We worked very closely with labor relations, the units themselves, as well as all the agreements to make sure we achieved those correct rates.
Thanks. Trustee McMahon.
Ray, an excellent presentation. A couple of questions. First of all, if I've got it right, I heard you say the average is 3 courses per 8-week semester. We're charging $1,800. So people are getting 9 credits for $1,800. So people are paying on that basis $200 a credit hour, I think is correct. And so my question is it the right philosophy to sell this just on price, or should we be thinking about optimizing margin?
Mr. Chair, could I just offer and suggest that maybe we're going to have a conversation about pricing strategy, since we have an executive session lined up immediately after this, that would probably be the best place to have a specific conversation about how we're going to price compared to competitors and all of that kind of stuff.
It makes sense. If Trustee McMahon, if you could just hold that thought for about 2 minutes, and we'll go into executive session anyway.
Okay. Can I just say, Trustee McMahon always asks at least one truly trenchant question, and that truly is a trenchant question. So thank you.
Well, for those of us those of the group who know what trenchant means, thank you. But I know you are very proud of your relationship with your YourPay students. How many are you expecting at graduation this year from around the country and around the world, you know?
Megan, you just cited that to me.
Yes, currently we have about 1,600 applicants so far, and that number is still growing.
1,600 applicants to be at graduation?
Correct.
No, for
Wow.
1,600 to graduate.
Walking is over 500.
Walking is close to 550.
Oh, that's
So,
terrific. Great. Thank you. Any other questions? If
don't scare
not,
me about 1,600 people coming across the stage.
right. If not, then thank you very much for that presentation. Great as always. And I would ask for a motion for the Finance, Facilities, and Technology Committee of the Board of Trustees to go into executive session under the provisions of 1 MRSA Section 4056A to discuss the evaluation of personnel and the consideration and discussion of appointments, evaluations, employment, and duties, and 1 MRSA Section 4056C to discuss the condition, acquisition, or disposition of real property or economic development if premature disclosure of the information would prejudice the competitive or bargaining position of the system. Is there such a motion?
So moved.
Second.
And moved and seconded. Beth, could you call the roll, please?
Yes, trustee Cates,
Yes.
trustee Flood,
Yes?
trustee Riley,
Yes.
trustee Kane,
Yes.
trustee McMahon,
Yes.
trustee Johnson.
Yes.
The motion carries. I'll move you into executive session.
Thank you.